It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Friday to you both.
Hello.
Hello,
You made it.
hello. How are you, son?
I'm good. Today is a special day. I get to travel out to the suburbs and impart my wisdom on the youth, the next generation, 5th to 8th graders. It's gonna be fun. I don't know why they have career days because they're so far away.
Wait, you get to talk at a career day?
Yes. It's going to be very fun. It's going to be very fun.
Was this the school that you went to?
It was my
right.
It was my grade school. My 5th to 8th grade grade school. Yes. I'm wondering if any of my teachers are going to be there. It's like borderline.
Sure.
You know, like if they were like 40 to 50-ish when I was there, then they'd probably still be there.
Yeah, you're gonna see some teachers that you know. I mean, Chris with Vinny, she had teachers in high school that were still there.
Wow.
Yeah, you're gonna see teachers. It's gonna freak you out a little bit. I hope you're okay. I mean, you're gonna show them where like you tag the desk with your name and stuff like that. Are you gonna show them where that is or anything?
I think they've renovated most of the buildings since I've been there, so all that stuff is probably gone by now.
Are you going to teach the kids how to pack a lip full of Zin?
Oh, yes, of course.
The proper way,
Yes.
way, not to shove them in there. The proper way to stack them.
Uh-huh.
So what do you tell people your job is?
Yeah, I would like to hear this too, because
I think
my dad carries me. My dad carries me for 4 hours. What do you tell him?
Oh, I think it's a little different than when you're talking to 5th, 6th, 7th, and 8th graders. I don't think that's the big. I don't know if they're really into the derivatives or stocks world just yet. So I'm going to try not to scramble their brain there. But Beth told me that last year they were very obsessed with streaming. Just the idea of streaming, being on camera,
Okay.
being an internet person, and so that's probably the route that I will talk most.
Oh, that totally makes sense. You can explain to them how a podcast makes so much money and how streaming makes so much money, and you miss the boat completely because you're basically, poverty.
Yeah, I'm just a slave to the man. Exactly.
Tell them you are the Mr. Beast of finance.
That's actually good.
That's not bad.
I could probably use that. That sounds pretty good.
I will charge you. I'll write some jokes for you. Like,
that would work. Yeah. You got any other ones?
I'll think about it. Yeah.
Mr. Beast of finance. I think you could run with that. You could do a whole hour on that conversation.
That's better than being the Miss Rachel of finance.
Although we love Miss Rachel in this house.
I mean, I know she's worth $50 million and she's wonderful with the kids, and the kids sitting, if you've got a young grandkid or a young kid, they sit and watch her like it's unbelievable, but she is so annoying. So bad. But it's worth it if you're a mom, I guess.
Yeah.
Or dad. She's bad, Miss Rachel. I'm sorry.
I'm excited for you, Nikki. Please take pictures.
I will try.
Yeah.
I will try.
I'll put them on our socials.
Perfect. Yes. I'll visit all my hometown spots as well. I can't wait. Gonna have a great lunch. I'm debating between Little Red Hen or Barnaby's. I might just go straight to Barnaby's and it depends. If Jimmy's at Red Hen,
I think he'll be there.
If Lisa is there too, I'll hang out with them. If not, I'm going to Barnaby's. I'm gonna house a sausage pizza.
Oh, that sounds good.
Oh, it's the best. It has like this crinkly, crispy crust, and they put the cornmeal on the bottom, and it gets super, super crispy, and it's like just cracker thin. The what?
It's unique.
It's unique, and you get a large pizza. You could eat about 3/4 to a person.
We had a Barnaby's in South Bend. I don't know if it's the same family, but the logo, it looks the same. Like, I don't know.
Really?
They had a few, but they're all, I think they're independently owned or possibly franchised. But this one is the only one. It's the one in Northbrook, Illinois, that makes the pizza like that. Because the other one that's in like Morton Grove
that one closed, I thought.
I think there's one. I think there's one more, but you might be right. But they made the pizza different. They had a roped crust and
not the crinkle. That's not.
Yeah, which is
not about that.
Really unique to them. It's really good.
Yes.
You know, the guy who takes your order has been there since I've been going there, which is in the 80s.
Oh my gosh.
See, the only thing that has changed is they don't do the pimento cheese anymore. I don't know if
You're right.
I noticed that. They used to put a bowl of pimento cheese with Ritz crackers out like for everybody to just get and like nosh on before your pizza was ready.
Yeah.
And it was awesome. Like it was homemade pimento cheese. It was great.
COVID probably did that away.
COVID killed that.
Yeah.
See, that's a rare find up here in the north.
What? Pimento cheese?
Yeah.
Ooh,
Yeah.
I love pimento cheese.
I do too.
Yum.
Nikki, can we go back to this school discussion for a quick second?
Yes.
Is this the school that I had to buy a rock climbing wall so that you could pass a class?
Yes, this was the school that would not allow me to wear my Guido chains as I was rock climbing. It was one of the earliest examples of my fight with authority in my life. It was probably the first. Mrs. Matthews.
No, it wasn't the first. I had was that the second school you went to, or the first school you went to?
It was 5th to 8th grade.
Right. So it was the second school you went to, because the first school that you went to, that principal had my cell phone number to my car.
No, this was the one that had your cell phone.
Oh, this was the one that it was 5th through 8th? Oh, okay.
It was 5th through 8th. The rock climbing wall, they wanted me to take off my chain. I don't take off my chain. I like my chain. If it gets caught, it'll break. It's not coming off.
No. You made the most intelligent argument, because I had to go in and talk to them. You made the most intelligent argument. You said that they didn't make the girls take off their chains. Why should you have to take off your chain?
That's a good argument.
Yeah, Smith.
As soon as you said that, and as soon as they did that, I was all in your camp.
Yeah.
I did have to buy the rock climbing wall, me and my friends, but that's another story, because we had to butter them up a little bit.
Nikki, were you just a swarthy 8th grader, just wearing a chain, and you had a 5 o'clock shadow?
Leather jacket, yeah.
Yes. So my 8th grade photo, quite infamously, I'm wearing one of those Urban Outfitters Italian Stallion shirts. I'm not kidding. And I had my gold chain, which has my Italian horn on it now. But at the time, I was wearing my dad's retro Playboy bunny.
Oh.
So I had a Playboy bunny gold chain with my Italian Stallion shirt.
And were you also wearing a Von Dutch trucker hat?
It was that era.
Yeah.
I did not participate in the Von Dutch, but
They didn't let him wear a trucker hat in the pictures. You had to, from mom, they had to see your eyes.
Yes. So it was just the blue Italian Stallion shirt.
You got to get that picture. You got to give it to Jessica.
I have my book somewhere around here.
You got to get that to Jessica. We got to get that on social.
Yeah.
How you can evolve.
Yes.
Or not.
Yes.
That's hilarious. Oh my goodness.
Are there any pictures of you out there, Vanetta, from school that, like I remember?
No, cameras hadn't been invented. No, a young Vanetta. I was always serving looks.
Sure.
No, I was actually just incredibly awkward.
I remember you told me like you had like a wallet chain or something like that.
Oh yeah. No, I had an eyebrow ring, not in high school, but in college I had an eyebrow ring and a wallet chain.
Eyebrow ring.
Yeah.
Oh. That's spicy.
I know. I was punk rock, dude.
Yeah, you're a little alt girl. That's cute.
Yeah.
Wow, look at this.
Yeah.
I didn't know that.
That still water runs real deep over there.
Yeah, wow. how things have changed.
That's funny. Anyway, how was your evening? I saw online you gave Vinny his car.
Don't worry, I do that.
You could just say favorite.
Vinny,
You could just say favorite. You don't have to name him. Just say favorite.
Number one son.
Number one son.
He said this is the best birthday ever. I'm like, yeah, it's all downhill from here, son. I mean,
Yeah.
you get a car. There's not like, next year you don't get a boat. You know what I mean? Like following year you get a house. You know?
I mean, to be fair though, 21 is fun. It's a good birthday. Like you got 18,
I'm sure it
you
is,
got 21. Like it's
Yeah.
not all downhill. But you mean in terms of gifts?
In terms of gifts, yeah. Just from dad, at least. I mean, you're lucky enough to get a car.
I'm sure when he's 21, he's gonna want you to rent a jet and for you to fly him and his dumb little friend somewhere.
Oh, for Vegas, 100%.
The limit does not exist.
Penthouse, it's gonna be amazing. Yeah.
I started saving for that when he was a baby. I got the 529 plan.
Oh, nice.
Put money away for the Vegas trip when he's 21.
Ferda boys.
Ferda, yes.
Yeah, Ferda for the boys. Yeah, it's for the boys. Yeah, he's very happy. Everybody is good here in 2026 so far in the Batista household. So we're happy. We're happy. We're all good. How did you celebrate? Well, his birthday's really not till January 27th. So he's following in my footsteps where he's celebrating his birthday for a month now, which is good. Something
just being obnoxious about it. Yeah, he takes after you.
Yeah, are you surprised by that?
I think for the first 15 minutes here, I'm really getting a lot of crap here when we really should be putting crap on Nick. I mean, isn't this how it rolls downhill? No.
No. Oh, I've taken enough.
You have taken.
I had all of it has rolled downhill.
Has it?
Yeah,
He's enlightening young minds. Like that's you can't make like that's nice. He's giving back.
Yeah.
Yes. Yeah. I'm being told there are only two Barnabys. The one in Northbrook and Niles are the only two that are left.
Oh, that are left. Yeah, of course. But I was saying that there had. Okay, it's fine.
Yeah.
That's why I don't argue with people on the internet.
No. And there's no peanuts on the floor. They don't do that anymore.
I don't remember them doing that.
Yeah, I don't remember them doing that either.
I don't. No, that was at
Ground Round.
Yeah.
I was going to say like Longhorn Steakhouse,
which my Indiana son-in-law wanted to go to for his birthday, if you could believe that.
Wow.
I know.
It is considered a very fancy place in Indiana.
Oof, I didn't go, but my daughter said it was rubber chicken. So,
no.
Yeah, I know. He loved it.
Did you guys hear in a crazy development, our crazy weather pattern here in Chicago caused humidity levels to be so high that they postponed the Bulls game because of a massive amount of condensation. They couldn't keep the court dry, and they ended up canceling the game. So the Bulls Heat game gonna have to get rescheduled to a later time. People on Twitter were having a field day. They're like, the Bulls game is being postponed because of weather. The Bulls play indoors.
It really is crazy. I mean, last night it was like torrential. It looked like it was a tropical storm that hit Chicago, and then tomorrow we're gonna have blizzard snow.
I was waiting for Noah's Ark to pull up. Like it was so much rain. I mean,
it was 50 degrees and tropical storming, and then tomorrow is going to be freezing and snowing.
Yeah,
it's unbelievable.
Lucky it wasn't cold yesterday. We would have had a couple of feet of snow. I mean, that's how much it's coming down.
Well, even more crazy if you've been seeing any of the footage or images coming out of Juneau, Alaska, where they've gotten just hundreds of inches of snow and it's mixed with water in such a way that it's almost like a concrete and it's collapsing roofs.
Oh God!
Roofs.
Yeah.
Roofs.
7 feet of snow. I read. I mean,
and they're gonna get more. Just.
I mean, 7 feet. That's
to be fair, it's Alaska, but that's still.
That's crazy. It's crazy.
Yeah. What a time! What a time!
Well, let's end on a high note, son. Who did we have last night in the Miami Ole Miss game?
I had Miami -3. We cashed that ticket. A tough.
Wait, who won?
Miami.
Huh? Jamal will be insufferable today when he comes on.
Yeah, I hope he has all his gear on. Yeah, Miami going to the Natty Championship in Miami. It's gonna be.
How much did we win?
This was a small nibble.
Oh, okay, okay.
And
All right.
I don't know if you get a kickback on this, a shakedown on this one. I feel like I'm
Well, we're not partners anymore.
yeah, I'm like Rain Man over here, like getting like I got a handler over here that just like skims the top of my winnings. But I will say, and I mentioned this to you and John on the break before this, my bet for the weekend and for the NFL playoffs, the Bills plus 1,000 to win the Super Bowl. You can hedge it if they get back to conference finals or something like that. But the AFC is wide open. Denver, I think, is a fraud. New England, I think is okay. I think New England's good but beatable. Jacksonville, good but beatable. I think the AFC is wide open. I think you bet the Bills plus 1,000 to win the Super Bowl. That's the spot.
And when he says plus 1,000, you bet 100, you win 1,000. That's
100 to win 1,000.
Oh, that's not bad.
Yeah,
10 to win 100, Vanetta. I mean,
I don't. I flew into Las Vegas to do my whole, camping adventure. Do you know how much money I gave the city of Las Vegas that was not like food related or Uber related? $0. I didn't spend $1, a quarter, a dime, a nickel, or a penny in any sort of gambling convention, institution, apparatus. And they rig the ones at the airport, like they don't have to pay out like as well, like they pay out like the minimum. So if you are gonna play, don't play at the airport because you'll get worse odds.
That's when you're in a dark place. The people that are like half awake, just kind of pulling the lever at the airport. That's when it gets bad.
Can I tell you? So I took the red-eye flight out of Vegas, and a midnight flight out of Vegas, quietest plane I've ever been on. Those people had seen some things. Like there was this lady, she had to have been like in her 50s. She got on the plane in silver hot pants and boots and like a crop top that was not cropping enough, and it just said bride, and I was like, you know what, you go, girl.
It is so funny. I mean, we used to call them junkets, and they would like basically rent out planes to take all the gamblers to Vegas, or people just going there to party, and then you basically almost came back with the same people on the same plane. They called them junkets. I don't know, maybe there's a name for them now. They don't do them anymore. But it was basically people from the same area. Like, we were all from here. There were no travelers coming from like New York to Vegas taking a connecting flight. So you were on the plane with the same people, and on the way there, it's electric.
Woo! Yeah,
partying and blow, and like it was sharing, and you could smoke on a plane back then, and it was just everybody was having it was pandemonium. On the way back, you would have one or two people that had like a good time in Vegas, made some money, and everybody else would stare at them and think about how they were going to rob them when they got off the plane. It was such a somber, miserable place to be. It was unbelievable. It was so good.
It's so funny. Hey, but we got a great show for you today. You're going to hit the jackpot with our show at the top of the 8 o'clock hour. We got Jamal, who will be insufferable, recapping the week in stocks. We got a couple of big stuff that's going to come out this morning as well, but Jamal is going to recap everything. The Venezuela stuff kicked off the week, and then we had some other stuff, and so that's going to happen. And then it's hashtag Fan Friday, so that means it's fast market at 8:40. The bats are going to do some more viewer submitted trades at around 8:40, so stay tuned for that. And then 9 o'clock market measures, back testing, bracketing 0 DTEs.
Yeah. That's going to be a good one.
And then Quentin, live from the trade desk. Quentin coming in to count down all the top trending tickers. And Liz will be joined by TP. Jenny is under the weather. Please feel better soon, Jenny. Hope you get on the mend.
I'm telling you, Vinny had that mystery illness that everybody has these days, that nagging cough and just flu-like symptoms that both ends. I mean, it's miserable, whatever it is.
Yeah, there's something going around. No
Yep.
bueno. Hey, do you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
Coming
across the wire. Leading story, top story, just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's January the 9th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
We're getting the December jobs report in 10 minutes.
Woo!
Woo!
Non-farm payroll too. Mhm.
Yeah, non-farm payrolls likely rose 73,000 last month, while the unemployment rate probably edged lower to around maybe 4.5%. What is the market anticipating for a move for today?
Well, let's take let me just quote the market here for those who might be driving when the number comes out at 7:30 or not in front of their computer. Even the S&Ps are up around 14 handle. 14 handle. Everything's up around 1/4 of a percentage point. The Russell's the strongest, up 10, almost half a percentage point. Volatility is basically unchanged at down 6. Bonds, which you would think might be affected by some of this news, have been going sideways between 115 and 116. They're 115.14, basically right in the middle. Bitcoin's around 90,000, 91,000. Oil is up 36 cents. Gold is up 17, and silver is up 250. Now, silver's up a little over 3.25%, and gold is up around 1/3 of a percent. That gold-silver ratio, which we bought around 56.25, watched it go down to 55.25. That's $1,000 on every 2x1, 2 gold versus 1 silver. We were short silver, long gold, and got up to around 59. It's back down to around 57.5, 57.25. So it's right in the middle of that range, most recent range too. Maybe there's something to nibble on there, either after the number or before. But that's all I have for right now. Bonds basically unchanged, up 2, and even the S&P's up 12 to 14. Go ahead. I'm sorry, Vanetta.
Yeah.
No, I was just curious what the expected.
Oh, the expected move for the
38 points. There was a little bit of a bid in volatility going into the end of the day yesterday. If you looked at VIX 1D, it had a nice little spike up. It was, the VIX 1-day product is a combination of 0 and 1-day expiration. So it does tend to have, like, at the end of the day, an upward skew because volatility in the 0-day increases because you have all the options that are basically going to 0. That's why the chart looks like this. But it did show a little bit of kind of hedging into today.
And it was very late in the day when volatility expanded.
Yes.
Too. And then we got quite a little bit of a rally too in the market, right?
Yes.
Small. It was inside day yesterday. Sorry.
I'm so sorry, but yeah, we have all this headline, and we're talking about all the non-farm payrolls and the jobs report, employment situation, stuff like that. But we're also bracing for a Supreme Court decision today, which is why I'm surprised that the move for today is only 38.
Well, it was 20. No, think about it, Vanetta. It was 2022 the last couple of days, and now you've got 38. I mean, it's almost.
It still seems like not enough, but what do I know?
Yeah. I agree.
Company executives, customs brokers, and trade lawyers are bracing for a Supreme Court ruling on the legality of President Trump's sweeping global tariffs and a potential fight of over obtaining perhaps $150 billion in refunds. We are not Nordstrom from the U.S. government. But again, that decision is coming down today. So just be ready for it. Prediction markets, though, are pricing in around a 70% probability that the tariffs do get reversed. So do with that what you will.
Yeah,
right. And if they do, I've been reading that there's other recourse that they would go to, and it would probably be in limbo for some time. And I think that's why. Again, I only did 3 months at John Jay College of Criminal Justice. I don't know the whole system here.
Best air hockey player in the building.
Best air hockey player John Jay College of Criminal Justice ever saw. For a quarter, I could play for an hour or two sometimes if I got hot. But it looks like the market is saying that they're going to kick the can. The decision's going to come out and they're going to kick this down the road. Otherwise, volatility would be higher, I would think.
Yeah.
Again, that's how
I've seen that it's supposed to be around 9 Central, 10 Eastern, but
okay.
It's very unclear. Like, that's just an estimate.
Yeah. And then the Fed president speaks too. I don't know if that has anything to do with anything too.
Fresh off of a bumper 2025, retail investors are rushing back into the market with a focus on energy stocks. Everyday traders bought at the second highest level in almost 8 months at the start of the 2026 trading year. That's according to a report released from JP Morgan this week. Retail investors are just, I don't know, they're buying everything up. They had one of their best years in 2025, and they're locked and loaded to head into 2026. What are your takeaways from this headline?
Do you have any takeaway from this headline? I don't.
I feel like we get this headline basically every couple months, so I don't get anything from it.
I don't know. I mean, oil.
Retail's been right. Retail's been right for the last 5 years.
Yeah, you're right.
I mean, and they've been like shunned and ostracized, and all they do is buy the dip, and then everything goes up, and it's like they did something wrong. Like everybody's like, it's amazing. So I don't know.
Net daily retail inflows into Halliburton spiked to the highest level since 2022. What are we doing?
I never knew retail was into Halliburton. I guess it pays a 2% dividend. I mean, I don't know if that's what people are looking at. I mean, it's a stock that's gone from 20 to 30, or in the 30s, from the 20s to in the 30s. So I mean, it's had a nice run for the year relative on a percentage basis. I mean, I guess not the worst place you could be.
No. Hey, here's something, maybe some other places you can be. U.S. stocks are up this year, even as tech slides. And we already have a coterie of stocks that are already up 10% for the year. That includes STX. Seagate is up over 20%. Teradyne, TER, obviously SanDisk showing growth. Micron, Western Digital, AMAT is up over 15%. What are some, are you looking at stuff that's surging right now, or should we be looking for dogs?
Ooh, I mean, if you're a contrarian like we are, and I would consider ourselves pseudo contrarians, when I'm looking at some, at least on my option trades today, every Tuesday and Thursday, which we had a nice one on Tuesday, we hope we'll have a nice one yesterday. I mean, you'd be looking for the dogs to do something. If you're looking to be bullish, you're going to be more neutral. Then you'd be maybe looking for a bearish. Then you'd be looking for something that's had a little bit of a run here. But I don't look like this, right? Like, I mean, do you scan for stocks that are up 10 or 15% in a short period of time and look?
Not that specific, but we've certainly traded Micron.
Yeah. We look at call skew and try to take
Yeah, we play that. So we did a call ratio spread there, and then the stock dropped, $20 or $30 from where it was, bought in the risk and gave ourselves that big wide butterfly on the upside. So they definitely present opportunity. It's but to your point, it's not something that I'm specifically looking for this.
And you're not looking specifically to just fade the stock because it's high. You're looking at what event or what has it presented to us for a strategy.
Yeah. If you just sell something because it's high, you've gotten murdered for about 10 years. So, it usually isn't the play.
It's a horrible life. It's a horrible.
Yes. You can play it with some strategy. Sell some call spreads, ratios. Naked calls, strangles, something like that. But just leaning short is a tough game to do it all the time.
Yeah.
Just real fast before the number comes out, Intel stock continues to rise at the end of the week after President Trump touts its very successful CEO and applauds the U.S. government's investment. Intel up around another $1 pre-market.
It is, yes. It's had some two-sided action. It's been a good trade.
Has been a good trade. You've traded it nicely and on a quick basis, like a 24 to 36 hour basis. You've done well on it.
Yeah. We'll be taking off the ratio that we have right now. We did 1/3.
Nice.
Yeah.
Very nice.
All right.
You got I don't know how many seconds left. But
10 seconds.
Yeah. Oh boy, let's lock in
a countdown. We need a countdown here.
Even the S&P,
there it is.
Even the S&Ps were up 12. They're up 20. Bonds were up a couple of ticks. They're down 5 at the moment. Fade the first move is what I usually look to play on this, but it's been a very muted small move right here. I mean, when you're looking at 5 or 6 handles, I don't think you can do any on even the S&Ps. I don't think you can do anything one way or the other. Nasdaq up 76 or so. Oil, Bitcoin, basically the same. Gold and silver, basically the same from prior number. All right, see you guys at 9 Central.
Okay, bye.
Bye. Okay, bye. Back to the regularly scheduled.
Yeah.
That was the moment you've been waiting for. There's your.
That's it.
That's so far. I mean,
All right. Well.
Yeah.
And that's all I got. I mean, Jamal can come in and tell us what the numbers are. Nobody knows what the hell it's going to mean.
I'm sure Ilya is pinned and glued to his computer right now. He'll probably have some more insights for us.
I know, what a horrible existence. I would with my children. I mean, it's so.
Hey, he's got a passion. I mean, you can't knock the passion.
I'm not knocking the passion. I just think that he's such a nice, smart kid. He can use his powers for good.
Hey, you can check out our Twitter. I did tweet out last night the latest piece he wrote for the Tasty Live blog. If you want to get his insights to what the number means and how the market may move, he categorized it beautifully. That is on the Tasty Live. Follow us on all socials. CrowdStrike has bought an identity security startup, SGNL, for $740 million. The cybersecurity provider said the deal will bolster identity management security capabilities on its flagship Falcon platform. Why does this all seem made up?
Because they use it like a Falcon. Like, that's something out of Star Wars. You know what I mean? That's why.
Something, yeah. CRWD. It's time to get rowdy.
$5 or $7, but it was on its butt, which is pretty one of those stocks that you said, do you look for stocks that are lower or higher? This would have been one we would have probably wanted to play to the upside in some way here.
Yeah. Well, while you were on your off day, the second half of your day, I did get long with Mikey Butler. I got long both CrowdStrike and Net. I did. In CrowdStrike, I did a call diagonal spread. It's March, Feb, and so that should be a decent one this morning. Net, I sold puts. Net is another one of the major cybersecurity stocks. You have like PanW in there as well that you can look at. But this sector seems like an interesting spot. They've all had pretty nice downside move. I mean, if you're looking for like what's the next frontier for the AI, memification, it's probably the security of all that stuff. So I think that's interesting. And if you remember, CrowdStrike literally shut down the entire world for like 24 hours. You couldn't do anything. The planes were grounded. So if you got a company like that is that big of a deal, it's probably worth an upside play.
And Net was a good find, even though Crowd is up a lot more on this news. Net looks like a decent find. Ivy rank at 24 compared to Crowd's 10, so a little bit juicier there. And the stock was over $200. It closed under 190 yesterday, so it had a downward move of around $10, and it had previously been weak too. So that Net was a good find. Good job out of you guys. Crowd, you got lucky on. They made.
I'm selling some E-minis.
You're selling some E-minis up around.
We're fading the first move. I missed it. I missed the initial move. I don't consider this much of a move, to be honest with you. But I know. I get it.
U.S. payrolls rose 50,000 in December, less than expected. Unemployment rate falls to 4.4%. So do with that what you will. Hey, Snowflake announced their intent to buy an observability platform called Observe. See what they did there? They plan to acquire Observe, an observability platform that has been built on Snowflake's databases from day one. The cloud data company announced it signed a definitive agreement to acquire Observe. What are you doing in Snow?
Snow, do you have a position in Snow, Nick? I don't think we do.
We do not. It's kind of, I would say mid-range. It's a mover. Haven't had any positions on it recently.
Okay. I don't talk about it a ton, so I saw this story and I was like, well, let's at least talk about it because
Yeah, I look at the markets in snow. I mean, Ivy rank in 19 is the first thing I look at. And February markets are okay, not great, 20, 30 cents wide. So it would be a candidate that you could definitely trade. It does have earnings after February expiration, which makes it a good candidate for one of my option trades today on Tuesday and Thursday, because I like to avoid the earnings if possible. So you maybe have did something. We'll take a look at it. Good job out of you.
Hey, Palantir is pulling back after a post-Venezuela run higher. How should you play Palantir stock here? Thoughts?
Palantir is, I think that it's the stock that the street loves to hate. Like, like they like to poo-poo it more times than not. It's got decent volatility for only having an Ivy rank of 22. It's got a monthly implied volatility that flirts with 60. Palantir, we've got a couple of positions in Palantir. Markets are about 15 cents wide, 10 to 20-ish cents wide. Some of the options under $3 are a lot tighter than that. I like trading Palantir. Palantir, I think it's a good trading vehicle. February 2nd earnings.
Yes, I did a upside crab trade with Mikey. I followed him via Dronin in his YouTube chat, which was formerly shared with me because Mike and I were together. So I haven't had a Dronin special in quite some time. This was one of those, so I'm excited.
Yeah, and it's up $1 this morning. Even S&P's up 22.
Hey, Google is unveiling a new AI inbox for Gmail users. The AI features will be free for everyone, but there will be also some special features that are just for Google One subscribers. But also the other side of that is Google has just automatically opted everyone in to this. So if you do not want Google to literally read all of your emails, I mean, they were doing that anyway, then you're going to have to figure out how to opt yourself out of this. But theoretically, you could ask your inbox anything in natural language. So you have, tens of thousands of messages in your Gmail inbox, and you could type, hey, who was the plumber that gave me the quote for the bathroom renovation last year? And then it would pull up, all of the emails of the things that are in your inbox. What's your take on this?
So is that much different than just searching the inbox?
Well, this is using natural language because when I this is more specifically right.
It's boomer friendly because that's the way
because you could have booked a flight and you're like, hey, what time is the flight that I booked on United? What time does it leave?
That's right.
Outlook will just crash. Outlook could never.
I don't hate it. I hope it works well. I don't hate it.
Google did take over the number 2 spot in terms of market cap this week. What are they doing to finish the week?
Google
up $3 here pre-market.
Yeah, from 325
new highs,
328 new highs if it ends up here. Yeah, you're right. You're right. Yeah, Goog's good. Goog's doing the Googs. I mean, no problem there.
Are you having a stroke?
Yeah,
pretty much. Yes.
It does seem like that. Yes, it does. Yeah.
Hey, this is crazy amount of history, but on this day in 2007, Steve Jobs introduced the very first iPhone. What?
Wow.
Well, Apple today is struggling to get people to download their latest iOS 26. I haven't downloaded it because I heard it was just straight ass.
Oh, it's
only
awful.
15% of Apple users are using iOS 26. I am with the majority of users. I'm still just on iOS 18. That's according to data from StatCounter. iOS 17 is on 54% of iPhones. So 63% had some version of iOS 18 installed in January of 2025. So looking at a 63% adoption rate versus a 15% now. So
how do I know if I'm on it?
If you go to general,
you would know because it's different than what you're used to.
But his phone is new, so I think it probably had 26 out of the box.
Yeah, so I go to software update or something like that?
No, don't go to update. Go to general. Hold on, Boomer. Good
Lord. I'm on general.
Hold on.
Go to about. Oh, no, I'm on 26, and you're right.
Yeah, go to about. Yeah, you're on 26.
Yeah. You're right, it does stink. I don't know, there's something about it that I always just think it's me, that I'm doing something wrong. Like, I just blame it on me. See,
it probably is you. It probably is you a little bit.
Some of it might be me, but you're right. It does stink. It's very clunky. It's not as good as it was before. You're right. It's not good.
What is Apple stock doing?
And I thought it was me this whole time. See, like this is what you do. This is like, you try to make the boomer feel like a crazy kind of thing. You change things without letting us know that you change things.
Are you okay? Just give me Apple stock price.
Apple has been a dog this year.
It has been a dog. It's been on a 5 or 6 day slide, right? From what, about 275 down to under 260 right now?
Yeah. Kind of interesting.
Yep.
Hey, here's something interesting. Disney Plus is launching short form videos this year to try and capture some of the success of TikTok and Instagram Reels and YouTube Shorts. They're trying to do it in a bid to boost daily engagement. The company said in a blog post, the experience will evolve. If you remember, Disney also signed a deal with an AI company to have their characters be able to use in like AI content generation. What are you doing in Disney?
Don't have anything on here, but maybe
trying never to go there again. As a grandfather of 2 now, I know my days are probably numbered, but I'm trying not to go there. 114, basically unchanged. It's had a nice run, right? I mean, in November, like if you look at like if you go back to everybody with the market, April lows in Disney was in the 80 handle. Let's call it around 85 or so. Disney back in November was around 100, and it's 114. Doesn't sound like a lot when we talk about some of these other stocks, a $15 move, but you got to remember something. It has a monthly expected move of around $5 to $8. So decent sized move to the upside on Disney recently. Maybe it's time to sell the mouse.
Microsoft is launching Copilot checkout and brand agents. Microsoft is giving us features nobody asked for, but it allows you to stay in the Copilot AI ecosystem while also still shopping for your favorite goods and services online. Other agentic AI has been rolled out, so OpenAI integrates with Shopify, so now Microsoft will integrate with Shopify. What are you doing in Microsoft?
Got a little bit of long delta in there, don't we?
We put that Jade Lizard back on that you did for option trades today. You took that off for like $150 profit, and then we put it back on when it got basically back to where you originally sold it 2 or 3 days later.
Almost right. Yeah. Mm-hmm. Yep. And now Shop looks like it's unchanged. Hard to tell. Not too much stock trading there pre-market, but Microsoft looks like it's down small, 50 cents, like that.
I'm skipping a story here, John. Fitness tracking app Strava has confidentially filed for IPO. The San Francisco-based company's offering could come as soon as this spring. IPOs are expected to pick back up in 2026.
What do you think about that? I got no opinion on it.
Not as interesting when you have SpaceX and all the other ones coming, OpenAI, and I'm not going to be Anthropic. I'm not going to be dabbling in Strava, the fitness app.
Yeah.
Although people are saying like it is the hot new way to meet people to date. And I was like, look, if I need to run 5 miles to meet a man, I will die alone.
No, you just
maybe that's what it takes, man.
I hate running. I go to the gym because I like to lift heavy things and it's so I don't stab anybody. But I hate running.
No, you tap that guy on the shoulder, the one with the Costco size lotion jar. It seems like he's got he's got some pent up energy there.
No, I'm good. I hate this new timeline that I was like, you should just join a run club. Like, no. Hate everything about this. Hey, this is fun for probability freaks. A new website is showing you just how futile it is to play the lottery. A site is called Lottery Every Second, and it simulates playing the lottery every second. It's sometimes hard to visualize just how crappy, 1 in 200 million odds are. And so it goes through every permutation of numbers. So you'd have to sit and watch this website because it does it once every second, but you still have to sit and watch the website for 2.5 years to find a winning number. It just demonstrates how much money these games rake in for their operators. If you play Powerball weekly as a person, you'd have to play for 5.6 million years to have a 50% chance of winning once.
But if you do win, if you do win,
no, Nikki, no.
Come on,
no.
Live a little, risk a little.
Saks Fifth Avenue, Saks Global is struggling to line up financing as a potential bankruptcy looms. Get Chrissy over their stat. The luxury retail chain is trying to line up bankruptcy financing to pay its bills during a potential Chapter 11 financing. Some investors are skeptical Saks can successfully reorganize. So.
Yeah, I sometimes you just gotta say goodbye to old companies, and I think it's time to say goodbye to Saks, unfortunately.
Aww.
Yeah, I think they also Neiman Marcus. I'm not sure, but yeah. So.
Oh, don't touch Neiman Marcus. Needless markup is still got some good stuff in there.
Hey, Taco Bell is launching a new volcano quesarito with a lava sauce alternative. They are revamping the menu, and the quesarito is back. Lava sauce didn't just earn cult status, it's forged its name into Taco Bell history. You eat enough, and lava sauce will come out of your butt. But
I love it. Give me a gimmick. I'm all about it.
Yum Brands owns Taco Bell. Nikki, are you excited for the volcano quesarito?
I actually did have Taco Bell like a month ago for the first time in quite some time, and it was pretty horrific.
Well, were you sober?
Yes, yeah.
Oh, okay, well then that's why. That's on you.
Yeah, that's true. That's true. I didn't think about that angle.
Yeah.
Yum had a big day yesterday, a couple of dollar move in Yum. It looks like it's unchanged. It's hard to tell. There's only 360 shares are traded pre-market, so I don't know if it's up or down. I would assume that it's basically unchanged. It's had a little bit of volatility to it for a product that usually doesn't, and some two-sided action. I would run for Yum. Trade than anything else. But I too had Taco Bell about a month or so ago, and I too can confirm and it was not for breakfast, because you made me a breakfast defector. You told me about Taco Bell's breakfast, which is not bad if you're on the road.
One of my favorites, yes.
Yeah, I will give you that. But the mystery meat kind of thing, it's horrible, man.
A new data analysis is rocking the sports world. A viral thread posted to Twitter is asking some serious questions. The San Francisco 49ers are statistically the most injured team in the NFL over the past decade. Since moving to Levi Stadium in 2014, the top 5 in adjusted games loss for 10 of 11 seasons. They've had 7 and 8 full Achilles/patellar ruptures. The league average is 2 to 3. They've had over 40 hamstring and calf tears, high ankle injuries every single year. No one else comes close. And they're thinking that now, because the practice facility is literally located across the street from an electrical substation, they found that chronic ELF exposure degrades collagen integrity in the player's tendons and muscle tendon junctions, and that's what's causing so many This is mind-blowing.
RFK is having a day right now. He's probably excited about this one. We're gonna have to wrap the stadium in tinfoil.
Sell the team, man. That's wild.
You just gotta put a tinfoil up in between there, like a wall. You'll be fine.
Yeah, it is. It is interesting.
Like how much damage has PG&E done? Haven't we suffered enough from them?
Yeah, really. They tried to burn down California, right?
Yeah, right. And now they burned down the 49ers. Like,
yeah.
Hey, finally today for my viral video, looks like we are exporting American culture overseas. This video is from a UK pub that is serving up some American delicacies. I like to do every Friday a little thing I like to call trader taste test. Would you guys eat this? Watch this. French onion garlic bread brisket bomb.
Yeah, I would eat that. I would eat that. I love a good French onion soup. I had a great one as I was operating in Aspen at the Ajax bar. A fantastic French onion soup.
I love that for you, Nikki.
Yes, it was just my appetizer to get my the juices flowing.
Yeah, the good life is good. Welcome home, son.
Yes.
We're going to take a quick 90-second break here. I'm not going to abuse my son anymore. We'll come back. We've got more Tasty Live with Confirm and Send, where we go review our emails. And then we'll talk about the markets, too. We'll be back in 90 seconds with Tasty Live. Good job, Vanessa. Happy weekend.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. Time for a little more Tasty Live with Confirm and Send. But before we get there, let's take a look at the market after the number came out. Even the S&Ps are up around 10 to 15, maybe 8 to 15 on a wide range. They're up 23 right now. That's about a third of a percentage point. NASDAQ's up 43. It caught up to the Russell, which was up the most pre-market. Still up the most right now, up 13 handles, about a half a percentage point. Dow up 160. They're all up around a third of a percentage point across the board. Volatility down 11 cents to 1640. We both talked about how volatility caught a little bit of a bid yesterday. You quoted
the VIX one day.
Yeah.
VIX VIX 1 day. You don't have to. You have the. No, you have
1D.
it's VIX and then 1D.
There we go.
1D. Yep. Yeah.
I had it up there earlier. Sorry, brain fart by putting it up
It's
there.
okay. You're getting older. You forget these things.
Absolutely.
That's why I'm here.
Absolutely. That's why I need you. Volatility upticked in the short term, but when you look at the volatility on the more monthly type basis, volatility has been up, but up ever so slightly. You can see here how it's come back down. Bonds are up 2 ticks, back to about right exactly where they were before. The unemployment number came out at 115.14. I think the market has everything perfectly priced at this moment, which is scary in itself. Bitcoin trading just around $91,000. Oil up another 50 cents. Had a couple of day run here to the upside, back to the higher end of its most recent 2-week range here. Gold up about $32. Silver up around $3. Silver up around 4%. Gold up around 0.75%. That gold silver ratio is trading around 57.25. It's moved about $200 to $300 this morning so far, one direction or the other. That's all I got, son. Let's get to confirm and send. And I know you have to leave at the top of the hour, not the 8 o'clock hour, but the 9 o'clock hour, because we do have a fast market where we'll look at some trades from our viewers. But then I'll have Jamal coming in at 8. And then Jamal coming in again at 9 and staying with me for the closing hour there. So if you haven't seen Jamal in a while or watched his show, you can get a little bit of Jamal in your life today.
Beautiful. Let's
Go ahead,
do it.
son. I know you're going to career day. This is
Yes.
I wish I was filming it.
If you want to come in and impart wisdom on the youths, you can come as well. I mean, it's in your stomping ground. If you like. Yeah, maybe we could go to lunch. Who knows?
Maybe I'll do lunch is right.
Yeah, maybe I'll get invited. Who knows?
Yeah, who knows?
Friday, January 9th. Let's do this. I did my first put broken wing butterfly in GLD at prices that are now well below where gold is trading. I collected around $3 and the position is now trading for 60 cents. When should I close this?
Yesterday.
Well, today's even better because gold's up.
Yeah, you are right, because
it's probably marked at 20 cents now, 30 cents.
Yeah. I mean, here, when it's such a subjective question, right? You put it on a put broken wing butterfly has risk to the downside, and gold has rallied. That's exactly what you wanted. So you got exactly what you wanted, and you're asking, when should I take it off? I mean, I probably would have taken it off before this, but there is no right or wrong answer. I mean, the lower you pay for this, the better off you'll be. Now, you can do what Nicky has done and demonstrated yesterday pretty well with a lot of his trades, buy back the inverted short put spread by buying the strike where your break even was and selling the long strike that you have out there, and you'd make yourself an equal distance butterfly. Like, let's say this was $5 wide and you did a 5 by 10, you'd be $5 by $5 by $5, and you'd have a free shot to the downside. Whatever you paid for that spread, you're adding to your 60 cents that it's trading at right now. But I just take it off. You got the move you wanted. Great trade. Pat yourself on the back and buy your loved one some flowers or something like that. Good job.
Yeah. No, I agree. I mean, I like the adjustment of buying in the risk and leaving on like the butterfly, but taking the money and running, I love it too.
We're both closing it, is what it comes down to. You might be leaving an existing position. I might be closing it completely and using the money someplace else. We're both. Yeah. The idea here is we're looking to close. We're looking to do something that's going to take off the risk.
Yes.
Next question, please. When you scalp, do you close winners based on a dollar profit target, or do you have a target priced in mind you'll hold on until the underlying gets to that price?
I would say usually my scalping is mostly done within the intraday time frame. I don't really have like a core futures position, but I would say I usually just do it on feel, and I just try to take the money and run. I mean, scalping futures is a tough gig. If you get a couple bucks out of it, you pat yourself on the back and take your ball and go home. That's kind of how I've treated futures trading here. I mean, I've gotten pig-headed with some of the silver, and you get a little too big. But in general, I'm just trying to make a couple bucks and move on. It's not my core. It's not my core trading.
Yeah, I would go the same way, and I would also say, it's very easy to add to positions. It's very easy to when you're futures trading to imagine if you're a little bit bullish, a little bit bearish. It's easier to get longer, longer when you're bullish and shorter when you're bearish at what you think are advantageous prices. You got to be careful. It's been said in the past, and I'll say it again. You don't realize how big small really is. Futures are big products in their own. There's a lot of leverage. So
Yeah.
watch yourself there. But yeah, I think, listen, if you've got expected move of the even the S&Ps, and I'm just going to throw out a number of $20, and you're trading somewhere in a scalping range. So let's just break that $20 and cut it in half, $10. If you're trying to make more than $5 or $10 on that future scalp, you're fooling yourself, because the expected move is so much inside of that, and you're not going to catch the high, you're not going to catch the low. So you're really looking to get something inside that range of the daily expected move. Next question, please.
On the last call, Mike said he did a stupid. What is that?
Well, I wasn't watching, but I could tell you what a stupid is. I mean,
Yes.
Exclude myself here. If you're just talking about options, then we're looking at something that has the same delta on both sides of the spread. So let me explain. So if I was buying a call spread, that would be long delta, and selling a put, that would be long delta. If I did those three legs together, that would be considered a stupid. I mean, it's nothing bad about the trade.
It's just a double. It's double. It's bullish, short,
bearish in the same trade. It's basically, a 50-50 shot, maybe a little bit better. In my example, it would be better than a 50-50 shot, because the naked put has a little higher probability of success. The call spread is a 50-50 shot. But, sometimes they'll say I'm selling a put to finance buying this call spread. I just call it a stupid. I would prefer you do one or the other. Like if you want to put more buying power to use, sell the naked put in my example. Or if you want to put less buying power, you have a smaller account, buy the at-the-money call spread. But combining the two seems redundant or stupid.
Well, we might call it a stupid, but my man Mikey sold a put spread in SPX to buy a call spread in SPX. So that should be nice today.
Beautiful.
Sometimes it works.
Yes. Sometimes it works.
Yeah.
Yep.
Next one here.
I'll get this one.
Okay.
I know we like placing trades at 45 days. What's the window of time you're willing to open trades before you look out to the next month? Right now, it's 42 days until February expiration. When will your new positions be placed in March?
Ooh, I try to stay less than 60 days. I mean, I've done some March, February diagonal spreads, which are a little bit different. Like if we're talking short premium, I want to be, if you're past 60 days, it's a little bit too much unless you're doing like a laddered puts or stuff like that, where it's just, that is the strategy is going further out. But I would say 60 days is usually like the upper limit. In terms of the lower limit, I would say somewhere, like if you're doing a broken wing butterfly or a ratio spread and you want to go into a 10 or 15 day expiration, I'm fine with that. But other than that, like put spreads, strangles, puts, I'm usually not selling those past the 21 day.
Yeah, I agree with you. I mean, that's pretty mechanical. I mean, you've done some March, February diagonal spreads.
Yeah.
Like, and March has 70 days, and you just said, like 60-ish days is my limit. What you're really looking at is if you're intra-month, meaning if you're just putting a position on in 1 month, I'm not looking at March with 70 days. Right?
No.
45 days is paramount or optimal. And from our research, we got 42 days right now in February. That's where I'm pretty much sitting until we get to around 20-ish days till expiration, which you highlighted. So 100% correct. I'm all in on the monthly options that have closest to 45 days right now, and way too much time to go for March. Good job out of you, son. Good job out of the market right now. Even the S&Ps are up 24. We'll take a quick 90-second break. We're gonna the recap this week in stocks with Jamal, who will be on momentarily, and then coming back at 9 o'clock while Nikki goes to career day. You don't really have like a shirt and tie or anything like that. Are you gonna?
No, and you know, career wise, I don't know if I have that much to say. I was just like kind of
Come on, in this day and age, you've been at Tasty now for what, over
10 years. 10 freaking years.
Yeah. That's unheard of.
Crazy.
You should have a gold watch.
I really should. There is something. At least give me like a jacket, you know, like one of those.
Yeah, Jamal got a jacket. Jamal got a trading
something.
jacket. Yeah, Mikey got a trading jacket. How come Nikki don't get a trading
I
jacket?
don't get shit. I mean, I'm just, you know.
90-second break, come back. We got more Tasty Live after this. With This Week in Stocks, Jamal. If he has his jacket.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son. And you know what that means? We've got This Week in Stocks with my man, Jamal. Jamal, I'm very disappointed in you right now. No Miami jersey on, no trading jacket on to make Nikki jealous. I mean,
I wanted you in full Canes gear. I thought you'd have a beak. You know,
I know. I should have. I should have.
Here. Come on.
I should have. You know what? The shirt I had on last night is dirty, but I'm going to Miami. I'm going down to Miami next week for sure for the game.
You're going to go to the game?
Yes. And I get questions a lot about what's up with Miami. Look, I grew up in Miami until I was 10 years old. Okay. Tony can attest to this. When you grow up somewhere like that, it's just in you.
10,
okay.
I mean, you just learned how to wipe your own ass when you were 10.
No, I can't control when I move away. Okay. I can't control that, but I did go back a whole lot. I know you've been back a whole lot. You've been away from New York. Almost cursed. You've been away from New York for a very long time. Yeah. You still say you're from New York. Okay. You're more Chicago than New York, so you can't talk.
Definitely more Chicago than New York, but I was at least born and raised there. I mean, you were conceived in Miami.
You moved at 18. That's only like a few years more.
I mean, did you at least go to college in Miami?
No, I didn't. No.
I mean, you know,
you go to college at all. What difference does that make?
I am not allowing you to go to Miami to watch this.
Yeah.
I grew up in Miami. I lived there until 10, okay? I went back every year until 16. Does that count? Is that close? 10, is that good enough for you?
That are older than 10 years.
I give it to you, Jamal. I give it to you.
Thank you, Nikki. He's
a cantankerous. He took that role over really easily. That was it. That's his bread and butter.
Right into that, huh?
Yeah, you slid.
I know, right? I love it. We need 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 this type of energy for sure. How you guys doing?
I will ask you though, Jamal, because I know my dad was probably not awake for it. But that last play, did we have a little bit of extra hand, action in there? Was there a little bit of it's over, it's done?
I mean, they're letting them play. I mean, what do you want me to say? They're letting them play.
I will say it looked like I'm glad that they didn't call anything, because you can't decide a game on something that's bang bang like that. But the whole freaking game, Miami was getting no calls, nothing. It was, you had the targeting call, you had like these, late hits. Like it was a little bit, the roughing the passer. There was like 2 roughing the passers. It was, I was worried that the SEC was calling it in. That was kind of on the dock.
Spoken like somebody Nikki, who had Miami.
I did have Miami.
First of all, let me introduce you guys to being a University of Miami fan, okay? This is just how it goes. You really don't get calls. This goes back to about like 1983, 84, okay? Just being real. I mean, it doesn't matter. If you're playing a big team, usually the calls are going to be against you. This is how it goes. Jimmy Johnson said it best. You got to win the game and make it sure that you win. I mean, this is how it goes.
Is this Catholics versus convicts 2.0 if Mendoza wins? Because he's that boy, he's like a virgin. Like that guy, he is by God. And then you got the bad boys of Miami, late hits, roughing the passers, that stuff. Is this 2.0?
Well, he's from Miami. Don't let him fool you, okay? I mean, he's from Miami. He went to Christopher Columbus High in Miami, which is the same school that Cristobal went to. It's going to be – I'm actually glad that we did not play Georgia and we played Mississippi instead, Ole Miss or whatever, because I think it was better. I think if we had played Georgia, I think it would have been psychologically harder for Carson Beck, our quarterback. Yeah. And I think it's going to be hard for this dude to play against Miami, because it's in Miami. If they get there, again, we haven't crowned them yet, but if they get there, we'll see how it goes. And I'm pretty sure if they get there, I won't be the only one in Miami. I'm pretty sure Beth is going to end up going too. So it's just going to be that type of game.
Amazing. What's the get-in price? I haven't even looked at the tickets yet.
I don't know, and I don't even care about getting into the game. Honestly, I'm just going to be in Miami. I mean, you don't need to go to the game in that situation. Matter of fact, the stadium is way far away from where the real action will be. So.
Okay, I like it. The heat is on, baby. Let's go.
For sure.
I'll be honest.
How was the week for you guys?
Be honest. What are you going to eat in Miami when you go there? The first thing. Are you a Cuban sandwich guy, or is it just something else that you do? Well, you were 10 years old. You probably just had like chicken fingers.
Here we go again. This guy. You know,
you got a Polo Loco out there.
Never mind.
Yeah.
Let's talk about.
First of all, we have real food. Okay, we have probably maybe some Cuban food for sure. It doesn't need to be a Cuban sandwich. We'll have a little Haitian food for sure. Something along those lines. I mean,
all right.
Good stuff. We're not tourists here, Tony. Okay, are you going to Little Italy when you go back to New York? Is that what you do?
Yeah.
You go to Soho? Do you go to Soho? Is that where you go?
Yeah, 100%. Randazzo's, 100%. Get myself a little a steak at a steak joint.
You're such a tourist. You're such a tourist. I mean, seriously.
Yeah.
Don't you go to somebody's house and get some food? Or do you know anybody there anymore?
Yeah, I do. You're right.
Yeah, Uncle Rico and Aunt Mary.
Aunt Mary, you're right.
Yeah, there you go. I still remember.
By the way,
blind.
They're both gone.
Yeah.
Did you guys notice?
One quick question for you. Let's bring this back to the market here in This Week in Stocks with my friend Jamal.
For sure.
Is This Week in Stocks really all about today and really all about today that maybe it hasn't happened with the tariff talks and the unemployment number, which we had this morning, which really hasn't moved the market? Matter of fact, even the S&Ps are just about where Nick sold them. They've had about a 5 or 8 handle move.
Yeah.
Talk to me.
I wouldn't say so. Honestly, I would say it's more about the lack of movement this week. It's been we've been within the range all week. The average move for the week has been, or I should say the last 9 days, trading range has been about 38 handles in the SPX. And most days we have not eclipsed that. And I would also say it's been a small rotation. I can't really call it a rotation yet because we've only had 6 trading days or so in the new year. So I can't say we've been defined by quite anything, but there's been somewhat of a rotation. When you look at least at a couple of days this week, for sure yesterday, I know for sure, speaking of being on the trading floor, when Mikey and I were on the trading floor, we were noticing sort of this change. You saw the consumer staples were up 2% yesterday, and I noticed that on Tuesday a little bit too. And I think there's, if you look on the week, at least some of the bigger names that have moved, some of it has been the oil names. Again, coming into the week, let's remember that. We thought that there was going to be this big move, probably to the downside in the market and maybe to the upside in oil. And while we didn't get that, we did see some oil names move. We saw Schlumberger, you saw Valero, VLO, you saw Halliburton. You saw a lot of oil names moving this week. You also saw some consumer staples names move on the potential news of tariffs. I don't know exactly when we're getting that. We're supposed to get that at some point today. I haven't seen anything yet, but we were supposed to get some tariff news.
10 Eastern, 9 Central.
Is an estimate of when these sort of things come out.
Right around right about the time when you're coming on for our market measure, we should have the most volatility in the market, or at least some movement, although VIX is basically unchanged. But to your point, and to Nick's point, he brought up the VIX one day did expand yesterday, and you are right. I don't know if it's a rotation or if it's a catch up. I mean, when you had everything that went on in Venezuela, and you talk about all the oil reserves, I know I got a lot of emails about oil itself, which had a move that was kind of muted right after the Venezuela taking of their president. Actually went a little bit lower before it went higher, but it's been in its range. The independent stocks like the Exxon Mobils, the Valeros, those had movement to the upside. So that really, the play really was to be in those before the taking of the president. So
yeah,
I mean, I don't think
that's exactly it. I think that's exactly it. The idea of the being them before, a lot of people are like, well, should we get in those now? Is this rotation coming? Is this going to be the thing for the new year? Getting into oil names? I don't know the answer, but to start the year, I could say, you saw those oil names move to the upside. You saw banks move to the upside. They pulled back yesterday, but banks were on the move. JP Morgan, Goldman, ahead of earnings coming up, what is it, next week, I think? They're starting the 13th, 15th.
Yeah, they start on the 13th. All the banks start with their earnings. And Nick, you got a chance to scratch or green scratch, as your other old partner, Mikey would say, your futures.
Nah.
Maybe you want to close half?
No. Come on.
Does this happen all the time, you guys?
Always.
There's the
Well,
bats
I didn't
trading.
want him. I didn't really
Always.
want him. Like fading the move wasn't them up 14 or 15 handles. We really had no move after the number.
You take 10 points of heat. My God, live a little. I mean,
I hear this a lot from Tony about your trades. I want to know what I want to know is what annoys you about his trades. What trades does he do? Because I hear all the time
how profitable they are.
I know you're probably mad about that. You're probably mad about that.
I want to hear, Nikki. I want to hear from you. I want to hear what trades you're like. Oh my God, again? Do I got to do another? What is it? Is it the ratio downsides that he loves to do? Because he loves to do ratio downsides. I know that.
Yeah, I mean, I had him. We got a lot. Who knows where CrowdStrike's going to be? But it's hard. I'm very active, and I'm in a lot of things, and he has a short attention span. He's very forgetful, so he kind of is starting to miss these things. And I'm like, Dad, we got long this at the end of the day yesterday. Like, don't you remember? Like, I feel like I'm like, it's like the early signs of dementia. Like, Dad, like, it's me, like,
it's me.
We're trading, like, it's tasty, remember? So that's kind of the hardest part of this transition is keeping them along, keeping them fresh. I'm looking at like certain vitamins that I could get him on to sort of help with that. If you got any ideas, send me an email, please.
Yeah, send email. There are certain vitamins to help with memory. I forget what they are.
I give you memory and stuff like that.
Yeah. We're trying.
We're trying.
I could easily say it's been a boring week, which it has, but there's been a lot of different things that have happened if you're noticing, and it might be setting up for something else. I'm not sure, but I could say that the tech names themselves have been kind of quiet still. This has been a solid 2 months. For those who complain about the concentration of the tech names at the top here, they've been quiet, man. I mean, NVIDIA had CES. A lot of those names were at CES this week, right? They had presentations. They talked. NVIDIA did have a little pop after their CES presentation, but not really anything sustainable, right? And so NVIDIA, Microsoft, Meta, they've been quiet for like 3 months now, dude. Like it's crazy. The
Nasdaq,
but it's not
didn't make all-time highs like the E-mini S&Ps did, and even the Russell, which was the weaker or the lagger for most of 2025 in the market. Nasdaq was the strongest. The Russell made a new high. The Dow made a new high. The only one that didn't was the Nasdaq, and that's the one that's really taken us to the promised land. So that's what's giving a little bit of hope to the bears. But it's really just been, as you said, I don't want to say a stock pickers market in 2026, but a little bit nimble. And I think the Tasty Live crowd is pretty nimble. We go where the action is. I don't think we marry into too many positions. You haven't mentioned gold and silver. Those have been some big movers. As a matter of fact, the gold silver ratio spread is down to around 57. It got down to around 55. It got up to around 59. So it's definitely mid-range at 57 right now. That would be either long or short 2 gold contracts and long or short 1 silver contract, depending on which way you want it to go.
Yeah.
True that. We've I don't think we've gotten a new high in silver, but I think we came close to a new high in gold if we not eclipsed it. Maybe
the other day we did, I think.
Yeah.
It got up to like 45 and change, I want to say. Was like the high, or almost 46. Yeah, 45.80 was like the high.
Yeah,
they've been resilient. I mean,
like 82 or 81 or 82 a couple of days ago too.
Copper too. I mean, all the metals have been going nuts.
Copper that's actually a good call out, because copper actually, I think, got to a new high again. We saw the big dislocation in copper a few months back, and it's back, man. And that's something. So yeah, I mean, they've still been very resilient. You would have expected them to fade hard by now, but they've been very resilient.
You can mention copper, but you can't trade copper, I don't think, if you're a retail investor. I don't.
It's still the put spread.
Okay, sure. You want to trade it with an option put spread? Sure.
Don't you remember, Dad? Don't you remember? It was yesterday, Dad.
Jamal, I'm going to give you the parting words, and then I'm going to give my son the back of my hand when we go to this here. Give me your parting words, Jamal.
I would say it's only been a few days. It's only been 6 days. There's nothing to get too bothered about one way or the other. We'll see where this year ends up. And
I think the oddest thing about this week was, at least for me, I took off on Monday. Kids didn't go back to school, at least here, until Wednesday. I can't believe today is Friday already. I'm all messed up. So next week I'll be on the straight and narrow, nice 5-day week, getting back into everything. I don't know. For me. The days
and the one last thing I will say, it's clear that the jobs reports don't really mean a whole lot right now.
I don't think they ever do, but sure, I don't want to make my friend Chris mad. So
we've had big moves before. We've had big moves on other ones. I mean, you can see the spike at 7:30, whatever.
We had big moves on Thursdays too. I mean, like, it doesn't mean anything. Like,
Oh God, jeez. I mean, you could see the volume spike on jobs reports. I will say that it's obvious. You could see them. Typically, you didn't see it today. It wasn't even there. It didn't matter.
Hey, if it brings all the boys to the yard. If it brings all the boys to the yard. I don't care what you call it. I'm happy it happened. All right, my friend. Let's take a quick 90-second break. Thank you, Jamal, for coming in. Good luck with Miami in the coming weeks or so. We'll take a quick 90-second break. We'll come back. We'll catch the opening bell right after this. We'll be back in 90 seconds with Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live here with the opening bell. The opening bell is imminent, about a minute and a half away. Even the S&Ps are up $8.75. NASDAQ's up about 30. The Russell's still the strongest of the group, up 9, and the Dow is up 26. They're all up small. I've been quoting them up anywhere between, I don't know, 1/3 of a percentage point to where they are right now, basically unchanged, or about 1/8 of a percentage point move. Volatility was traded down to 1625 and up to 1665, is sitting at 1650. Bonds have been the non-event. They've been between 115 and 116. They're sitting at 115.9. Bitcoin had a relatively tight range last night, or an average range, I think, from just about 90 to just about 92, sitting right at 91 or under that at 90,700. Oil up $1. That's the one that's starting to percolate a little bit. I didn't mention nat gas. TP talked about nat gas on his cherry bomb this morning. Nat gas is like winter's not coming anymore. Nat gas at new lows. Thought you missed it the first time. Nat gas down 2%. You can get in there now.
You want to do a little put spread there?
You certainly could.
Well, look at.
You don't get paid a lot for them.
Yeah.
I mean, you don't get a big credit in them. You know, nat gas has a high Ivy rank, but you don't get the puts trade cheap.
Yeah, that backwardation is pretty wild.
Yeah, call spreads trade cheap too, but those out of the money calls trade very expensive. Nasdaq down 6, even the S&P's up 8. Nasdaq continues to be the weakest of the group. You love the bell. There you go. You get it twice. Why? You know, if you like it one time, you're gonna love it 2 times.
It's beautiful. Got a little bit of a pullback here. Volatility kind of stay in bid.
Who would have thunk? Waited all day long, month, week for unemployment, and here it is, basically unchanged on volatility, down near its lows, and even the S&P's up 8. Quiet before the storm, or really no movement going into the weekend? What do you think? Or we're all waiting for now 9 Central, which is a half an hour away, for the tariff decision?
I mean, I've been leaning a little short delta here, especially with the scalping. I mentioned it with Mikey. There's something eerie going on, and you got Trump throwing grenades, and you got lots of like just stuff, and you got low volume, volatility at lows. I feel like a more natural spot for volatility after what we've experienced the last 5 years is like 17, 18, 19, 20. Like that's where I think just volatility should be. I just don't, I don't, I'm not looking to be short volatility here at 15. It just isn't, I just don't think it's right.
Well, obviously it's right. You don't think it's warranted.
Yes.
Yeah.
Yes.
Okay. I don't think there'd be too many people hard pressed, although at the other side of the coin would be at market highs. What do you expect volatility to be doing? You expect it to be low, and it is low. But what you do here is you look to try to change your strategies or the way that you're looking at things, right? Maybe less undefined risk trades because you feel that the volatility is not great enough, or you go into products that have a higher volatility that can benefit from contracting volatility. So I get your point. We've had these kind of small movements down, and I don't consider this down, although the Nasdaq's down 20ish or so. But it's really been met with buying, and especially buying late in the day. I mean, we've been a rudderless ship, really going absolutely nowhere. When I take a look at the E-mini S&Ps, again at or around market highs, the last 4 days, if you're looking at this, we talked about it earlier in the week. SPX is 69.50 basically. I mean, it was 68.50 last week. It's 69.50 this week, correct?
Yeah. I mean, we've gone pretty much nowhere with no volume.
Intel, you just bought back your 1/3 spread that you did. Intel, you paid about $1.27. You sold it.
Oh, I'm sorry. I thought I did that better than that. I basically just scratched that.
Oh, yeah, no.
I thought I did that.
Yeah, basically scratch. Well, the stock's higher. I mean, the put, you should have done better on that.
Well, but I had, well.
Yeah, what happened? You forgot the price you put on?
Yeah.
He's freezing.
I just figured with the move. All right, you want to take a break and then we'll.
You're back.
No, you're okay.
Break?
Just play through it, son. Try to play hurt.
All right.
I know kids your age never played hurt, but try to play hurt. Don't worry. If I see you freezing up, I'll take the lead.
I don't think I ever missed a game of football in my entire career.
Considering I was your coach, you weren't allowed to miss a game because
true.
I led by example. If you missed, then everybody would miss. So we don't miss practice. You don't miss games. I mean, That's just the way it goes. Let's see what's moving this market here. OKLO up almost 13. Big move in those type of stocks. Talking about rotation with my friend Jamal a moment ago. Carvana up 12, even though Vinny did not buy his car from Carvana. Shout out to my friends at Napleton. Home Depot up 3 and change. AVGO up 3. Costco up around 2.5. VRT up around 2. Let's see what's moving this market to the downside, because we really do have a little bit of a mixed bag of tricks here. Qualcomm down almost 5. Baba down almost 4. Microsoft down 3 and change. Coin down 3. Amazon, Tesla, some big names. Palantir down $1.50. You had some big names in the NASDAQ. And that's why the NASDAQ is weak right now, or the weakest of the group, only down 13, kind of trying to lead us to the downside.
Yes.
What do you think here? Holding pattern until 9?
I think so. I think it's interesting that volatility is staying bid here. You got vol futures up 9 ticks. I mean, it's not like it's not a huge move, but it's not, vol isn't contracting. So,
it's not. It's not contracting.
I would expect this to, if you want to scalp for the next 30 minutes here, I think you're going to have a good, 10, 15 point, minute move type thing. Like we're even seeing it right now. The NASDAQ, just went from down 15 to up 15. I think that's kind of, I would expect to see that until we get this, this next event out of the way. Coming.
Yeah, I think you're kind of I think you're right there. I think we're gonna meander around until around 9 o'clock, and then volatility, and it has upticked /VX ever so slightly. VIX, let's take a look at VIX 1D, see what that is doing right now. I think that's a better way of looking at it. It's down from its highs of yesterday, but still elevated, as you can see here, 11 and change. We were down in the 8 handle for most of the week this week, so it is elevated on a short-term basis, and I think that's all because of this news-driven event. I don't see us going one way or the other outside this expected move of $30. I'm not putting on an SPX trade at this moment. Those who put it on now will benefit greatly from this expanding volatility. I think you'll have to be a little bit nimble with your roll downs or roll ups if you have, depending on what move you have. So be careful out there on the 0 days. Maybe it's a day you abstain until after the number and take a little bit less premium or get a little bit directional with your 0 days. We got a great market measure at 9 o'clock all about 0 day options, which is a good one too.
Yeah, it is a very good one. I'm sad I'll be missing that.
That's okay. Let's take a quick 90-second break. We'll come back. Let's get this fast market done in here. We got 10 trades from our viewers. Sound good to you?
Cool. Sounds great. I need them.
All right. We'll be back in 90 seconds. Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Fast Market. I think I was real early, premature, as we would say in my boomer language, and you were a little late. We would call it holding out strong.
Okay, perfect. Didn't land. I agree, John.
Can't get any love from James. Even the S&P's up 22, NASDAQ up 75. Russell, the strongest of the group, up 25. That's a full 1 percentage point. And the Dow up 150 and change. All seems like smooth sailing at the moment as volatility's in by 7 cents. Let's get to Fast Market.
Let's do it.
Check it out.
Yeah.
Yeah, there
Fast
we go.
Market.
Much better. Give us a little applause, James.
Woo!
See? Can't get it.
No, there we go.
There we go. Thank you, sir.
Let's do it. First trade.
Ready.
Let's see what the team put together. Rivian bullish. Okay, Rivian not crazy bullish before earnings. Stock super cheap though, thinking the 2022 February strangle. RIVN.
IV rank of 41 is pretty good. February earnings come on the 19th, the day before expiration. So I think you're okay there. You know, if this strategy works out, you'd be going on a 3-week time frame. But look at the, it's hard on a $20 stock to sell a strangle. You go to the 20-ish delta options, and everything is relative. But you go to the 20th delta option. What do you get? $1.50? You know what I mean? Like.
Yeah. I did a covered call.
Okay, that definitely.
We don't do a lot of covered calls, and I think this is a spot. I mean, it's had a nice rally, so I'm certainly buying near the top here. But I think we can use this as like something where we can try and reduce basis, see what happens here. Obviously, if the stock goes up, that would be a great thing. But small little position, I think it gives us a new strategy we don't typically utilize.
Sure, and you could have made it less or more bullish by going closer or further away from the market. You did the 22 strike with the stock just under 20, which is actually almost an option that has a 40 delta. Usually we go to a 30ish delta. So you take it a little bit more here. You could have gone down to the 20 or 21 and collect another 20 or 30 cents. I like the strike selection you used, but you can make it more bullish or more bearish is my point by going further out of the money or closer out of the money. I would probably stay somewhere between 50 delta and 25 delta, but again, it's up to you.
Yeah.
You did the 40 delta basically right in the middle there. I like it.
I chose that because that's what Brian was looking at for the calls. So I figure I follow my man.
That's right. Listen, if they take the time to Yeah, good for you. Good for you. All right, next one, please. Crude oil here, ready to explode higher. Well, it has a little bit, right?
Yeah.
/CL up almost 6%. So good job out of you, Abhishek in San
Abhishek.
Abhishek, sorry.
I don't know. You could be right too. I just said
Nah, you
I
sound
didn't.
better. In San Mateo, California. Good job out of you. I hope you did this yesterday. Um, Oil up $1.36. What do you think about here? I'm locked in on the February call spread. 57.60 for a buck 25. 50-50 shot, but he likes it. /CL. What do you think here?
Yeah, you had good timing on this yesterday. We sold puts earlier this week, and I closed them out yesterday, and then I actually rolled into an iron condor. So I just have a 2-point wide iron condor here: 53, 51, 65, 67. I caught it on the way up. I didn't catch all of it, but I think here is a good spot to be like neutral. If we get a little bit of a downside move, I'll lean long from there. Get a little bit of an upside move, I'll lean short from there. I think that's, this 60 spot is kind of been the chop zone. So I'm playing it a little bit neutral at this point.
I would agree with you, and good call by San Mateo, California here. And more importantly, the strike selection was good. Yesterday, the stock was closer to 58. He's buying the 57.60. A little bit of call skew. It's exactly the way I would do it if you were bullish in oil. About 1 strike in the money, about 2 strikes out of the money. That's the way to play it. Good job out of you.
Yeah. A little bit of a bid in volatility here, up 18 now.
A little bit of a bid volatility, but as high as we've seen it for the day since we've been on the show.
Yeah.
Yep. Good catch.
Next one, please.
And the VIX 1-day, just to put that in perspective, is actually caught a little bit of a bid too, 13.75, so it's a little bit higher. PayPal support, February 55 puts. What do you think here? PY.
I do not have a position here, so we're gonna rock and roll.
Yeah, stock hasn't had an uptick. I don't know why he thinks there's support there, but I will agree with you 100%. I mean, it's trading at numbers it traded at in April, and maybe that's what he's thinking about support. Hard to go 10, 12 months away or 9 to 11 months away and say it's now support. But hey, price is king, and we agree with you. All right, you sold the February, which would be 42 days, the 55 puts. You sold those 55 puts, which have a delta of around 30-ish, 32. Classic mechanics on a high IV rank stock, which is good there. And directional bias, Blake in Madison, Wisconsin. I hope you got your mojo working.
I like it.
Beautiful. Next one, please. Apple. Actually trading cheaper relative to the rest of the Mag 7. Yeah, you're 100% correct, Craig, in Roanoke, Virginia. I've been there. Been considering adding shares or maybe that June, Feb, 250, 270, poor man's covered call. Not exactly cheap, but feels worth it for the long haul. What do you think about Apple?
The 250, 270.
Yeah, stocks around
June, Feb. Oh, so you're going far out.
He's going like 160 days out. I think a little bit too far for me, but when you look at the June markets, they're in Apple, they're certainly good enough to trade. I mean, they're a nickel wide.
Yeah. I'm going to do this a little bit shorter duration. Let's go April, Feb.
Sure, April's 100 days. I think that's far enough for a synthetic long spread, right?
Yeah, and I'm going to use your strikes. I'm going to do the 250, 270. It's marked around $15. So you are paying net extrinsic value here, about $700 or $7 per share in extrinsic value. But you do have one extra roll in this because you have March and then you got April after that. So you with a roll, you probably are going to collect another $4 or $5, assuming the stock stays here or goes higher. So I don't mind this.
Good. I don't mind it either.
I'm following.
Yeah.
All right, 1462.
1462 it is. And just to give you a little bit of context behind it, it's got about 30 delta to it. So it's definitely, covered call like it's a poor man's covered call. I mean, it's basically like a synthetic covered call.
Yes.
Basically like a naked put.
Perfect. I like it.
All right, beautiful.
I probably could have done puts. Should we do puts too?
You want to do a stupid?
Yes.
I only say that because we had the question about a stupid. So you're looking at Ivy rank of 19 in here. You've got a March, you got an April Feb spread on now, and you're looking to sell puts. I would probably go down to around the 15 delta since you already have long delta. That would give you almost.
Yeah, I was thinking about like the 240s as a 22 delta.
Yeah, or the 235s with
235s. You want to do that?
Sure. 235 is around 15-ish delta, 16-ish delta.
All right. We're going to do the puts too. Double bullish. The stupid, baby.
You're all in Apple, man.
Yeah. I mean, it's had a nice little pullback here. Why not?
Yeah. Down $1 today with the NASDAQ now catching a bid up 20. So sure. I get it. I get it.
Cool. Beautiful. All right. We're in. Thank you, Craig.
Next one, please. SPX 0-day iron condors have been money for me all month. They've been money for us too. The month is only a few trading days old, so it's been real money for us. Keep going. Keep doing this until it stops working. Jeff, I think you're right. What do you think about it trading it today? I already spoke about what I thought about it today earlier. What do you think about it? Jeff in Miami?
I'm going to be out of here soon, so I would say no. But if you would like, we can certainly do one.
Yeah, no, I'm gonna abstain today from it with everything coming out at 9 o'clock, and maybe be a little bit more reactive when the market, and when the market moves at the 9 o'clock tariff decision.
Mm-hmm. Okay, cool. So we're gonna pass, Jeff, but
we're gonna pass. But I love it, and I think it's become a staple for a lot of Tasty Live traders with the appropriate size count, and it's been working quite good. You are going to get your full losers in there every once in a while.
Yes.
But it seems to be a profitable trade for many, at least from what I can tell from the emails I get and just by watching X and other places. So good job of them. We have been 5 for 5, my friend Mark just told me. Good job.
Beautiful.
Beautiful.
I bet. Happy New Year, bats. My resolutions: stack more Bitcoin. All right, Sean in Hong Kong selling those 50 puts across every month. That's laddering, right? It is certainly laddering. Mm-hmm. I do have long shares in IBIT. If I didn't have, I mean, I guess we could probably do a little bit more.
Yeah.
You want to do February and March?
Sure.
And we'll do the 50 strikes?
Sure.
All right. All right, we're in. I sold the February and March puts. These are laddered puts. I definitely have some long delta in Bitcoin. I'm with you, Sean in Hong Kong.
Yeah, I'm with you too, Sean. IBIT has been a good trade. Coin has not been a great trade.
No.
Is it BITO? What's the other one? BITO has been a horrible trade. So IBIT would be the place I would be trading if I was looking to do something in there. So more importantly than the directional bias or anything else like that, you pick the right vehicle.
Yeah, I like it. I'm in.
Mm-hmm. Next one, please. Tesla down 10% in 3 weeks. January is usually bullish. Grab the 430, 445 Feb call spread. Gary in Medford, Oregon says with a period, but I think it's kind of a question mark.
430, 445.
Mm-hmm.
I mean, it's a risk one to make one 50-50 at the money shot. Volatility is relatively low. You got an IV rank of 8. What do you think of this?
Tesla unchanged today. I mean, I don't hate it. IV rank of 8 does kind of want you to do a debit spread and not sell premium. So I think Gary's in the right space here. Earnings are January 28th at the end of the month. I mean, this might be a March Feb diagonal spread for me, maybe more than just the 50-50 shot. But I don't hate the 50-50 shot either. It depends on how bullish you are on Tesla. I'm trying to talk about Gary opinion here. March volatility is 51. Feb volatility is 50. Not too much. One vol points doesn't scare me. If it's more like 3 to 5, then it scares me.
Yeah, I don't mind it. I mean, we don't do a lot of these, so
the vertical spread, go for it.
Yeah, just like an at the money call spread, just
yeah. It's basically like it's a synthetic covered call. It just uses too much money to be a covered call to the candidate because the stock is such a high price stock. You look at a $400 stock.
Yeah.
Yeah.
All right, I'm in.
Beautiful.
I did the same strikes. Thank you, Gary.
Beautiful. Good job out of you. You paid $7.18 for it. You just did a $5.
I did a $15 wide.
$15. I couldn't see it.
Yeah.
434. Yeah, you're good.
Same. The risk one to make one.
Yep. Totally. RBLX. Think the sell-off is done. Probably going to be range bound here. Selling the 65 put 90 call for 555 triple nickels. Closing before earnings. What do you think about RBLX?
So I have a leftover short put at what am I at? 80. I think I was at the 80 strike. I have the 80 strike put. So
you got bullish delta in there by default already, and we would hope that that Todd in Pueblo, Colorado, is correct too. We hope that it goes higher too.
Yeah, I'm going to move this to the 65-85. Get you slight short delta, basically zero short delta. I mean, you have one or two short deltas here, but it's a neutral position. I have long delta, so I will be net long with you. But this one doesn't add any long delta at this point.
Yeah, RBLX IV rank of 51 is good. It does have earnings February 5th, but hopefully if this works out, you'll be out before February 5th. So
yeah, my net position will still be a little bit long. So I'm with you.
Very good.
I'm going to try.
No ding yet. You are dingless.
635.
Beautiful.
All right. I'm in. Thank you, Todd.
Awesome. That's a stock we wouldn't have looked at.
No.
Yeah. Next one, please. Netflix bullish, it looks like. We got Brett, New York City here. Netflix won't break the 83 support, even with earnings coming. That level's rock solid. Nikki, rock solid, taking my shot with the 85-75 Feb put spread. What do you think about that?
Well, I hope you are right, Brett, because I am long. I'm long delta here. I have in the money puts. I have some call ratio spreads against it. We did the put spread in the Johnny Trader account yesterday. So I'm locked and loaded. I'm ready for this up move. I hope it comes someday.
I hope so too for everybody. It's down $1.60 today. It's been one of those stocks in the NASDAQ that has not participated or helped anywhere to the upside. Netflix has been a real dog.
Yep.
So I like the idea that you're doing a put spread here. I like the idea you could selling the put spread with an IV rank of 85. Good job out of you. Next one, please. AMD neutral, says Dave in Billingham. What would that be? Washington? Jade Lizard looking good here. Slightly bullish tilt. Feb 175 put. 230, 240 call spread. No upside risk. Stealing a page from the Bats option trade today playbook with a Jade Lizard brought to you by Liz and Jenny.
Okay.
Did I include everybody? Who stole it from Tony from Mexico? How'd I do?
Perfect.
Thank you.
I like it. I'm short puts. I'm short the 180 puts. So I'm with you in the long delta. I'm not going to add to it here though. So I'm with you, Dave. but a little bit different position. Same thing, same delta.
So you like it, but you basically have it on already. So
yeah,
you're in the same place, correct?
Yes.
Very good. Very good.
Cool.
All right, those are all 10. John, you want to tell us what we have, or do we do that anymore? Yeah, there you go. We
did them all. I mean, we have
positions. The one that made you
all.
not do the SPX trade, it probably is going to work out great. But we're going to sit there. SPX, by the way, or E-mini S&Ps, expected move is still 33 or 34, actually 34 and a half. That means volatility has been expanding since this morning, which means, if you sold premium at 840, 830, sometime in there, you haven't gotten paid yet on the premium contraction. All right, son, I'm going to let you go. Safe travels to you. I know you've got career day in your alma mater. Take care of those kids. Treat them nice.
Of course.
It's going to be fun. I'm going to bring in Jamal, who's got some words of wisdom for you with this market measure that's all about zero-day options. And we've got the decision going to come out right here on this break. We'll take a quick 90-second break. We'll be back. Even the S&P's up 17, NASDAQ up 42. Let's Tasty Live.
See you next week, peeps.
See you next week.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
That's right, my friend. It's Jamal in the house. Thank you for coming back. I mean, once on Friday is magical, but twice on a Friday. I mean, is it my birthday?
It might be. I mean, dare I say, it's jizz worthy. You know what I mean? Like,
It sure is. It sure is birthday worthy. There's no doubt about it. I don't know if the Supreme Court has ruled on anything or done anything here. I can't find any real news on it. I'm looking around here. Even the S&Ps were up about 7 or 8 handles higher than where they are right now.
I'm just seeing something pop up. Actually, as you mentioned, there's no ruling coming today. No tariff ruling today. No, the U.S. Supreme Court will not rule on Friday in Trump tariff case. It's just hitting the wires.
And that, ladies and gentlemen, is why volatility has, it's so predictive. That's why volatility really hasn't moved. We talked about /VX being, unchanged to down. We did talk about the VIX one day catching a small bid as a binary event here. Now selling back off to 9. It was 11 and change. For you cowboys out there who traded even the S&P one day, look at this. You certainly got all your volatility contraction via that break. I looked at the expected move. It was around $34. It's now closer to $24 or $25. So if you put out the risk to make the biscuit, as they say, you risk it to make the biscuit, you certainly got paid on volatility contraction for that moment. The Dow is turning red here by 37. Taking a look.
Yeah, let's look at that SPX again. I mean, this is interesting to me. Sure. When you look at the next couple of expirations, look at options, right? I mean, look at that. I mean, 11, 12, 13. Like this is so far. This is looking like not really many things are going to move the market. We just had I guess a geopolitical risk situation coming into the week. Didn't move the market. Didn't move oil. What do you make of that when we come off of a year? Last 3
years, it moved some oil stocks. I mean, if you said anything, we made all-time highs. It kept the bull market going, right? I mean,
yeah. But I guess what I'm getting at is like
rotation. You mentioned a rotation when you came on the show, so it brought a little bit of rotation of stocks too.
Yeah, but I guess what I'm getting at, it's just interesting. Nothing seems to shake the market as much as it has been, right? The last real serious shake we had was last year, April. And now things have been really calm. I'm not complaining. I'm just talking about, like, we've had 3 really good years of gains. I wonder what kind of year this is going to be going forward, as far as like, will it be another 20% year, or are we going to take a breather? We've had 3 in a row. I need to find this chart again, because there's this chart that shows like the last 25 years or so. And then you see the years where, late 90s, it was actually like 30 years. And you see the mid, like from 95 to 99, big up years. And then obviously 2001, kind of middling years. And then we started a couple of, it seems like 3 to 4 good years in a row. And then we finally have a pullback. We saw that coming out of the pandemic, right? We had a couple of really good years. 2022 was a bad year. Then we had 3 more good years. I just wonder what this kind of year this is going to be so far. But yet you see really nothing shaking this market when you look at geopolitical risk. Doesn't matter if it's tariffs, whatever, seems to be kind of quiet.
Yeah, it does seem to be kind of quiet. So, and I think I don't know what camp I'm in. I think you definitely got two sides of the trade here. You've got the one that's saying, hey, maybe all of this administration work is working. And then the other side, right? And the other side of it is you've got, hey, maybe here we need to pump the brakes here. We've gotten too crazy with these 20% moves all the time, right? I mean, it's both sides here seem to be could be right?
I think both are kind of the same. I mean, the administration is working, everything is fine. So why do we need a day where we drop, 100 handles, because everything seems to be fine, and everything's going well. I think it seems kind of the market is doing so.
Yeah, volatility up 7 cents right now. I just closed Nikki's MES trade that he made from this morning. I frankly was not crazy about the sale, but he sold them at 69.76. And we bought them back at 69.63. They're right there right now, maybe even a tick or two lower than that. It was a good hold by him. I thought, he was trying to trade fade the move here in the market, which I like. But the mini S&Ps really didn't move. They were up around 12, 13 before any of the unemployment news came out. They rallied up around 22, kind of missed it. Sold them when they were up around 15 or so. This is about the lows of where we've been for the session so far. So I'm closing them. He probably would have held them and taken 100 handles on it. I know that's what he'll say on Monday, especially if we're lower.
Did you just mess up his trade? Did you just mess it up?
No, I asked permission first. He's the boss. Even the S&Ps are trading near their lows, only down 3. But getting back to the discussion you have, because it was a good one, before we get to this market measure that's sponsored by the CBOE, we're talking about 0 days on that too. You got two sides of the market. You got, hey, maybe all this stuff is working, whether it be geopolitical or otherwise, or just markets themselves. Maybe, I've seen reports where maybe the consumer's not paying as much for these tariffs they would have thought prior to the tariffs. And you got the other side of the coin where we're paying way too much for this tariff, and things would be a lot better if we didn't do anything. And these policies and changes in policy that we've been doing are nothing other than smoke and mirrors to help people that shouldn't be helped, and it's not helping everyone in this market with 20% returns to 3 years in a row, which I think is excessive for a healthy market. Are not going to continue. So volatility, on the other hand, is saying, at least at this moment, and when you least expect it, right? That's the other side. It really, what it makes for a strategy-driven trading. And that's the best kind of trading you can have. Now, we got a little bit of volatility spike. It'd be even better than that. But we've been able to find, we just did a moment ago, fast market, where we look at 10 trades. We did 9 of the 10 trades. So there are trades out. All of them were basically selling premium. There are premium selling trades out there for you. So it's it makes for an interesting market. Those who have learned or are taking the time to learn how to use their buying power in an efficient way are going to benefit in this market. That's, I think, forget about how it moves or why it moves. I think those are the people that are going to benefit, and those are the ones that should, in my opinion, at least.
Yeah, I mean, it's interesting because, it does seem as though volatility is pretty low. There's not a whole lot moving, but you're right. There's a few trades that you can do here and there if you find the right ways to do them right about now. But to play macro guy for a second, you talk about tariffs. I did happen to open my eyes for 2 seconds and see some data yesterday when you talk about trade deficit. They said the trade deficit was the lowest since 2009. They're equating it to or I should say they're attributing it to something going on with the tariffs. I'm not exactly sure. Trade deficit is not something I watch a whole lot, but the fact remains is that there is still the tariff thing. It still exists. It's still something that's going on. It's not affecting the market the way that it did a while ago. And I think that gets back to your point, the fact that maybe all this stuff is working. Everybody seems to be calm. The market seems to be calm, seems to be going about its business. And I mean, at the end of the day, that's all that we really want. So
exactly. And this gold silver ratio spread is trading under 57 or so. It got as low as around, I don't know, about 50, 56, 75 or 80, just about where it's trading right now. I think I'm going to put this on where I'm going to buy 2 gold futures. That's /MG.
You like doing that spread? I don't love that spread.
Go ahead. Give me your opinion. Why?
No, I just like trading one or the other directionally. I don't know. Does that work? That spread? I'm literally asking for real. Does that spread work for you? Like doing it?
Yeah. It's actually been a good trade for us. I'm going to put up on the screen for you here in just a moment. Here you go.
So you're about to get long some gold and get short.
I'm going to get long gold. We're taking a look at gold right now. Today it's up 1%. Silver's up 5%. We're buying 2 golds. That'd be 2% versus 5%. So you can see here on the chart, I want it to come back down this way. If I'm doing it this way, I'm buying gold and selling silver. I want it to go this direction. So I'm just playing this move that it's had the last couple of days. That's all I'm doing. But I'm in the wrong account, so I have to do it in this account.
I mean, it makes sense. It makes sense, because when you look at that spread, you're right. That spread is fairly low. I think this is the lowest we've seen it in over 13 years. I think 2013 is the last time it was around 60. And it really doesn't get that low too often. And not to say that it's going back to 100. I always say 100 because I feel like that level is something that we see around the times of some serious political strife or war or something like that. And you can look back across 100 years and you'll see it. I mean, in 91 during the Gulf War, it was 100. 2020, it was 100. It wasn't exactly a war, but obviously it was something serious going on. We saw it at 100 earlier this year during the tariff war. So that's usually the thing. It's just a question of whether it bounces. But 60 does seem low.
Yes, I'm in the wrong account, so I'm going to have to get there in a moment. I will get there when I have a moment. I apologize.
Yeah, no worries.
Maybe I'll just do it this way. Hold on, I don't want to. I know. Yeah. I'm nothing without my son here. When it comes to trading, it's his account is the problem here. So let's see.
Yeah, I've always wondered about that, like people, doing that spread. That's why I asked. I've never done the spread itself. I usually just trade one of them, the other. And honestly, if I were doing that, I would just be like, okay, I'm just going to get long gold. But I see why you get. I mean, in this case, it actually makes, I think, sense to get short silver too, because silver's like so high.
I don't know if anything makes sense. Like, I mean, it is what it is. You know what I mean? Like,
I will say, I understand. I would say I understand why you're getting short silver because we're in it.
Yeah. You could make an argument for it, but I don't know. I don't know if it's something that like makes sense one way or the other. All right. So buying 2 gold futures, selling 1 silver future. I did that /SIL, which is the micro. Silver.
And then why are you doing it? Why are you doing it 2-to-1? Why the ratio?
Just that's vol adjusted and
oh, it's true. Okay, true.
Yeah, that's all.
So gold is probably about 20 something. Silver's way over 40 for sure.
That's correct. So you do it 2-to-1. So that's what that's what I did it for around 56.75. I will say that this spread doesn't typically change direction intraday. You know what I mean? Like no. It doesn't. It's not like some stocks that move. Back. It seems to with futures. And commodities go in one-ish direction.
That's why I'm asking. That's why I'm asking because. We've seen times where Nasdaq and SPOOs sure. or Nasdaq and Russell, right? That you're right. Literally most days we see those two moving together. It seems like it's over time, you would have to probably look over a 2-week period, right, and see the changes because they are probably a little bit minimal. But I think at some point, clearly the ratio exists for a reason. Right. Clearly they do, right? So That's why I asked.
Well, and
I don't think I have the patience.
Yeah, 1 point is a $1,000 move in here. So it's moved about a point over the course of overnight into today. It's about a 2.5% move in the overall pair trade. It's gotten as low as around 55.25. And it's got and by this I mean in the last week or so, like this week, it's gotten as low as 55.25, which was like a new low in the 2x1, and it's gotten as high as around 59.25, and we're trading 56 in the order, so we're right in the middle of this range, down 2% today. I'm just trying to make something happen. We just talked about what volatility is doing. Volatility is in another 11 cents. And by the way, even the S&Ps are up 13 handles about where Nick sold them. So I don't know what was the better sale or the buy, but right now the buy looks like the better purchase. Me covering his trade. So.
I love how you said 56 in the orders. I say something in the orders quite often. Where does that come from exactly? Do you know? I don't know. People don't know. When we talk about 0.75 is when we say in the orders, but where does that come from? I actually don't know where it comes from. I remember when I first heard SPOOs and I was like, yo, what are they talking about? Like, where does that come from? You know what I mean? Like the things that we say every now and again, trader lingo, right? Like it's something to be studied.
Right, and I don't have a good example for you because I'll say this like the number three quarters sounds like a third, like a three, or if the whole number is three. But when you go, because we traded in eighths, but when you look at five eighths, you got five eighths is not called like you know spaghettis, right? Like I mean, there's not like you're not trying to make something up. I don't know. I just think it was a Chicago accent that just got muted into the orders instead of three. You know.
You're probably right. That's probably how it came about.
Yeah, I don't think it has any. I don't think it has any significant in the open outcry trading world because that's it. Futures started here in Chicago. I just think it's a very heavy Chicago accent muted into the orders for three quarters.
Yeah. Right, so those of you who are listening, now you know. When you say the orders, it's three quarters, 0.75.
That's my assumption. That's definitely my assumption. Let's come on. Are you ready? Let's get to this market measure. Sponsored by our friends at the SIBO Advanced Management Bracketing 0-Day Options. Do you bracket any of your orders or do anything like whether it be a futures order? Forget about just 0-day futures order, option order, or anything. Is it something that you implement?
I do not, and I'll say why at the end of this.
Oh, okay. So it's going to be like a to be determined kind of thing.
Yeah.
All right. Awesome. Okay. Well, let's do that.
Do you?
I'll
at some point in time, like throughout the trade.
I'll save it to when you say something. Let's go to our first slide, please. All right. Bracketing 0 days. 0-day markets in top underlines offer extreme liquidity, making them ideal for active trading and, more importantly, active trading management. Typically, we manage winning credit strategies by buying them back and locking in profits. Well, that's when everything works out perfectly, right? I mean, you want to put something on and take it off for a profit. But closing the position ends your opportunity for the day. Do you have FOMO about missing out when you close positions for a profit?
A little bit, yeah. I just closed out this Costco calendar spread 2 days ago, and then yesterday it was still up, and I was like, but I kind of knew. You just know. Half the time, now I just assume it's going to keep winning after I take it off.
Well, we waited for you to close it. That's what we were waiting for. My point there is nobody is watching or sees your trades, and we all have that FOMO. I probably have it for about an intraday. Like I might go back after I've done something and, especially if I had a losing trade and closed it for a profit or a small profit or a scratch, go back and look at it intraday. But after the day's over, I don't think I look at it anymore.
It's interesting you asked this question because once upon a time when I traded at a prop firm, we literally had a column for what was called day marks. And it would show you how much more money you would have made if you had kept the position on after closing, or made or lost.
Oh, that's a MF.
It was terrible.
Whatever
I know.
Developer came up with that. They were just the traders. That is, that's what happens when developers make a platform and not traders making a platform, because
I know, right?
You just want to aggravate yourself. I mean, how about showing the trades that you closed and then how much more of a loss they would have been if you didn't close them? That would be beneficial. I mean,
it showed that. It showed if you closed it, it showed how much more money you'd make, and it showed how much more money you would have lost if you kept either one. It showed both sides, yeah. So it was something. Either way, it was an MFer. You're right.
Yeah, well, all right. I'm okay with it, but I
hated it. I mean, we all hated it.
Yeah, I mean, I've told a story where I didn't even keep my P&L. When we went more towards electronic trading, when we would have a computer on top of our necks, when we weren't writing them down in our hands, and we had it on a computer. Your Greeks and everything, were dynamic in real time, and so was your P&L. I would hide my P&L. I didn't want to see my P&L. I thought it affected my trading. I like
your decision making. Yeah.
I like to just be. I thought I was pretty solid in my mechanics and my feel for the market and for valuing spreads and undefined risk trades. I didn't want to see, like, if I was up big, would I risk more or risk less because I wanted to preserve capital? If I was down more, would I push it, or would I trade less because I was down and I wasn't on that day? So I just wanted to be normal and not do anything.
I could see that. That would actually make a lot of sense.
Did you look at your P&L, or did you have that capability in your system?
I couldn't hide it. I mean, day to day. Yeah.
Yeah. I don't. Anyway, all right. Next slide, please. I'm so sorry, I got on a tangent there. I'm sorry, not the next slide. I misspoke, John. It's my fault. Let me read the rest of the slide. I missed the last 2 or 3. Back to slide 1, please. Thank you. I apologize. That was my fault. We just talked about closing position ends your opportunity for the day. What if instead we bracket winners? Buy it back, but with the different strikes. This way we can lock in smaller profits while maintaining upside potential. And by upside potential, they mean upside profit potential, not necessarily directional. So what they're doing here is they're kind of making the like if I was to do an iron condor in the 0-day and SPX, I might do it $15 or $20 wide if I felt average to good on the trade. If I felt like I still wanted to do the trade, like the last 2 days where volatility was relatively low, I might make it $10 wide. That's the way I make it smaller. Now, what they're looking at here is going your regular $20 wide and then kind of taking it a little bit smaller. So let's go to the first slide here. All right, 9 a.m. Is the example here. SPX is what they're using. I think that's the product that you should be in. 68.19 is where SPX is. They're doing the 10-20 credit put spread, sold at 360. The max profit is 360. Max loss is 640, just the inverse of the $10 wide spread. Place a 260 limit order to buy it back, the debit spread. What do you think of that mechanic so far, just as an example?
So we're selling a put spread, and then we're going to buy a different put spread and turn this thing into a butterfly, is what I'm seeing.
That's correct.
Here.
That's correct.
And so we're closing off. I guess we're closing off risk to some degree. Yeah, we're closing off risk a little bit.
Definitely closing off risk, leaving some.
And are we potentially locking in a little bit of profit?
Mm-hmm.
Okay. That's interesting. Okay.
All right. 1046. The limit order triggers. Resulted in iron butterfly, which you just mentioned, butterfly a moment ago, iron butterfly, same thing, with the $1 minimum profit. Potential up to $1,100 because we locked in the $100, as Jamal was talking about just a moment ago, by doing the different strikes. But now we have a chance to make $1,100 if we get a pin, a cash settled product. There would be no leftover position after this. You don't have to close it. You don't need the obviously you need to have the buying power, but you obviously have the buying power if you did those 2 spreads above, which is a minimal amount of buying power at $640. All things being relative. So far, good mechanics. This is something that Nikki likes to do in longer dated options. We've never looked at it in shorter dated options, and they show you the graph there of what your original spread looked at on the top, and then after the adjustment or management is a better way of saying it. Stage 2, the iron butterfly. Next, please. And you notice those tails on that that second picture are always positive. That's that $100 that you're locking in. All right, the study. Using nearly 3 years of data in 0-day SPX options collected every 10 minutes. Considered the results from selling a 50 delta $10 wide put spread at 9 a.m. each day. So no real directional bias here, except that it's a put spread, so it'd be bullish. A little bit, market has been higher, so you would expect the results to be a little bit better than you would expect if you knew what the market was going to do. Look to bracket winning positions, just like we showed in the example, when it's possible to lock in $100 of profit by turning them into iron butterflies. Also considered locking in 10% or 25% of the initial credit received. So a directional trade, they're looking to close it for 10% or 25%. That would be our area typically of managing trades, which we've done on many studies showing that that's the optimal way of doing it. Examine the percentage of winning trades, the mean P&L per trade, the per trade standard deviation of the P&L, which is kind of I hate that metrics, but it's deceiving, I think. And the maximum.
That's what mathematicians and nerds do.
Yes, they love that. It's almost looking at return on capital. The largest amount someone could have lost following these mechanics every day by starting at an unlucky time in the study. That's good. Contrasting this to the results from fully closing the position at one time, experimented with using $20 wide wings. That's what we talked about a moment ago. And all trades were assumed to exercise, trade at mid-price. All times are Chicago. Losing trades were not managed. There should be a little bit of a star there, like a Roger Maris, if everybody remembers him, a little asterisk on that there, because mid-price you don't always get filled in SPX. It's a couple of $1,000 product, almost $7,000 product. So mid-price, you need a little bit of movement one way or the other to get filled in mid-price. But if you continually do it, I guess the study would be quite accurate. Next slide, please. Slide 4.
Maris hit 61 and 61, didn't he?
Say it again.
Maris hit 61 and 61, didn't he?
That's correct. Good job out of you.
Come on now.
Advanced management here. $10 wide put spread, lock in $100. Bracketing winners, closing winners, and no management. The winning percentage is around the same, higher for the bracketed orders. Okay, taking your profits, I would imagine, and closing winners. I'm surprised that they're basically the same. We're looking at that 10 to 25%. Average P&L on the closing winners is better than the bracketing. No management seems to be the winner there. Standard deviation of the P&L all around the same. I guess no management is going to have more directional risk to it, so it's going to have a higher standard deviation. And the max drawdown on these, your bracket, it's a little bit confusing there, because if you're bracketing the winners, you're locking in a profit there. But I guess that's the most that it could be there. What do you think about these across the board here? Does it look like bracketing? If I'm going by P&L, if you like the huge swings, no management seems to be an okay thing to do. But if you like consistent winning, this closing winner seems to be the clear winner in this example.
That's exactly what I see. Yeah, and it seems as though playing it safe, locking in a winner is playing it safe, and you'll get the P&L that is pretty safe for you.
Yeah, totally agree with you there. 100%. Even the S&Ps, by the way, are up 32. NASDAQ is up 160 or so. NASDAQ and the Russell are now up the same percentage, with the Russell up 18 and the Dow up 165. Volatility in by 26 cents. Great cover by
oil up to 59.
Yeah. All right, next slide, please. Advanced management, $10 wide, locking in 10% here. Oh, here's a locking in 10%. I misspoke. The last one was just looking at bracket orders and closing the winners. This is I misspoke.
The last one was also locking in $100. This one is
right. The last one was locking in $100. That's what it was. Thank you. This is $10 wide, locking in 10%. Closing the winners, and I know the no management makes more money over time. The 76 versus 82 is statistically important. I don't know for traders if it's as important, but definitely 6 percentage points is statistically advanced. The clear thing here is bracketing the winners doesn't pay you any more money. Being mechanical seems to be the clear winner here at $99. What do you think?
Yeah, if you look at this thing like a heat map, being like at the win percentage, 82% being really green, and then it kind of goes towards yellow when you get to 76%.
Yeah.
These pages look exactly the same, right? I mean, it's basically showing you that bracketing is safe and no management is not safe, but you potentially make more money.
Very good. Well said. Next slide, please. Advanced management, this is locking in 25%. Remember, the no management is going to stay the same across the board here. And remember, we've been in a bullish market, everything else like that. Closing winners, 112 versus bracketing, 72. It comes down to your strategy on entry, and then managing seems to be the clear winner here, and significantly the clear winner. Because on the bracketed winners, you get the same win rate, but you don't get paid anymore. I mean, for me, it's closing the winner seems to be the clear winner.
Yeah, Looks well. I don't know if it's clear. I mean, it's more of like, I mean, you could lock in a smaller profit initially, and you don't think about the trade. Is one thing, the way to look at it, I would say. Or you could just do nothing, but you're thinking about you're really directional. You're really worried about direction, right? While just having that short put spread. If you decide to buy that put spread and close it off and be like, okay, I've made 100. Whatever happens on this thing happens. That's another way to live. It's a different way to live, I would say.
Okay, just a moment ago when I asked you, do you have FOMO? You said you do. Now you're telling me to close the trade and
I didn't say that.
And leave the other. What is that? $40 of on the table.
I didn't say that. I was just saying what happens here. You asked me how I feel.
Heard you.
You asked me what you asked me what, we can go up in the tape. You asked me what would I do? I don't do this. I don't close them off because when I put the trade on, I put it on for that reason. I'm selling that put spread because I'm thinking, okay, this is out of the money and I'm fine with it. And even if it eventually goes against me, it is what it is. But like I put it on from the outset for that reason. I don't look back. I feel like FOMO is sort of like saying, you know what? I'm worried that something's going to happen here. I've made $100. I feel like that's the opposite of FOMO. That's a different type of FOMO. I'm worried about losing. It's not FOMO. It's like I'm worried about losing.
It's reverse
so
FOMO.
Now I want to. It's reverse FOMO. Thank you.
Somebody.
And so now it's like I want to close this thing off. I want to take some risk off, and I'm like, but then it's like it's a totally different trade. Then it's like, it's different, and I don't like that. I'd rather just put the trade on that I have from the outset.
I agree with you. Next slide, please. Slide 7 of 10. Advanced manager, $20 wide, lock in the $100. So now we did the $10 wide. Now we're doing the $20 wide, locking in the $100. Okay. If you don't think closing winners is a clear winner on the last slide, what do you think about this slide? 250 versus 150.
I mean, again, it's just the numbers get bigger. Obviously, we got wider. It's the same deal. Again, I don't like doing
Embrace
the
closing the winners, Jamal. I hope by the end of this segment, I'm gonna have you embracing closing the winners. 250 versus 100.
It looks nice.
Win rate's always going to be the same because again, these are all winning trades. Kind of looking at closing those winners is optimal in my opinion. It will be Jamal's opinion in the next 3 slides. Next slide, please. Slide 8.
Oh, jeez.
Slide 8 here. Looking at the again, it's to me it's a clear winner closing these trades. Let's go to the next slide, please. Slide 9 before we get to the takeaways on slide 10. Slide 9, please. There we go. Now we got $20 wide, locking in 25%, which is more of where Nick has been living with putting on both sides of these trades. The bracket win is $180. Closing win is $260 and change. It looks like whether it be 25%, 10%, 15%, at least in my opinion, we'll see if it's Jamal's after the takeaways here, is also his opinion. I don't think you can, you don't get paid a lot more for holding or no management. You're certainly not getting paid any more for bracketing orders. As a matter of fact, now your $40 have become $80 that you're leaving on the table. For somebody who has FOMO, boy, I wouldn't want to live like that, right, Jamal?
Yeah, I mean, look, I'm either going to do no management or closing winners at some point.
Okay,
One
all
of
right,
the two.
I can take that. I'll take that as a win. Next slide, please, for the takeaways. Takeaways, bracketing underperformed. Jamal, are you listening? Bracketing underperformed closing at profit targets and both underperformed the unmanagement approach. I mean, so basically, if you're going to do something here, don't do anything. If you're thinking about doing bracket orders and let the powers that be work for you, selling at the money put spreads and hold to expiration. Now, again, we looked at the worst times to put this on. We looked at all the good times to put it on. So a very good study here, very just study, like right and justice. When you're right about direction, 70% of the time, as at the money put sellers have been, they're looking back in this time frame, locking in winners means giving up max profit. Because remember, you were right 70% of the time because we were in a bull market at all-time highs. Jamal and I just talked a moment ago, are we going to have another 20% return this year as we had last year and the year before that, or maybe closer to 15 or 17% in SPX, right? I think the NASDAQ was 20. I think even the S&P 15%, but it's semantics at that point. Bracketing trades would perform best on days that began bullish but ended up sideways. These happen even if we've been in a persistent upward trend. So maybe we have a big up move in the market and you're looking to maximize your return on selling a put spread, so you're going with the trend here. It might be best to put a bracket order in. Combining entry strategies and management mechanics, you have fine-grained control over which outcomes are good for you, 100% there. Short premium positions even have built-in forgiveness. You often don't need to be right, just not too wrong is good enough. And I think every trade that we make, whether it be in 0 days or otherwise, when we're selling premium, that's what we're hoping for, right? I mean, we're not looking to be 100% right. We're just like hoping not to be 100% wrong.
Yeah, I mean, I think that's exactly it. I know that's how I feel on a day-to-day basis.
Sure. I mean, that's the forgiveness part of being strategic with your strategies. Like those futures that Nick sold 15 handles lower than where they're trading now, and I bought him back almost 15 handles lower than where he sold them, which was pegging the bottom of the day. Somebody usually says, how does daddy do it? I mean, I'm not your daddy, obviously, but my son would say, how does daddy do it at this point? You're not going to say it? You don't have to.
I'll refrain for now.
You're a man's man. I get it. It's hard for you to say. It's okay. Let's take a quick look at the market before we take a break. That was a great study, by the way.
Yeah, it was.
Tracking orders, looking at the best case scenario, some of the worst case scenarios, coming with a little bit. I mean, it looked like it was like other things in life, Jamal. And I know being a man that you are, there's good. And then there's better, but there's no bad, right? I mean, in other things in life.
I thought you were going to say there's good, better, and then there's best.
Good, better, and best. Maybe. I've always got good and better.
You should have heard the conversation going on in the office the other day, talking with the guys on the desk. Todd and the rest of the crew. We were talking about good, better, best, and Klink is of the mind that good, better, best comes from. I forgot. I think who is it? Billy Williams? I can't remember who he said. Somebody during the Hall of Fame speech. I don't know where it comes from. He said it was, and then all of a sudden it turned into it's this like thing that comes from the Greeks. I don't know exactly. We'll have to get one of them on to talk about it. But it was really.
I'll tell you on the break where it comes from. I don't want to say it in front of everybody, but I'll tell you on the breaks where it comes from, which we're going to take right now. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up, and we've got my man Quentin coming in from the Tasty Trade, that trade desk you were just talking about, coming in right now. Even the S&P's up 26. We'll be back in 90 seconds. Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jamal, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this man. Quickly becoming the fan favorite. That's right, Quentin Dooley, my man. What's going on?
Oh, thank you very much. Thank you, Tony. I'm doing well. How are you?
I'm doing great, but you are the demo expert. I was in a meeting with you yesterday. You were tooling around the platform like a champ. So good job out of you showing every feature.
We got some new stuff coming for you guys, just so you know.
Yeah. Can't say anything right now. Shh.
Well, we can tease a little bit because it'll be available for beta testing to the public very soon. So we're going to have the current web platform as a downloadable desktop.
That's enough. That's enough.
See,
Ixnay on the whiznay on the buznay.
You said tease. Do you know what tease means?
Maybe listen, just like that mustache you used to have, okay? That was like a teaser. You didn't have like a full beard, like growing down long. That would be somebody who's committed to a mustache and beard. It's not a tease. You got to tease. You don't let them know what's going on. It's just like the mustache, just a tease.
It's true, because now I'm curious as what you'd look like with a goatee or a beard or something. You did tease me. It's true.
So, that's one nice thing. When Scott comes on, he can talk about whatever he wants because, he's the head honcho, right? So I guess I do not have that power yet. So maybe one day, but not right now.
You do not. You are absolutely right. You are absolutely right. Yeah. And I had to give him the back of my hand every once in a while too. So, don't make that happen to you. I mean, you can't do that.
Well, one thing we do have live on the platform right now to all customers is contingent orders. So we've got contingent orders on price that came out last night, I think. And so that's on the order ticket. You can click on advanced order type. That's where you normally go to bracket your orders. But if you want to change it to contingent on price, we've got that available now as well.
Very nice. Very, very nice. You are 100% correct. And I should have mentioned that. Did we send out an email to people and let them know? We should do that.
Ooh, I don't know. That's sort of not my side of the business.
I know it's marketing. They have different opinions than maybe the.
You know what, Tony? Though that actually
talks that actually every day.
That would actually work well with the market measure that we just mentioned. The idea of having a contingent order.
That's right. Well, check that out. So good job out of you. Maybe you can do a little demo on that in the future on one of your demos. You do them every what day do you do them? Go ahead, give it to me.
Every Tuesday.
Every Tuesday. See, that's called lobbing you a softball, right? That gives you a chance to talk about yourself and what you can do and say, hey, maybe I'll go over those types of orders on my next demo that I do on Tuesday.
Yeah, so next Tuesday, what we've got is the mobile app demo. So talking about, because our mobile app is really just like the trade desk in your hand. I mean, it's almost exactly like the downloadable desktop, just in a mobile platform. You can do almost all the features that are on there. So it's a pretty powerful mobile platform. You can obviously like buy and sell stock, but you can also do all the complex options trades from it as well. When I was at a firm before Tasty Trade, I would trade during my lunch break on my mobile app all the time. And so you could do just as good on that.
I find myself doing more mobile trades too now.
Yeah.
Damn, the kid is good, Tony. He said that is our trade desk in your hand. Holy cow. I mean, that was great. That was great.
He is good. He is good. He is good. And you can do those bracket orders if you've downloaded the latest version of the mobile app. If you have the order already set up from the desktop, you can change and replace it, I believe, but you can't open it as a new trade from the mobile app as of yet.
Correct. Yeah. I mean, that's common. When we get stuff done, like on the product side, we sort of just want to push it out as quickly as we can. So like, why would we wait to hold up like the web-based platform, the desktop platform, just for the mobile app too? So you can do it all on the like computer software, and then mobile coming soon.
Very nice, very nice. All right, good job out of you. Good job promoting yourself a little bit there too. Even yes, what's been going on before I get to your list and ask you that question. Today we had was all about numbers, right? We had unemployment earlier this morning.
Yes.
We had the tariff decision by the Supreme Court, which they kicked
or no decision.
Which is something I talked about yesterday. Kicked the can down the road, which is what I said volatility was looking like. I didn't think it was going to actually happen, but it certainly looked like volatility was saying there's going to be no decision, because volatility would have to be higher if they were going to come up with some decision like this. It looked like they were going to kick the can down the road to a later date. And that's exactly, well, I mean, I don't know if that's exactly what they did. I haven't been able to read about it yet, but that's been the preliminary news, that they're kicking the can down the road. They're going to decide on this in a future later date. How's the trade desk phone calls been? Have they been focused on the numbers, or have they just been focused on trades? Has it been SanDisk, which has been all over the place, which I hope people on the option side, if you want to scalp stock, I'm all for that. You got plenty of movement there, but I hope they're not trading those wide markets in SanDisk. But what's been the soup du jour on the trade desk?
Yeah, so actually it has been about the numbers in the overall market, because if you were looking at the expected move like from last night and at the open, it was about like 40 points. And now it's closer to like 25, 30 on the ES.
Yeah.
And so, there were actually a lot of customers, when we move almost 0 points yesterday from close to close, it's like, what's their 40-point expected move for? And so, we're talking about some of the numbers, some of the non-farm payroll. Me and Tex love hearing about that, the non-farm payroll and stuff like that. So, it was actually, less metals, because we've got the metals talk nonstop, right? But some overall market, like more volatility in the market priced in for today than you would expect based on, like the 30-day volatility, right? Because we're seeing a 40-point expected move with a VIX of like 14, 15, right? You're not really typically seeing that as much when it's been around like the 20s overall in the week.
Very good. Yeah, good. I'm glad that we have an informed customer. All right, why don't you give me your list?
All right, let's get to it. Top 20 symbols going through the system and their IVRs. At number 1, we've got Tesla, 8, SLV, 89, NVIDIA, 6, Apple, 18, Intel, 51, Oklo, 39, GLD, 56, Netflix, 44, Micron, 43, Amazon, 31, Google L, 31, MSTR, 28, APLD, 13, IBIT, 30, Palantir, 24, TQQQ, 19, Goog without the L, 31, AMD, 28, SoFi, 19, and Meta, 32.
You know what I find interesting about this list is that our people are still trading the tech names, even though they've been really quiet for the better part of a month. A lot of the tech names are still being traded heavily.
Yeah, and I think that comes down to strategy, because you get better markets in those that are more widely traded, and by that list just showing if it's being traded at Tasty Trade, it's probably being traded everywhere. That's where you're having probably the most eyes. The most eyes are going to be the most liquid markets, and that's where you want to be. I'm actually glad that some of the other kind of fringe stocks are not on that list consistently, which is nice. You always get that day, or you had it back in the day when the meme stocks like a GME or American Airlines has a huge move, and everybody starts running there. Just like on the floor, when you would hear a noise, all the way in that corner that never had any of the room and never had any noise, we'd all run over there and see what was going on to see if there was any money to be made. I think we all kind of move to where the noise is as retail.
Yeah, and honestly, I think if you looked at OCC's volume and website, you would see a lot of these same names. I mean, they're the same ones, same 20 names that have mostly been in there, Tesla and Apple and all those. Actually, Apple, I don't know, was Apple on the list, but Tesla, et cetera, like those have still been the heavily traded names.
Very good, sir. Very good out of you too, Quentin. I appreciate your time. Jamal, thank you so much for coming in. Even the S&Ps have settled in here up around 20. They've been basically unchanged for a moment on the day, maybe down 1 or 2 ticks, and they've been up around, we flirted with 7,000, 699.75 for all those people who talk about, stop orders at roundish numbers and stuff like that. You can throw that out of the book. We don't have any more expansion on these, alleged stop orders around 7,000 or something like that. But we've been around 7,000, which is about 20 handles higher than where we are right now. Kind of an inside day. We'll see what volatility does. /VX down 16 cents. Russell and the NASDAQ still the leaders in the clubhouse, Russell by a skosh. Jamal, thank you so much for filling in the last hour for Nikki. And as always, Quentin, thank you so much for coming in and updating us not only on the top 20 list, but what's going on the Tasty Trade side, on the trade desk. And I made a little bit of light about your demos. They're very beneficial to all of our customers, so I appreciate that too. We're going to take a quick 90-second break and come back. We got more Tasty Live, I believe, with Liz and TP again. Jenny's still under the weather with that mystery illness that's going around and in every school, if you have a high school or anything else like that around. We should get a vaccine for that. All right, we'll be back in 90 seconds. Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That handsome brunette to the left of me in Flame Shirt Friday is Mr. the one, the only Thomas Preston.
Hey, Liz, thanks for having me on again. And yeah, broke at the Flame Shirt just because it's Flame Shirt Friday. And you know, I was talking to Jenny about this a little bit. And she says, you know, TP, Liz is very jealous of the Flame Shirt.
I am. She knows me very well.
I just wanted to kick it out there. So if you're watching at home, if it seems a little tense between me and Liz today, I think it's because of that.
It's clearly because of his Flame Shirt that I can't find anywhere. And one day I will have. One day I will have. TP, I cannot say thank you enough for joining me again. Jenny is on the mend. For those of you just joining us, she's on the mend. She's doing better, but you know what? We've got TP, so we're going to use his knowledge. So thank you.
I'm always happy to do these shows with you and Jenny. We have a lot of fun, and it's a different vibe. You know, it's you two guys have your show and it runs every day, and it's the best content, and everybody loves it. And I don't take anybody's place, is the way I think about it. It's just a different perspective. You have different questions for me than Jenny does, right? It's just they're great conversations. I love doing the shows with you guys.
I'm just glad that we actually got to see your hands, because I thought maybe they were attached behind your back from the cattle committee. That, yeah, per our discussions yesterday, we know he is okay. Everything is good.
Yeah. So before we started, we were going back and forth a little bit with the production team. And John, I asked, it's the guys who are a little bit older. Do you remember the Oprah Winfrey lawsuit versus the Live or the Cattle Association or whoever it was back in the early 90s? John remembered it. I remembered it.
That's crazy.
That was when the mad cow disease was a thing, and they sued her for talking about mad cow disease. And I think she won, but you don't mess. And Liz, your point was, if they're going to go after Oprah Winfrey, they're going to go after Tom Preston.
That's correct. I just Googled it because, I've got the internet at my fingertips right now. The Oprah Mad Cow lawsuit began in 1996 when Texas cattle ranchers sued her for $12 million. Wow.
And Oprah Winfrey makes that in like
2 hours, so it's not a big deal to her. But it took up a lot of her time. I know. So anyway,
it went on for 2 years. That's what the internet's telling me. So that's pretty interesting.
So I have to, just to preserve the bandwidth here when I do the shows remotely, I don't have my platform up. Liz, could you just please pull up on the futures, just /LE and see where my short put spread in live cattle are?
So
Okay, it's down 40 cents.
We never got to put it on yesterday because my platform went down, but we were going to.
That's okay. Yeah, I'm short the 232 with 28 days.
It might be better today.
I sold mine at 67.5, so I'm up about 5 cents on it. Not a big deal, but I'm okay. Down a little bit, I'm okay with that. I'm okay with it.
It was the 232.230, right?
Yes, ma'am.
I'm going to ship it, so we're in it with you. You know why? Because my brain works so bizarre that if I don't have a trade in something, I don't know where it's trading.
Oh, you don't.
I don't.
You don't. It's if I have something to work. It's like I'm not a huge sports fan. In other words, I don't watch a football game or basketball game just to watch a game. But if I have money on it, then I watch it. It's the same thing here. If I'm not taking risk in something, I don't really care.
Correct. And it is so much more fun when you have risk on in it, just like it's more fun watching sports when you have money on it. Sorry. Gambling commission's going to come for me. But yes, I agree with you wholeheartedly. All right, TP, what do you think about this market? I just have to ask. So we had the jobs report this morning, which made it go up. And then we got there is not going to be a ruling from the Supreme Court. They're thinking maybe next Friday. So
yeah, I mean, they're up again today. This is, I just think the news, here's what I believe, and I don't have any evidence of this. You want to talk about my conspiracy theory?
Yes, I do. Nothing
is that the news, the financial news media, they hear all the stories, they have all their contacts, things like that. And what they'll do is they'll see S&P is up 2850. Okay, of the dozen or so stories that we have, which ones support the idea of the market being up today? Correct. And those are the main. In other words, they come up with a reason why the market's doing what it is, as opposed to the market actually responding to anything. Now, you can come up with all sorts of counter arguments for that, Liz, and I know you especially can, because you've traded so many individual stocks, so many things around earnings, product, all that stuff. Yes, news can move the market. Yes, news specific to a stock can move a stock. I understand that. But a lot of times it's, like we were talking about yesterday, do we have any idea what a Supreme Court ruling on tariffs is going to do to the market?
No one does. Not a single person out there does, because in my limited exposure, I have never seen that happen before.
Yeah. And so I just think, like I've been saying, I just think there's going to be an upward bias in the market throughout the year. Yes, we're going to have down days. Yes, we will. Right. But generally, I think, for better or worse, earnings, I think, are going to be solid along the biggest stocks, like the NVIDIAs, the Microsoft, the Apple, things like that. And it's just going to pull the S&Ps higher.
I mean, I think we're of the same camp. It's interesting because for years and years and years, I'm going to go to the volatility real quick. For years and years and years, I was always betting on a down move. And that is switched to me. Oh, good. We're filled in live cattle.
Take a fill, Liz.
Filled in live cattle, which is amazing. That's our first fill. Administratively, before I get into the VIX, because we just got filled, I want to show two things that I did this morning. Everything will be pushed out, but I just want to show for intensive purposes, because we talk about things during the show. Typically, Jenny and I will trade them live on the show, but because I have TP and I wanted to gain his knowledge, I did it right before the show. Just took profits in a calendar that we did in STZ for earnings, and I took profits in a Jade Lizard we had in JD, because there was only
nice.
Okay. Then the third thing we have is we got filled on our live cattle. While I'm doing this, just because, let's go back to LE. What would you put a GTC in for? Like, do you put a GTC in for this order?
I did not, but you certainly could. So I'd put it in for, I don't know, 30 cents or something like that. You sold it at 62.
So I just went to 50%. I just went to GTC 50%. What's interesting here is I'm going to ship this at GTC. I don't think, you cannot close GTCs when it's between sessions. I don't care. That doesn't affect me at all. I hope I can't cancel it and I get filled.
No, I would admit, with a product indifferent mindset, I don't treat live cattle any differently than I would treat the SPX, bonds, Apple, Tesla, anything else. It's just another symbol, right?
Yes.
It's just another trade.
Can I talk to you about something
ahead.
that I heard today that I'd never heard before? Okay, so the whole Venezuela, we got their oil, yada yada yada. I'm not talking politically about that, but so what they were talking today, literally, I was like, you got to be kidding me. So this is called CL. It's called light sweet crude. Okay, and I'd never known why, because you told me why it was called live cattle yesterday. I had never heard this before, but they were saying that the oil that we took from Venezuela is sour heavy crude.
Right.
I didn't know that. I didn't know there was another oil.
So it's all due to I believe it's the sulfur content in the oil. You pull this stuff out of the ground, who knows what you get in that oil, right? Yeah. Tin cans, dog hair, whatever, right? So I think I believe it's sulfur. Some oil, depending on where you pull it out of the ground, has more or less sulfur in it, or some mineral or whatever in it. That defines whether it's light, sweet, or heavy.
Heavy sour, which I thought was crazy. Is there? Right. I mean, and I hate to put you on the spot because I didn't ask this. So
okay.
The I don't know is an answer too. Can you trade sour heavy crude?
You can. People do. I mean, certainly the Venezuelans do. Yeah. I think there's probably, you can probably trade it over in London or something like that. You probably trade it in New York. I don't. Okay. If you have, we can get into the weeds a little bit. The basis between light sweet crude and heavy crude is known. Okay. So it's not, it's $1, $2 or whatever it is. The people who are actually pulling this stuff out of the ground, who are storing it, who are using it, who are refining it, know what that basis is. And maybe there isn't a future for that heavy crude. I don't think there is. There might be. I don't think there is.
Well, once again, I'm just like parroting what I heard, but they said it's used for like asphalt and things like that instead of.
Right. And so but you can buy it. You don't have to buy light sweet crude. That's for gasoline. And like you just said, that's for asphalt and whatever. Or it just costs more to refine it.
We need to put an oil pump on your Texas ranch. I've been watching Landman, and I really think you need to do this.
I believe, and this is, I really don't want to get into this because this is a whole other discussion. I believe that I own the mineral rights for my acreage. So in Texas, because oil is such a big thing, you may buy a plot of land, but only own the surface.
This is what Landman is all about. You can either own the top or the underneath.
Right. So I can put a house on my land, but if somebody owns the mineral rights underneath, they can put an oil rig on it, and that's legal. And there have been violent conflicts over the past 150 years in Texas to determine what that law is. And it's very well documented in Texas law. But I think I own the mineral rights.
I think we need to give you a hard hat, because you should wear a hard hat during this process, with a camera on top. And I would like you to put a new show together, and it's going to be TP's Landman.
TP Landman. TP trying to, A, grow tomatoes, B, strike oil. Yeah.
Correct. This would be a fantastic new addition to the Tasty Live network.
Hey, really quick. Okay, so that's crude oil. Let's talk about nat gas.
Yes, let's do that, because this was your cherry bomb today.
I did a cherry bomb yesterday about UNG.
Oh, it's UNG. Okay.
And that's okay. We could go to either. UNG is down at its lowest price ever.
Yep.
Okay. And I put the order in. I talked about the 10.5 put with 21 days yesterday. I did the 10 put instead after today's sell-off. I sold the 10 put for 24 cents.
Wow.
And yeah, it's at 24. I'm not saying whatever. I just got filled at 20.
I mean, it was probably up a little bit higher than this earlier.
Yeah, and so the point is, I just thought, sure, let's take a look at UNG. And 11, if we just look at these options really quickly, 11 is a good even price. So if we go down, let's say 1 point to the 10 strike and up 1 point to the 12 strike, so the ask price of the 10 puts is 24. The ask price of the 12 calls is 38. 38 is higher than 24. Therefore, the skew is pointed towards the upside in UNG. That's it.
UNG has a drag, doesn't it?
Yeah. So let's.
It'll be dragged out.
Yes. So let's talk about that because I brought that up yesterday in the cherry bomb. So if you type in the NG future /NG, what pops up automatically is the G contract, the February contract. Okay, nothing wrong with that. And that's down today, right? Yep. And if you go back a little bit more, it was higher. It's not the lowest it's ever been, I don't think, but it's very low. Okay.
Yeah, it's not the lowest it's been. And if you want me to put this is hold on 1 second, let me go so you can see it as a whole. It's definitely been lower, and it was lower in August.
Right. Now, the question is, Liz, and you don't have to pull up UNG because we already saw it, but UNG is way lower than gas. Why is that? Because, like you said, the drag. Okay. Now, you can't see it anymore. But when you compared, let's say, the December nat gas to the February nat gas, it was positive. In other words, the Feb nat gas was higher than the DEES.
Right.
And what happens is, just like VXX, just like USO, the ETF owns nat gas futures. It trades futures, not the physical. Okay, UNG doesn't own a big thing of natural gas. They trade the futures. So at some point, and it's about 2 weeks before the futures expiration, it has to roll those futures to the next month. When the futures are in contango, where the back month is higher than the front month, that creates drag. So they're selling a cheaper future and buying a more expensive future.
And correct me if I'm wrong, but as the month goes on, they're required to put more and more and change. It's not like on a certain date, it's like, boom, we're done.
I know that's true in VXX. I'm not sure if that's true in UNG. I'd have to do a little bit more digging with that. And they may start, like VXX does about 4% a day. I don't know if that's true with UNG, but the point is still the same.
Yeah.
That is, when you have a negative, when you have contango, where the back month is higher than the front month, rolling the future from the front to the back costs money. But here's what's happening right now. Remember, the price of NGG6 is $333.
Easy. All threes. Okay.
Change the NGG6 to NGH6.
NGH6. So we got 3333.
Yep.
Now it is 2718.
Oh, that's called backwardation. Okay. And the terms don't really matter so much. Yeah, if you want to go, this is like, old futures lingo and stuff. All that really matters is that the March is trading less than the Febs. Okay. Now, what does that mean? Well, when the UNG fund has to roll its Feb futures to March, they're getting a little bit of a credit for it. In other words,
selling higher and buying lower.
Exactly.
Yes.
Exactly. That helps UNG. So that's Does that mean UNG is going to go higher? No, it doesn't. It really doesn't.
So my question to you is, when you're in contango with UNG, because we were told this a long time, we had gotten an email from somebody who got willed, like literally willed a portfolio full of UNG. And they're like, I'm just going to hold it for life. And we're like, whoa, 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 hold on. Because that is the one product that will typically it's got the drag. I think it's very rare to be in backwardation, correct? Or is it, which is more common?
I don't follow NG futures that closely like I do, let's say crude oil or other stuff or bonds, whatever. But it happens. It's happening now. And I was a little surprised, and I don't know what the weather is up there by you right now. I don't think it's
right now.
I don't think it's bitterly cold up by you.
It is not. Today it's going to be about 60.
That's crazy for early January in Chicago. Yeah. So the point is, you're running around in a t-shirt, okay? Correct. And and that sort of puts, they don't need natural gas to heat their homes. Okay, great. So that can put downward pressure on UNG and could be part of the reason why UNG is down again today.
Do you check contango and backwardation before you would sell a put in UNG? I'm only saying this because you have this wealth of knowledge and you know all about it, but you don't necessarily need to go check it before you trade UNG, do you?
No, you don't need to. And all of that is priced in. Okay. Like I was saying, this doesn't mean, just like the skew. Okay, just like the calls trading over the puts, it doesn't mean that UNG is going to go higher. It just means that the risk in UNG options, the market sees the risk is to the upside. Okay, that's fine. They could be wrong, they could be right. Just like the contango or the backwardation right now could add a little bit of bullish bias to UNG, or it might not. It's just one little part against, let's face it, weather across the northern U.S.
Right.
Okay, who wins? Backwardation or Mother Nature? Mother Nature. Okay.
Absolutely. Okay, thank you very much for going over that with me. I'm actually going to sell something in UNG. I'm going to get a little bit more aggressive and go with the 11s. You were in the 21 day though, right? I'm going to go 21. Mm-hmm. I'm going to be with you. I'm going to sell the 11s for 58 cents.
Yeah. And that's in whichever one you choose, there's no better or right. They have slightly different characteristics. You're being a little bit more aggressive. You're going to collect a little bit. You're going to collect basically almost double the premium, more than double the premium, and maybe be able to get out of that trade for a 50% profit faster than I can.
Okay, I'm actually going to switch my trade. I'm not going to put too much time in this because Jenny and I will go over it, but I want to go to the big dog natural gas and put in a broken wing butterfly to the downside.
Okay.
Because, TP, this is kind of what I like to do here. I just want to see what my risk is. Okay.
Yep.
$850, I'm going to bring it in. We're only collecting $80, but we were only collecting 80 cents in the other put, and I was putting up about the same price of $400. So here I just grabbed the expected move for the cycle of the 18. I sold 295 put, bought two 290s, and then I broke the wing, making us have an 80-cent collection.
Perfect.
Now, when I trade this in my account, TP, my favorite thing to do is just put it in naked, and then I immediately put an order in. So if I were to trade this and I get filled for 43 cents, hypothetically I'm filled, I would then turn around and put an order in to buy the 285 for 33 cents, locking in $100 and keeping my butterflies.
Yes. So in other words, it's all about, even though it doesn't seem like Liz is exiting the trade because she still has a position on, because she's taken the risk off of that trade. If she can buy that 285 put for less than the credit that she sold that ratio spread, that back, whatever you call it, in the first place, or the broken wing butterfly, if you can buy that embedded short put back for less than the credit, you have that whole mess for free.
And locked in a credit. So in this situation, it's not going to happen immediately. But when I get filled on this, so if I get filled at 43 cents, I'm going to delete this and delete leg. Then I would go in and buy this and I would put a GTC in for it for 34 cents. So then I have a butterfly on that I've taken in $100 on.
Right. And that's how a trader thinks about portfolio or position management, I should say.
Yeah.
It's all these little, using the flexibilities that options give you. Okay. You don't have to close the exact position that you have to take the risk off.
You don't.
And that's what, when I was sitting in the trade desk years ago, it was, hey, have this position on, how should I close it? Well, you can take the risk. If you're worried about the risk, here's a trade that you could do that's cheaper than closing it. Because sometimes closing the trade, it's more commissions for closing a three-legged trade than putting on one trade. And also, the markets might not be great in some of those options. I'm just saying.
I know. And that is one way that traders, once you understand how to layer these things on top of each other, you can take your risk off the table without closing it. And sometimes, in certain cases, when you're taking the risk off the table, you have a shot of making more.
Right. Well, see, that's just it. If you are lucky, and that's what it is, it's not so much because you're a genius and saying, gee, it's going to go down to my short strike. But if you're lucky and nat gas actually drops down enough and hits that short strike of the butterfly, it's a huge winner.
It is.
That's a lottery ticket.
But that is a lottery ticket. That's why I like to lock in something instead of taking the profits. Okay, TP, I know we wanted to talk about a box, but you were calling it something else.
Oh yeah. Okay. So I had a customer ask me about a strategy that I think I might have done with you. Couldn't remember if it was Jenny or not.
Yeah, we played the box bit.
Called a square. Maybe it was we called it a square or something like that. But I think it was the box that we were talking about in the SPX.
I feel like there should be an asterisk on the bottom of this. Get your helmet on. I love the box. It's a great trade. But sometimes people, when this is first shown, look at us and they're like, what?
What are you doing with this?
Yes. Okay.
All right. So the box spread in the SPX, and I'm looking at the SPX specifically, okay, because it's European style cash settled. Okay. And I don't even want to go into why that's important. Let's go down into the March options just for the sake of argument.
Okay.
All right. So, and can
I do an expected move box? Just
yes, sure.
It'll be easy. So I'm going to sell a put, buy a call. I'm going to pop it in, and then you can talk about it.
Yeah. So and then sell the call and buy the put at the higher strike.
Yes, I just did the expected move. I probably should. You know what? I'm just going to make it symmetrical. So
yeah, you want to buy that.
Yeah, I'm just going 66.40 to 72.40. So I'm going to sell the call.
So did you buy the call?
Yeah. Here's the box.
No, I think you sold. Did you?
Drive it in wrong. Hold on. This looks right. So hold on, I'm going down.
Yes, it is.
Sold the put, bought the call, and then I sell the call and buy the put. So I made it I'm gonna actually do something else for us because I don't want it to be there. I was told there'd be no math today, so I'm gonna go down to the 66. I'm gonna go 6,000. I'm gonna keep round numbers for us.
Yes, round numbers make this whole thing easier.
And it doesn't really matter where you put it, but the wider it is, it's a little easier to explain.
It's all the same because this is an interest rate trade.
Okay, there we go.
All right. So this is now 600 points wide. Okay. Yep. What did you just do? You bought a 6,600, 7,200 call vertical. Okay.
Oh, yes. Oh, you're going from the vertical. Yes, 100%. On the call side, I bought the call vertical.
In the put vertical, you bought I go low strike to high strike, but you bought the 6,600, 7,200 put vertical.
Correct.
In other words, you're long the 6,600 call, long the 7,200 put.
Yeah, and I want your knowledge on this, but my brain works totally different than yours.
Okay.
I would say synthetic long 6,600, synthetic short 7,200. Meaning, you've got the combo and the combo.
Yeah, that's fine. So in other words, long the 6,600, and there are 5 different ways to look at this thing.
Correct.
They all end up at the same place. So what Liz is talking about is if she buys the 6,600 call and sells the 6,600 put, that is a synthetic long future.
That's traditionally called a combo.
Yes, the combo, buying the combo. Up on the top strike, it is if she's selling the 7,200 call, buying the 7,200 put, she's selling the combo. So wait a second, Liz, you're buying the combo, selling the combo. you're flat. What's the delta on this? It doesn't even have a delta. Zero.
No, it will never.
What? There's no delta on this. You don't have any market risk on this thing. What this trade is interest rates. Okay.
And on paper, I want people to focus down here. I don't think you guys can see my mouse, but max profit is $470. Max loss is 0. And it's a lot of capital. Look, it's around the capital it's going to hold up the amount of the distance between the strikes.
Right. At expiration, this box, and I call it a box spread, okay, it's going to be worth $600. No matter where the SPX is. If the SPX is 0, it's going to be worth $600. If the SPX goes to 15,000, it's going to be worth $600. Why? Because if the SPX is 0, the long put spread is going to be max value. The long call spread is going to be 0. $600.
Correct.
If it goes up to 15,000, the call spread is going to be worth $600. The put spread 0.
Yes.
$600. So because there's 0 risk and it's guaranteed, I don't want to say guaranteed, but it's going to be worth a fixed amount at expiration. This is an interest rate trade. It's like a CD. It's like a T-bill. Okay.
And there is not a lot. I'm hesitant to say this. There's not a lot of gaming of the system here, right? So if you go in and you do the math, you're putting up, $59,000 to make $400 risk-free. I hesitate to use that term too, with a little asterisk next to it. Right. Risk-free for, this is 69 days. So if you go in and you buy a CD for about the same, you probably get wrapped around the same interest rate.
Let's do the math. And this is why I'm encouraging people. So let's do the math. So if I make, let's say $400 divided by, let's say 50. Let's say I don't sell it at 435. I sell it at 400. Divided by 59, 600 is equal to $149. Oops, I did that wrong. Sorry.
I'm changing that. I just pennied it up, so your math is on there. So we made $400. So 596.
Right. Is 0.0067. Okay. Mm-hmm. And if there are, how many quarters is this? If I multiply that by 4, that gives me about a year's worth of interest.
There you go.
Okay. So and if you do, you could do this more precisely, but if I do times 4 is equal to 2.68. So percent-wise, that's about 2.68% per year.
Yes. Now I'm just going to talk about the gimmies and gotchas of this because I have traded quite a few boxes in my time and I'm sure you have as well. Now, what I do is SPX has very wide markets. Now you've got 4 legs with decently wide markets on both sides. And you can, if you're doing it very small, get it for, the mid market here would be making $500. You just did it with 4. That's why the interest rates were so low. You can, and I've seen Tony from Mexico do this where he'll put them in just because he'll put them in and say, oh, maybe I can get filled and make $6. And he leaves the order in. And because of the legginess of it with wide markets, occasionally you can get filled for a little bit more percentage.
Yeah. But like you said, Liz, you're not gaming the system. All the market makers know this trade.
Everybody knows it. The other thing too, TP, is the BOXX, and I'm glad somebody in the chat brought this up because I've been doing boxes. I had an investment that I needed to protect for something else, and I was like, my husband doesn't understand. He gave it to me. I go, once again, disclaimers all over this thing, but I was like, I'll protect it. Don't worry about it. I'll make the interest rate, and it can be liquid whenever we want it gone. I don't have to call someone to get back out of my CD. I don't have to do anything. Mm-hmm. And so I've been doing these for quite a while, and then I discovered BOXX, which is the same thing as this, just someone else doing it for you.
And I have to look at what the BOXX actually is. Whether it's a portfolio of these boxes or whether it's just the calculation, but it's just an interest rate.
It's just an interest rate. I'm going to clear this. I just want to go to this so people can see it. The chat brought it up. That's the only reason I'm doing this. BOX. Yeah. And I've been in this as well. Take a look at this chart. It's pretty interesting. This is the interest rate.
Yeah. Yeah. So you're earning a little bit of interest rate every single day. That's what it's capturing.
Yes. And this looks more violent up move than it is because do not let this deceive you. You're going in 2 cent increments. This is only from, 12 to 15. It looks like you're making a lot of money. It's steep because it's going up, but it's not as steep as it looks. You
made about $3 over 8 months.
Correct.
Now, okay, great. If you want a relatively risk-free trade, if you have somebody who's uncomfortable with, I don't know about those 0 DTE spreads. I don't know about that. Okay, fine.
Yes.
Right? This could be a way to stick your toe in the water of trading. Let's check out the SPX right now. Where is it? I sold some put spreads earlier.
Oh, you're in the money, TP, because we're up 30. Spoods are up 31.
Yeah, I should be up a little bit. Again, my platform is closed to maintain the bandwidth, so I can't see what's going on, but I should be okay in that trade. And I did put a GTC order in to buy it back for 50%. So I haven't gotten filled yet. We'll see.
I'm going to ask one question only because I haven't really thought about it. I do a long box. When we've done it before, and that's what we just showed was a long box.
Yes.
What's the caveat or what's the gimme and gotcha for a short box?
Okay, so why would you sell a short box? So if buying a box is lending money,
correct,
earning interest, selling a box has to be borrowing money and paying interest.
At a lower interest rate, hopefully.
So here's what some people do. If I have a debit in my account, in other words, if I bought a lot of stock and I'm buying stock on margin in my brokerage account and I'm paying broker plus whatever, if I'm paying a high interest rate on my short cash, okay, in other words, I have a negative cash balance and maybe they're charging me 7.5% interest on my cash, on my negative cash. If I sell a box and generate a lot of cash in my account. So in other words, Liz, you were just buying a box for $59,000. Selling a box would generate $59,000 of cash in my account. What does that do? It takes my negative cash balance and makes it positive. Now I'm earning a little bit of interest at the brokerage firm. And what else am I doing? I don't want to get into tax arguments here, but when that trade expires and I take that $600 loss or whatever it is, or $400 loss, that's a trading loss, not an interest rate.
Yes.
Okay. So it can be deducted against my trading earnings.
I feel that this show is going to get a lot of emails. I really do. I love it. And I'm very glad we went over that. This is something that I feel like every trader from the floor knows, but not a lot of retail traders know. Right?
This is the sort of thing, when you've been doing this as long as Liz and I have been doing, a lot of this is second nature. And because we don't do this, sometimes it's like, well, do you forget about it? No, we don't forget about this stuff.
And I will say it's still quoted quite a bit on the trading floor, TP. You'll hear it like open outcry. They'll be like, give me the box. They give you the strikes.
Because you're down there. Tuesdays and Wednesdays, you and Jenny are down there and you hear it. And so this is something, and because the SPX is a big product, it's something that institutions use. There are people who borrow or lend money who trade the box.
Correct.
Okay, it's a big thing. Retail traders, it's almost like it is not complicated. Okay, it's not complicated. It's just a trade that most people don't think about because it's a zero delta interest rate trade. Who needs it, right?
And it is very. It used to be very for bigger traders, and it is still for bigger traders. If you looked at what we just did, each of those, whether you're buying it or selling it, it was holding up $60,000 either way. Okay, so that's why a lot of times your retail investors kind of shy away from it. And does it work in XSP? Probably on a smaller scale. But when you look at
Well, what you could do a 10-point box, Liz, and
it's
do it
much
for
smaller.
$900.
Yeah, I'll show that. I'm just to make it a little bit more enticing, I'm gonna go a little bit farther out though. I'm gonna go to April. I'm gonna buy this. Wait, I like to, my mind works so bizarre, TP, I have to buy it first. So I have to go down here and I'm going to sell the put, buy the call. There's my long. And I'm gonna go to the 7,000 and I'm gonna buy the put, and sell the call.
Yeah.
There we go. So this is on a smaller scale. You're still using $10,000 here, but you're making $90 or $100.
Yeah. So, and the interest rate is going to be exactly the same when doing the APR. And my mistake was I was thinking we had to multiply the first one by 5, not 4. Anyway, the argument is that this is an interest rate trade. Having this in your back pocket is helpful when you are trading this stuff. When an option price doesn't look right, okay, why is that SPX put this price but the SPY put is that price? Why aren't they the same? Things like that. Knowing all these ins and outs of the different relationships between the strike prices and the expiration months and stuff like that clears all that up.
It does.
Experienced traders know those relationships, so nothing is a surprise. Liz and I never see, they're giving money away here. The market makers are making a mistake. They don't know what's going on. There's free money here. That doesn't happen.
Arbitrage doesn't exist.
No, it doesn't. Now, it exists to the point where if you have the tens of millions of dollars to build the electronic pipes to and from the exchanges to get instantaneous fills and instantaneous quotes, yeah, there are people that maintain those arbitrages. The arbitrages have to be maintained.
But it's so quick, a layperson or a gen pop could not take advantage of it.
I can't do it.
I can't do it.
I can't do it, and I don't care to do it.
Correct.
I can make money doing other things. That's the point. And so anyway, that's the SPX box. I hope that cleared it up for the people that have some questions about it. As you said, Liz, it may just open up a whole other can of worms. You know what? Hey, the only thing worse than being talked about is not being talked about.
There you go.
Oh my God, Liz and TP, they were talking about that stupid box trade again.
Okay, and on a total side note, my favorite, like I said, when I'm on with you, I try to glance at the chat, especially because I know Frank is out today. Frank the Great.
Frank's huge.
My favorite, and it was a while ago, was saying that you are J.R. Ewing in disguise because you're a Texas oil man. Like that chat was the best.
Hey, okay, I don't want to get too personal. Do you even know who J.R. Ewing is?
Yes! Are you kidding me?
Because you were like 3 or something. I don't know.
How were you? We're the same age, and it was so fun. Like I remember watching it as a child. It was the biggest.
Oh yeah.
It was
who shot JR?
Yes, and we all had to wait for it. There were theories going around.
And then the wedding. So 2 of them got married. Wasn't there a wedding?
There was a wedding. I can't. If you were going to test me on names, I couldn't come up with it right now. But yes, there was a wedding.
So all right. So so I'm looking at like CNN and all this stuff, and then the question is Taylor Swift and who's the football player?
Oh, Travis Kelce.
Oh, is that going to be the wedding of the decade?
Yes.
Like, do people care about? I'm sorry. But do people care about this?
I don't know if it's going to be private or not, but I got a man on the inside, and I think I know when it is. Really?
Well, you're huge. You got connections all over the place.
We'll see. I'm not invited, but I do have a man on the inside. Okay, so let's move on because we have. We have
Twitter.
I want to get to Twitter. I want to say thank you to everybody because TP number 1, you're a crowd favorite. Oh my God.
Oh, yeah.
Find this. Is this on Amazon Florida 7? This is the best thing I've ever seen in my entire life. I'm going for it. Okay, so thank you, Florida 7. But
that was very
Fabio.
cool.
I love Fabio. He's from Italy, too. Okay, so hello, Liz and TP. Would you consider a trade in Rio to take advantage of the recent fusion with Glencore? Let's take a look at Rio. I don't know what that is.
Is it?
I'm assuming it's a
Rio
stock,
Tinto?
not the. Yeah. Well, I'm going to type this in slow so I can see what it is.
Rio.
RIO. It's just
Rio Tinto.
Okay.
Yeah. I don't know what the story is. Let's take a look at it. It sold off today. So Fabio and everybody, It's down today. Okay. Main thing is IV rank 36%. Okay. So that means the option prices are relatively rich, maybe. Now I go into the trade page. Okay. I go into, let's go to 42 days. 42 days. The stock price is $81. Okay. That's kind of in between 80 and 82 and a half. Okay. So go down, let's say down 5 points from 80 to 75. Go up 5 points from 82 and a half. Up to 87 and a half.
7 and a half, yeah.
So it's a little bit it's a little bit biased towards the upside. In other words, $1.25 versus $1.20. Would I sell a put in here? Sure, why not? Maybe the 70. Let's clear that out.
Okay, so somebody said this is, and I don't know if this is true or not, this is up there. This is one of the biggest mining companies in the world. And I say thank you.
Okay. Yeah, and if it's one of the biggest mining companies, it's down is gold down today?
Gold is up.
Gold's up again.
I look over here, GC is up 1.15%. But
I know silver's up. Silver's up again.
The miners are up too, which is crazy.
Fabio, I don't know what's going on with Rio, but if gold is up and in GDX, like you just pointed out, Liz, if that's up too, maybe I'd think about a bullish trade in Rio.
Yeah, I don't mind it. I wanted to see, I actually typed it in, but I didn't see it. I just want to see how much capital. I know you go through your process. I just like to see how much margin. Because sometimes when you look at these, if the margin is astronomical, it's something that I'll stay away from. Just because the brokerage firm can deem whatever they want, margin they want, and sometimes they see something that I don't.
So $1,500 to make 262, it's a little steep. It's a little steep. So if I take this off, Liz, it has a 87% probability of making 50% of its max profit, which is about $55. Would I be comfortable making $55 versus $1,000 of capital over, let's say, 6 weeks?
I think that's not a good return on capital for me over 6 weeks.
It's not great. Now, if I took that off if I could take it off for in between, let's say in 3 weeks, maybe. But the problem I have with this, Fabio, is it's kind of an expensive capital wise.
So what if I did something like this, where I've got a 250 wide, I had to bring it in. So I'm at the 87, 87 and a half. So it's a very baby trade, meaning I can only lose $165 and make 85.
Yeah, something like that. It's got a 76% P50. I like that. It makes you, where's your theta? Makes you 16 cents a day. That's the trade I would do if I were bullish in Rio.
I'm just going to ship it. We'll be with Fabio.
Fire away.
Perfect. Okay.
Take a fill. Boom.
Take a fill. I like it, Fabio. Thank you. And then I still can't believe Florida 7. That's hilarious. Okay, then Ajit comes in. Let me make sure Ajit is great because he puts everything down for us. I want to make sure we get to it. Okay, so, and I'm just going to retweet this for everybody. Ajit comes in every day. He's a very, very, very seasoned trader. TP, I had the pleasure of meeting him. He's traded in lots of different environments, lots of different markets, and I love that he puts it out there for us. So he's just selling a naked put. He's big by big in SPX. So he's in the 116 expiration. So he puts everything up. There you go. Short-term premium, euro exercise, and cash settlement. So I'm going to retweet his so everybody can see it, which I love. And we'll take a look at that. That's a little too rich for my blood. For this account, naked put in SPX.
Well, you can. I mean, and it's the same thing with Rio. You can sell a put spread in SPX. And one of the points I make, and if you have the capital to sell naked puts in SPX, but SPX is $6,700. It's a big product, right?
I'm actually going to go to his exact strike. What put was he in? So the
68.10.
He's selling the 68.10 in the 16 day. Okay, so let's go to it so we can talk to it. Clear this out.
It's the regular Jans, the Jan AMs, right?
And he was the 68.10. 68.10? Okay.
68.10.
Now, this is extraordinarily enticing when you look at it. You've got a 12 delta. You're collecting $7 in premium, but you're putting up $124,000 to do it.
Yeah. And so you can certainly do that. And why would you sell something 7 days for $7,700? Because that, in the way I think about it, that probability of making 50%, that 50% profit is going to come very quickly, probably.
Oh, yeah. The P50,
Hey,
now the
just-
P50 is missing when it's this near term, correct?
I don't know what. Yeah, that's a development thing. Hey, Liz, just really quickly scroll up and take a look at the expiring options, or just move the expiration. Click the expiration button down there to minus.
To the ones that are expiring today.
60. Yeah. So in other words,
Look at
in
this.
3 days, it's
Yeah.
50 cents.
Yeah.
In 4, that's why a Jeet would consider doing that trade. And if I put up $124,000, would I be comfortable making $600 in 3 days? Maybe. Yeah. It's if you do that over and over and over, people wonder, how do you make 35, 40% a year? This is how you do it.
Yeah.
Okay.
That's in very, very short time. The other thing too, TP, that I find fascinating with the SPX and the 0 days and how they've grown in such is that it makes it very easy to define your risk in the one that's expiring today. Look at this. You can't go 7 days out and buy the 6,900 for 30 cents.
Right.
If you did, so say I went even to a Jeet strike. I'm going to close all these again. Sorry. Yeah, here we go. The 6,900 here is $20.
Yeah. Hey, Liz, just buy the 6890s. Turn it into a short put spread. Or create a short put spread and see what credit you get for that. So that, sell something 6,900, buy the 6890s or the 80s or whatever. So geez, I'm taking in $200 for $800 capital requirement.
And
I'm sorry.
You don't have to wait 45 days. You don't have to wait all that stuff. It's in 7 days.
I'm not going to pick a fight with Ajit because the guy knows what he's talking about. And I'm not going to pick a fight with you because you know what you're talking about. But if I can make $100 over $800 of capital over 4 days or even 7 days, that is an even higher return on capital.
It is. It very much is. And you have less risk. It's just easier to sleep at night for the next 7 days.
Yeah. Right.
You can get some rest. I'm telling you, if I had that position on that Ajit had, I don't know, I would be staring at the SPX.
Well, and you know what? People say that writing, and this is going to generate a whole other level of emails. People say that motorcycles are a cheap psychiatrist, right? So you don't need to go to therapy if you're riding a motorcycle. I'm going to argue the same thing. If you're trading options, it's like you don't need to go to therapy. You have something else to focus your attention and your concerns on.
And TP, you are absolutely spot on accurate. And these SPX, and I don't know why, I have no idea why this is happening to me, but I feel like I need a support group for this. When I put the 0 DTEs in, I keep an eye, I can have a spread that's small. I mean, I've got accounts all over the place. I'm watching that like a hawk. And the one time I was losing on my SPX, I was like, oh my gosh, I can't believe that I'm going to take a full loss on this. I looked at my account. It was the highest it's ever been in its life. But I was like so distraught by the SPX one lot. Do you know what I mean?
I think I'm a much better husband when I'm trading.
I agree.
I'm not like, honey, what are we doing? So I'm not like, like bugging my wife. The poor, So anyway, trading options is so much fun. You stare at them, you watch them, you manage them, you do all. It's like, hey, let's learn about boxes today. Okay, let's learn about contango today. Okay, you don't even have to trade them, right?
It is the most fun thing there ever was.
It is fun.
Only because I know we're running out of time. I really wanted to get to this because it's just more of a public service announcement. I love Jack Tucker. Okay, so watch this. Jack Tucker he's the one who kind of is inspiring a lot of people. So this is today, 2 double tranches of 0 to T SPX. This was 22 hours ago, yesterday. And then on Friday, he posted, and I love this because Jack Tucker is showing us how much he shows it. He shows his opens, his closes, and a lot of times he's taking in, $24,000 in premium in one day in these GTCs. Mm-hmm. But what I love, and I'm glad he did it, is if you go back to his stuff, he also shows his losers.
Yeah.
So, I forget what day it was. It was Friday. Yeah, here we go. So then that's what I'm saying. There is real risk in this. And I like when people are so open with it, where you show your wins, you show your losses, because anybody who says it's all wins isn't playing the same game we are. They're lying.
I have, when I open up my platform again after the show, I'm going to see little negative. In other words, I'm going to see a bunch of red. Not start, but I'll have a bunch of losers on. I have, I don't know, probably 50 symbols on. I would bet at least 15 or 20 of them are losing money today. I would bet. I'm just taking a stab. I saw them earlier today. It probably hasn't changed that much in the hour. Most of them are green. I usually make money trading. Sometimes I don't.
So I will tell you, I've had days where everything is red, but I've never had a day where everything is green.
It is not because of me. In other words, it's not because I'm any kind of genius, but I think I won't say never. I've had a couple of days where they're all up.
Where they're all green?
And that's just, and again, I think it's just random.
It's the flame shirt. It's the flame shirt.
If it's the flame shirt, if you have 5,000 days of this stuff, eventually one of them is going to be, I've had all reds, like you said, and maybe I think I have. But really I don't really care so much about that. It's mostly that, am I making money overall?
Yeah.
Right? Is my net lick going higher? Yes, good. I'm going to keep this process going. And being able to take a loss. I hate losing trades. I do. They stink. I've been doing this for 30 plus years. I still hate a $5 loser.
Yeah, but they don't hurt as much as they used to when you first started. They don't. Honestly, I don't like them, but it's still kind of like it's an inconvenience instead of a pain.
Because here's the reason for that, Liz. First of all, we know that we can recover. You and I have been doing this long enough to say that, gee, we take that little loser, but we're overall profitable. We've been doing this for long enough. We also know conceptually that having a loser is part of the process. It doesn't invalidate the strategy, which is selling high probability options, collecting theta, managing winners, et cetera, et cetera. Having a loser doesn't mean that process is wrong. Okay, it's not like, gee, I've been buying stocks, when they're the moving average does this or that or whatever, and now I'm down. I can't say whether some technical analysis is correct after a string of losers. I can't say that. But what I can say is that even after a string of losers in our approach of trading, still does not invalidate that strategy.
Absolutely. Well said, TP. Well said. And on that note, you're going to have to go put your cowboy hat and go start drilling, because we are done and dusted for the day, TP. Done and dusted. Boy. I'm going to guess. Spoos are up 42, so I'm going to guess you're out of all your put spreads.
I get a fill. Take a fill. Yeah, because I try to maintain bandwidth when I do this, so I shut down most things. I do have my emails open, and I got a fill.
Well, we appreciate your undivided attention on the TP and DLD show. TP, I want to say thank you very, 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 very much. It was a wonderful show as usual. You go enjoy your weekend, and everybody out there, remember to trade small, trade often, laugh with us, learn with us, and watch TP and the LD show. I'll see you Monday, everybody. Thank you, TP.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
designer, they wanna buy me. Baby, I'm too pricey. Yeah, I'm cherry, I'm nice things. I'm ice cream, I'm melting. Well, I'm high speed, wanna bet. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see? Perfect timing, I'm on the run. Wait till and tell me something. Said I love it, I'm working, I'm perfect, and you know I know I'm worth it. Well, I'm high speed, wanna bet. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see? Let's go.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal. And
Go Canes.
It is a fantastic Friday. What a game yesterday. How about it? How do you feel?
I am beyond excited, Mikey. I am beyond excited. I've already made plans. I'm heading to Miami next Friday, so I will not be with you next week this time. I may or may not, probably, I think I will. I will wear my Canes jacket to the floor, to Seawell floor next week, Thursday when we go. I'm hyped up, man. I mean, it is what it is. There's nothing better than right now. Not only did my Canes just win, and they're going to the national championship, which is in Miami, by the way. But then we got the Bears coming up this weekend, and a spirited game between the Packers I would expect to happen.
Yeah, I'm deep in the fantasy football stuff, and I've listened to a lot of different podcasts and data, and many of the analysts are expecting that game, of all the games on Wildcard Weekend, they're expecting that game to be the highest probability of a shootout, which makes all the sense in the world to me, because both of these defenses can have moments of glory, but both of them are probably the worst when you pair them with the offensive power of the Bears and the Packers.
Well, let's be honest. I mean, both of those coaches know each other pretty well. It's not like this is their first 2-3 times playing. They've been playing against each other for a couple of years now. And so you could tell that they know each other pretty well. I think I saw a video. It's hard to really tell what you see these days, but I think I saw a video of Ben Johnson talking about their relationship. If it is, there's a rivalry. He shot it down, which means there definitely is a rivalry between the two of them, and that's great. That's what you want for those two teams. So yeah, like you said, they know each other well. It's either going to be, I don't know. We've had the shootouts. It's hard to say. It's either going to be a shootout. It's going to be a 10-7 game. Who knows? But it's going to be exciting regardless. And I expect us to prevail. I know we're only 1-point favorite, but that just tells you how close it is because they know each other so well.
Yeah, it's going to be insane. And it's Saturday night. Everybody's going to be watching. It's in Chicago. I mean, what else do you want? It's just going to be insane.
I mean, every place is, every house, every bar is going to be full. Everybody's going to be, there's nobody in the streets. The only people on the streets are the people who do art, I think. I just think even people I think who do art are going to be watching this game. I think people who don't care about sports are going to be watching it. This is a big one. It's going
to be great. Can't wait for it. And then Sunday,
I'm going to have to leave the house. I can't watch it with my wife. I mean, she's a Packers fan. We're not going to watch this one together, I don't think. One of us is going to be very upset afterwards.
Yeah. And then, of course, Tasty is filled with Buffalo Bills fans, the employees at least. So there's another banger of a game on Sunday. That one's going to be tough for them, though, because Jacksonville has been unstoppable as of recent games. So we'll see.
Who's favored in that game? I wonder.
Buffalo.
I tell you though, Jacksonville's been on a tear in the last like 6 games.
Mm-hmm.
I think I kind of like alluded to this on Monday when we were talking to Ryan. I mean, look, I'm being honest. Like they've been on a tear, and Trevor Lawrence is looking the best that he's ever looked in the NFL. So, and they're at home, like you said. So I don't know, man. I don't know.
It's gonna be crazy, but I can't wait. It's gonna be a very exciting weekend. Hoping for that Bears dub, and we'll see what happens. We will see what happens, but
yeah.
I'm almost on the verge of being right here. Yesterday, I asked you, what do you think is going to happen? Inside or outside, up or down? I said outside up. And yesterday's expected move was like 40 points-ish, 42, 43 points, I think. So we're right there
42.
To the upside.
Yeah. I know you got to say the expected move was at least as we're sitting here right now, the expected move was right on this one. As a matter of fact, forget right now, the range on the day is well over 42 points, and that's really what I think we were really talking about. So the range has been. I judge these expected moves by range more than anything, and it's been a over 45 point range, which is higher than what we've had over the last 9 and 14 days. So. You could call this a volatile day, if you will. The front month VIX is 16 and a little over 16 now. Could close below 16 by the end of the day. The G contract, which is what I bought a VIX mini in. I bought that a few days ago at 18.40, I think at the time. It's now 17. It's the first time it's crossed below 18 since we started the year. So another day where markets are quiet. And positive, and vol is low coming in.
Yeah, it's another VIX day. We were talking about this on last call yesterday, that the VIX one day was spiking into the close yesterday. But I think it makes sense for any number that comes out pre-market, just because people are speculating, people are protecting, and that's going to drive that VIX one day up. But I realized that I have not yet done the volatility watch list here. So why not walk everyone through it? If you're joining us, if you want to join us on YouTube, we're streaming live there. Head to tastylive. You'll see this video front and center. But as you can see, I've got F, G, H, and J for the VIX watch list codes. Can you see this pop up?
Yeah.
Cool. So let's just do this real quick. VX
K. It's next.
K. Yeah. So K6, add it to vol, ding, and then M. And this is how we do that. BXM.
This is how we do that.
This is how we do it. I guess I should change the name of vol 25 to vol 26, but
yeah, maybe. Maybe.
Yeah. So this is taking me a little bit longer than I had hoped. So I'll continue to do this, but this is how you get it done. If you look through all of the contracts that are available, but ultimately we'll keep adding to the list as they come in. But this is how I like to look at volatility. This is how Jamal likes to look at volatility. Just looking at the curve. When we talk about contango and backwardation here, I've got all the way through June now. So we can see where we are flattening out in the summer, but we're still in a very steep contango here, over 1.5 points between F and G, over 1 point between G and H, and then basically 1 point between H and J. So standard steep contango. When the VIX is low, this is what you should expect to see. And as we're seeing the markets just climb higher, 0.5% today, just over 0.5% today, is pretty typical. I mean, this is how you get your years that are up 15, 20%. Like this is how it happens. Even if it's not a violent rally, it's just grinding day to day, slowly but surely.
This is pretty normal. You're right. I mean, I feel like when was Russia Ukraine? Was that in 2023 or 2024? I don't even remember. Or was it 2021? I don't remember. But my point is I remember coming into January of that year, and this is kind of how it looked. Markets were doing this. Vol was doing exactly what you just showed, that strong contango, and then all of a sudden, boom! Right, like it just happened. So this is that time. I think this is that kind of market where some type of news could spark something. I think a lot of us thought, well, I shouldn't say us. I really didn't. I really didn't think that coming into this week, that Venezuela situation was going to spark something. But we all looked to see if that was going to be the thing, and it wasn't. But this is usually the environment where that type of thing happens.
Yeah. And of course, that can change. Like middle of last year, we had that big sell off with the tariff stuff. And that will very quickly change the volatility landscape. But until the volatility landscape changes, I'm expecting this chart to be relatively similar. Maybe not necessarily as aggressive to the upside, just because when you think about the things that moved the markets higher, it was the introduction of the AI sweeping change across tech, that kind of thing, where now maybe we'll just, drift until something changes. But until something changes, I'm going to expect to see this kind of just flat up to the right, and we'll see grindy movements each day. But again, things can change quickly, so still got to stay small, keep that risk in check regardless.
Things can change quickly. That's one of the reasons why I like having, something cheap that you can hold on to for a while. I don't like the idea of buying like near-term puts. I like the idea of, like I said, the put butterfly that you have on 6,800, 6,700, 6,600. I duplicated that yesterday myself, and that's the other reason why I have the VIX Mini, because again, it's not that expensive right now. I bought it for 1840. I'm only losing like $60 on it, I think, total. $60 essentially. I mean, that's pretty easy to do versus buying some $300 put. Probably, I mean, the most puts you're going to buy are probably like somewhere around $3 to $10. I mean, that's a lot of money, and it's just going to wilt away until something actually happens.
For sure. And yeah, when we talk about hedging, I mean, I like this butterfly we have on, and even into this rally where we're just piercing through highs, it's down $100, but there's still 40 days left. And these are the trades where it's actually better if time passes and then you get the big sell off, because then this butterfly can appreciate more in intrinsic value, since there'll be less extrinsic value preventing you from realizing that max intrinsic value. So,
and it's like 2.5% to the midpoint, right? So that's exactly a nice little like downturn. That's kind of what we got last year through February, about 2% until it got real, and then it got a whole lot more. So,
yep. We also put on a little Super Bowl in SPX yesterday from the SIBO floor. This is up 80 cents right now, which is nice, but basically just sold a 10-point wide put spread to buy a 5-point wide call spread and routed that for a 55-cent credit. So you can see I collected a credit. I can sell it out for another credit. And that's just because now this long spread is appreciating a little bit more than the debit I'd have to buy back this put spread for. So we'll see what happens there, but playing for a continuation here in this low VIX environment. We also got a couple of...
Oh, you got the net on? I never got filled on that.
Yeah.
Oh, nice.
Well, you can get a better price now.
Yeah, I can. I think I will do it. Yeah, cool.
But yeah, 20-point wide crab trade, long March, short Feb, long the 220, short the 240, long the 260 there. And then same thing in Palantir, March, Feb, long the 210, short the 220, long the 230. Both of these are $300 trades, really small, but still will benefit from a nice reversal to the upside there. And
every time I see this ticker, it reminds me of a movie that from back in the day with Sandra Bullock, back when Sandra Bullock was bursting up on the scene. This movie called The Net. It's very dated now, I think. I think it was like somebody was trying to steal her identity or something like that, and I can't remember, like trying to erase her and trying to get rid of her. It was weird.
But I'll have to check it out. I was thinking about old movies the other day. Double Jeopardy came to mind. Have you ever seen that one?
Yes. Are you kidding me? First of all, let's just hold on a second. Ashley Judd. I mean, come on, dude. Are you kidding me? Are you serious right now? Yes. Of course, I've seen the movie, and it was great. And I think we all learned that rule in that movie. It was like, wait, did she just really say that?
Yeah.
It's a great movie.
It is one of the, I guess, many loopholes of the judicial system, but yeah. Crazy movie. Love a good revenge movie though. Love it.
Yeah. Who doesn't?
MCL popping in a big way today. I'm going to get rid of this position I have just because I've got the contract, I've got the ratio spread. I've been staring at the extrinsic value because this is all I can really make going forward on this position. 2 days ago, it was like $150. Now it's down to 30 cents. So I'm just holding risk now at this point. Like 5 days, yes, I can make another 30 cents, but you could also see crude oil drop below 55 and now I'm taking losses. So the risk far outweighs the reward going forward now for this position. So I would get out of this and we'll call it a day. I have to do this separately.
I've been trying to get out of mine. Yeah, I've been trying to get out of mine, but it's a little bit wide. And so it's been hard to sort of get out of the options, unfortunately. But I don't know. I just need to force it action, I guess.
Yeah, I'll throw it in there. I'll wait until the ratio spread is filled and then I'll close the contract itself. But yeah, I'll look to get back in. Maybe if we sell off here, since this is now kind of reaching that recent high that we've traded over the last couple of weeks. And this is a big green candle here. Something else that's moving that our friend Glenn pointed out, the dollar picking up some strength today against the franc specifically. This position is almost out of the woods. I actually closed all those peso positions I closed. I had the peso, long the peso against the yen, and then long the dollar against the peso. And both of those were small wins. So I closed them earlier today, but still keep my eye on this dollar franc position. I refuse to close a losing position in here. So I'm just waiting for this to continue a little bit, but looking at the chart, definitely a big move today on some positive news. There's the call ratio spread in MCL.
Yeah. Yeah. Wow. Yeah, that is quite the move in dollar franc.
Yeah. Love to see it. Love to see it. So yeah, I was filled on that MCL ratio. I'll get out of this contract as well. And we'll call it a day here with a nice little $200 win. Again, this was a position that I rolled. It was a $200 loser. And then I rolled into the new contract, threw on a call ratio on top of it. Now it's a $200 net win, just getting back to my old break even around 57. So nice trade there. But other than that, haven't really done too much. Google is one of the tech stocks that's ripping today, up 4%. Or sorry, up 4 points, up 1%, but reaching new highs. What do you think about this move in Google? Do you have a position on here or just waiting for earnings?
I got nothing. It has been on the move more recently. I don't know. It seems a little elevated up here. I wouldn't buy up here personally. I know some people have thought about it. I don't blame you. I mean, I could see. I'm not interested, but I mean, I'm not going to talk you out of any trade. It seems to be a little elevated here, but maybe this is the beginning of a stronger run. Who knows? I'm not really sure.
Yeah, I hear you there. Using the quick barbell approach here, looking at the futures, we just talked about crude, copper up 2%, silver up 6%, ripping. Love to see it if you're a silver bull here, but this has been kind of crazy. I mean, we haven't really moved, but over the last 2 weeks, these intraday ranges have been nuts. It's like 5% every day in either direction.
Mm-hmm.
And then to the downside, natty gas. This thing is dead until it's not. We'll see what happens there, but everything else kind of within 1%. Nothing to talk about there, but it is Q&A Friday. So if you have any trade ideas, questions, whatever you want to hear us talk about, could be even bears, props, let us know in the YouTube chat. Join us on Tasty Live on YouTube and throw it in the right-hand side chat. I also have the big deal posted there, tastytrade.com/big deal. For new accounts, a 4% cash match up to 10K and 30 days commission-free trading. So if you're watching and you don't have an account yet, that is a nice little promo for you to test out the platform and do it commission-free for almost everything.
Yeah.
All right. I'm going to the top of the YouTube chat here. What do we got? Cutting out sugar, lost 15 pounds in a year. Yep, that'll help. That'll do it. Yeah, I think that on that note, the hidden sugar is always in the drinks. Always in the drinks. Even like ciders. Ciders you think is like an alcoholic drink, low sugar. Wrong. 40 grams of sugar. Crazy.
Yeah, this past year, God, it pains me to say it. I gotta give Tom credit. I think you drink this too. Those teas. I have never been one to like love drinking something that doesn't really have a whole lot of flavor. But in the past year, I committed to those teas and just things like that and like less sugary drinks, and it definitely has made a difference for sure.
Yeah, honestly, those teas, they're definitely an acquired taste. Like if you ask Nick, he says they're disgusting. If you ask me, I say they're delicious. But yeah, I have one of the sugar-free pure leaf teas. I have one like every day. It's a nice little pick-me-up in the afternoon.
Yeah, I mean, I have right now. Yeah, I mean, it's become a staple. It's on my list when I go to Costco. I get them. Matter of fact, they were out of them one time. I was so pissed off. I didn't have it for like a month. I was so mad. But yeah, they're good.
Yeah, I see them there at Costco, and I'm like, if I wasn't fortunate enough to get these free at work, I would rip one of these cases. But
it does make a difference. Like that's the whole point. Like these sugary drink, it does make a difference if you cut those out. It makes a difference.
Yeah, it's just like anything else. Compounding day to day, little things every day adds up over time. Just like compounding extrinsic value in MES and IBIT. IBIT, I'd love to see it rally a little bit more, but I mean, this position's basically just long stock until we get closer to 60. But I'll just keep my eye on this one, make sure I don't get assigned. Even if I do get assigned, it's not going to matter because if I'm assigned on the short put, it just becomes a covered call position and nothing changes. The risk is already 100 deltas almost in this short put. So, yeah, and then MES looking good there, and I know your MNQ position's looking good for sure too. But yeah. It's kind of one of those things where it's like day to day, not much to do, but then when you come back after a year, you're like, oh, I've collected thousands of dollars on this thing, and I don't even remember doing it. You know.
Yeah, it's really nice. I mean, just seeing that. I mean, I know it doesn't last forever. I'm enjoying it now. I know there's going to be times where it's not positive or a lot less positive than it is now, but it does kind of help overall. Just kind of the conscious trader mind, just seeing that positive collection and gain that you've had over the last however long you've had it.
Yeah. Yeah, it's a nice one. And MES does have a nice return on capital. Good question here. Do you look at CVAR when you do these strangles in these year-long trades? How much capital do you need? So for the MES position, it's using $1,300 in buying power. It's about a $30,000 notional. So you're definitely getting a ton of leverage there. But at the end of the day, if you assume that your worst case scenario is, let's say, like a 30-40% drawdown in MES, yes, there is real risk in that. But we do have tools at our disposal to offset that risk. So for example, if this put is tested and on the upside, we're just going to adjust it and get rid of short delta and just keep it neutral to bullish on the way up. But the risk is really to the downside because that's what can happen very quickly. And if and when that does happen, we still do have the ability to manipulate the intrinsic value risk, which will ultimately affect the buying power in the position too. So if we get tested on the 6650, we can roll this down to March. So like right now, if I were to do this, I could move this down to the 6450 for a scratch. If I sell this, so yeah, I can collect a small credit moving this down 200 points. And if that's not enough, let's say I do that and then we sell off another 200 points. Well, then I'm going to go to a much further dated cycle and go to like the 70-day, 80-day, 90-day, whatever it takes to get well out of the way of the move. And like even here, you can see the 6250 is trading for about 50 points, and that would bring us down to almost a 10% correction. So if I end up here, then I can put my flag in the sand and just roll this put going forward. But historically, we've seen sell-offs happen, recoveries happen pretty quickly thereafter. But at the end of the day, this is one contract, and I can afford to hold this thing if things go crazy. And that's really the key to these year-long strategies is, yes, like you can estimate your conditional value at risk. You can estimate how you can make adjustments. But at the end of the day, if chaos ensues and you do get a 30 or 40% sell-off in the market, you got to be able to hold it. Or buy options to offset it. That's another thing we haven't talked about too. Buying options, near-term options, it'll eat away at your cost basis, but it'll ultimately define your risk for a period of time.
Or sell a future if you so desire.
Yeah.
Again, that's going to be offset by the buying power will be offset by your position, so it's a possibility as well.
Yep. And in those crazy moments, like buying a really far out of the money put down here, that's really is what's going to reduce your buying power dramatically. And you're just going to have to, assume that you're going to burn that money. But if it comes down to it, those are the things you can do to offset it. 2 trade ideas for you. All right, let's check them out. Calendar in SLV at the 100 strike for May Feb. Wow. May Feb. Okay.
Hey, wow. We're out to May.
May Feb. Wow, the Feb is actually trading for $1. That's interesting. You have my attention. And this makes sense. Like if you look at, so this is one of the nice things about the recent moves in SLV is that you're getting high implied volatility. Like looking at May, just the implied volatility itself, May, June, July, August, like it trails off dramatically. You have 58%, goes to 55, goes to 53, down to 50. So you're paying for basically time value delta here, especially relative to the short option. 42 days to go, 12-point implied move. 126 days to go, so 3 times the amount of days, 18-point expected move. If the implied volatilities were 1-to-1, you should expect to see 36 points of an implied move, but you don't. So that shows you time matched implied volatility is not equal. Implied volatility in February is significantly higher, and you're seeing that here with the 67% relative to 58. So that's the only reason why this 100 strike is actually trading for $1. If we were in a normal environment, this 100 strike would not be trading for $1. That is for sure. And we could probably look at GLD as a good example, because looking at May, you've got, let's just assume like a 30% rally in gold would be similar to silver going to 100. And that would be 520, right? Buying the 520 for $2, selling the Feb 520. There you go. Yeah, it's trading for nothing. So this is clearly a high implied volatility environment for silver relative to something like gold. And you're getting that premium to offset it for sure. Kind of like it. What do you think?
I kind of like it too, actually.
I mean, at the very least, even if silver just chops around here, this $1 at the 100 strike would go to 0 if IV crushed. And yes, you'd be losing on your 100 call in May too, but this is a negligible debit here.
I mean, honestly, it's pretty, it's pretty interesting that thing is $1 bid for the 100 strike. I would challenge you to find another $70 name anything in the market right now and see if the February 70 something trading around the same price and see if February $100 option is trading for $1. Curious. Actually, now that I think about it, I'll find one in a little bit. That does seem bid.
I'm gonna get in 245. I also have a downside diagonal spread, so this kind of helps offset if we continue ripping higher. This May call can explode. The Feb one will continue to appreciate, but Feb will decay over time. May will decay slowly.
Just to kind of make my point, Netflix, which is an $88 name, the 100 strike call in Netflix in February is $1.62, and that's obviously what $13 higher, and that's $1.62.
Yep.
So just comparatively, that tells you how big that SLV 100 strike call is.
And Netflix has earnings too.
Exactly.
which is contributing to this premium. Crazy. So yeah,
to make my point, Cisco is $73, probably about the same price as SLV. You look at the 100 strike call in February, which also has earnings. It's nothing.
Yeah. Worthless. But yeah, there's definitely premium in silver, and this is one way you can take advantage of that cost basis reduction at the very least.
I like it.
I like it. Netflix earnings trade.
March. Netflix earnings trade.
So, I have a dud. The 105 7 days. This was from the 105 110 diagonal spread that I put on in November, likely from a post earnings rally that never happened. Or sorry, post split rally that never happened. So yeah, earnings are January 20th after the close. 7-point implied move on that $90 stock price. So that's pretty high, close to 10%. And then when you look at February and March, you only have a 9-point move in Feb and an 11-point move implied for March. So this is definitely one where I will be trading it. However, I think right now, given the situation, like the market's ripping higher and Netflix is down, I'd rather wait until earnings, because if I place this right now and then Netflix sells off another 10 points, now I have a far out of the money diagonal spread where I could have just centered it for earnings. So I think I'm going to wait till next week. And the week after is when they will actually announce. Wednesday, it looks like, after the close, on the 20th. So yeah. Tuesday. That's right. And it's after the close. Monday we'll have off for MLK Day. So Tuesday we will come back to this and check it out. But yeah, I think I'm going to wait just because it's having a hard time catching a bid, and I definitely want to play this to the upside.
Yeah, man, that stock it's been rough ever since the split, and then the whole talk of deal. Boy, it's been rough on there.
Indeed.
Wow.
SMH Iron Condor and Feb 310 300 394 hundo. Considering rolling up the puts if the market grinds higher. Could also close them. Feels like anything could happen. Yeah, so if you already have this on, which you do in Feb, your 390 400 is tested. The 310 300 is worthless, basically. It's trading for 20, 30 cents. If you roll it up, it's going to dramatically reduce your probability of profit. But at the same time, you're in Feb already, and it's going to be tough. Like even if you bought this back and you rolled it out to March, the 390 400 gives you like a 20-cent credit, which is pretty typical if you're just defending the trade and just trying to give yourself more time. But you're already in Feb. 42 days is a lot of time. This might be one where I just hold it in Feb, just because 70 days is a long time for a 10-point wide vertical spread. And buying this back, if you bought this back, the 310 300, and you moved it up to like the 350 340, you'd pick up $100 and offset your risk a little bit. But what is the pop on a 350, 340, 390, 400? 42%. All right, so it's not terrible. So maybe that's the move. Maybe you move it up to like 350, 340, give yourself 40 points of wiggle room here. But just keep in mind, the closer you move this put spread to the call spread, the more it will act like a butterfly, and the longer you're going to have to hold it to expiration for you to actually get the value out of it. And of course, the closer you are, the lower your pop will get. And you can see drop to 36 there, moving it up further, drops to 30, until you eventually arrive at this, which would be a 10-point wide butterfly. Like, yes, you would pick up a lot of premium to do this, but this is waving the white flag. Like, this is where you're just accepting loss, unless you get very lucky and you hold this all the way to expiration and you're at 390. So somewhere in between there, I think, is okay. Or you just kill the put spread, lean short, and hope for a bloodbath.
I feel like that was the perfect explanation, and it made me think of that meme where you see like there's like 4 pictures, and it starts off as the normal person, and then they have a red nose, and then all of a sudden they have hair, and then they become a clown. Basically, is what happens.
Hey, we cover all bases.
Yeah. As closer you get to that thing, the more it starts to become like a butterfly, and then you're just waving the white flag at some point.
Yeah. Yep. It's tough. But yeah, that's one of the, it's a benefit and a curse of defined risk trades, is like, yes, your risk is defined, but you really don't have much defense when you compare it to a strangle. Like a strangle, you can do anything you want because it's undefined risk. You can manipulate it infinitely. Where defined risk, if you're keeping the risk defined, it's a lot less maneuverability there.
That kind of dovetails into something we talked about this morning on the live show. I was on the last hour, and we did this market measure, which is really good. Go check that out. Just kind of about bracketing orders. You start off with a short put spread, and then eventually turn that short put spread into a butterfly, and it's just showing you the differences in P&L. So check it out.
Yeah. Love it. Palantir, 180. Shooting for a target of 180, I think. Yeah, it's right there. We'll see what happens. This is another one with earnings in a couple of weeks here, priced into the Feb 6 cycle. So still some time, but we got into this call crab, so we'll see what happens there. Looking for a rally. The movie was called The Net, says Mike.
Yeah, The Net. Yeah. Sandy Bullock. I don't remember. I can see the guy's face. I don't remember the exact premise of the movie, but I think she was dating this guy. Kind of, they had, I don't know. I mean, I can say it was. I think it was like kind of like a one night stand, and then it turned out like the guy was like not who she thought he was, and then he was like stealing her identity. I don't remember the exact deal. I got to check it out again. But I'm sure it's dated because again. Well, yeah, exactly. And it's kind of the thing that dates the movie a little bit is the tech, right? Like it's like watching what's the Will Smith movie where there's a lot of tech in it? It's from like 96. It's a really old movie. Enemy of the State. I don't know if you ever saw that. Really great movie at the time, but it's kind of dated now but they show you all this tech at the time that they're using to follow him and stalk him, and it's really old now and stuff that we easily know. But
yeah,
those are the things about those movies. It kind of becomes dated because of the tech, right?
Yeah. And one of my favorite movies when I was a kid was Boondock Saints. I thought it was the coolest movie ever. And then I watched it like 20 years later, and I'm like, this might be one of the worst movies ever made. Like it's just it's just like the flip as you get older. Like in your head, you still remember it as this sick movie. But we were talking
what is going on? You're like 0 for 2 on these movies. You're talking about the Jake Gyllenhaal movie the other day.
Yeah, the October Sky. We were talking about October Sky with Thomas, and I kept saying, like, you got to watch it. And then I was telling Jamal off air, I was like, I went to go watch that movie, and I rewatched the preview, and I was like, this is literally like a low-rent children's movie, and I can't watch this. Like, it's it's probably still good, but I shouldn't have watched the preview. I should have just turned it on. But I watched the preview, and I was like, I can't do this.
Speaking of previews, this movie keeps targeting me right now. This primate movie, where I guess we're like it goes ape. I don't know. It does interest me though. I gotta say, like I always did that with my boys. I used to pretend like I was like a monkey attacking them and like just go nuts on them, and they like used to giggle their asses off.
Yeah, I've seen the same thing.
I've always been enthralled by this movie, like by the idea of like a random chimp just going nuts on you. Like you have to run away from it. It's actually a good premise.
And to your point, I have seen like the live reactions of people watching in a movie theater, and some of these people are like losing their minds. And I'm like, these have to be paid actors. Like, there's no way that these people are like losing their mind over this movie. But maybe they are. I don't know. This is one we'll have to watch. We'll have to watch and report back.
We might.
With a big day on the upside today, thoughts on a call side broken wing butterfly or broken heart from Mike. I assume you're talking like SPX or something, but could happen. What time frame are we looking at? That's the question.
That's the thing. Yeah.
End of month. So broken heart would be similar. It's like the opposite of my Super Bowl, where I have a wider put spread to finance call spread. A broken heart butterfly would be a narrow long call spread, and then you sell a wider call spread above it to finance it. So like something like this, where you are buying like the 7,000, 7,005, 5 points wide, in right near the stock price or the SPX price, and then selling the 70, 90, 7,100 for 20 cents, something like that. But I'm already positioned for a bullish move, so I think I'm going to hold off on this one. But I don't mind it. You can get into something pretty cheap for a small credit.
Yeah, for sure right now.
I really like FIG. Lots of upside potential. How do I participate in this?
That was one of my top 5 losers on the year.
Really?
Yeah, last year. Yeah, because it came to market as we saw, and I just I was playing it to the upside, somewhere around I don't know, like I guess it doesn't matter. It was somewhere around July, August, I think, and it just didn't work out well.
Yeah. Yeah, these ones can be tough for sure, but I was expecting to see less options expirations here, but it's still trading like 2.5 million shares traded today. Options markets are fine. But yeah, I think for this one, because the realized moves have been so crazy, I might just stick with defined risk, keep it simple. Do a small diagonal spread, or even just like a leap option. If you're playing it to the upside, could be something to consider, but yeah, I think we will pass. Finally getting into silver now via short puts on LSLV. Expect silver to tank. Yeah, sometimes that's how it happens, but I mean, the premium here is no joke.
Yeah.
Like we're talking about a 10% sell-off in silver before you're tested in February, and you're still collecting almost 5% cost basis reduction on the notional risk. So plenty of premium here. And if you like silver, like I can't remember a time, I really can't remember a time where IV rank in silver was this high outside of this recent move here.
Yeah, no, this is it's insanely high right now for sure. There's just tons of opportunities you can do in here. There's no limit to the amount of strategy you can put on in silver right now in SLV for sure.
Yeah. And at a $72 price point, very digestible for pretty much any account size. Something in BABA, erratic behavior lately. I haven't traded a Chinese stock in quite some time for this very reason. Just erratic behavior. I don't know. I just never had a pulse on it. Have you traded these?
No, it's been a minute. I'm looking up when the Chinese New Year is. Sometimes they get a little more volatile around that. Looks like it's later this year. Sometimes it's usually early Feb, but this year looks like it's February 17th to February 17th through March 3rd. So it's going to be a minute. But yeah, no, I haven't traded them in a while. I just don't really see the reason.
Yeah, I agree. I think there's just other things that for me are more interesting. But
there really hasn't been much volume in them either. I mean, not major volume, right? And at the end of the day, that's what draws me to everything. So
yeah, I hear you there. RCL calendar, not sure how to manage. Short the 310 in January, long the 300 in February. Stock price is currently 311. Nice trade.
Damn, when did the stock get to $300? Good
God. That's a great question. Huge move. And it's not even at the highs. It reached 360 last year. Crazy.
Yeah. Wow.
Yeah, I mean, this trade's probably
what's their position? What is it? 300
It's a winning trade. 300, 310.
Okay.
So long the 300, short the 310. I think you probably just ditch it.
Yeah.
You got to be up. You got to be up money on this thing. And as you can see here, RCL is at 311. The spread is in the money. It has $1,000 of intrinsic value, but it also has an extra $700 of extrinsic value. So your long option, net with your long option benefiting you in extrinsic value and your short option going against you, you can see you have negative 737 and it's trading for 1737. So all else equal, if you hold this, if you were to like roll this position, of course you'd pick up more extrinsic value premium, but if the extrinsic value goes away in your long option, this 1737 goes to $10. That's not going to happen because your short option is going to expire and you'll just be left with that long option. But I think if you want to stay in it, the only thing to do really is to buy back the 310 from the 7-day and roll it probably into the earnings cycle, which is the 21-day cycle here. Since you're already long Feb, you could turn this into an earnings trade and pick up some more premium. You can move it to the 325 for $1, reduce your cost basis by $100, give yourself another $1,500 of upside profit potential. But that's if you're super bullish and you think it's going to keep ripping higher. Otherwise, I think you just close the trade as it's a nice one. And
for sure,
there is still a lot of premium left in the 310, but this thing's ripping around. So it's up to you.
And if you want to feel like if you want to chase it back to most recent highs, like Mikey mentioned, I mean, you could also just go out to start a new one. You could use some of the proceeds that you just had. You could go March, Feb, right? I was looking at like 350. If you wanted, you could roll further up and you go 350, 360 and buy 350 in March, sell 360 in Feb. And now I think that's about 500 and change. Mm-hmm. And now you're just playing with house money. You know what I'm saying? Like,
yep. Yeah. $500. And if you get up there, you make another $500. And it would be similar to what we just looked at there with way less risk for sure. But yeah, it's a nice trade.
Yeah.
Yogi Throat Comfort is the best tea. I have to say that tea is extremely good. And it tastes like it's flavored with sugar or whatever, but it's not. Because it's got licorice in there.
Does that mean what's that other sweetener?
Like stevia?
Yeah, is that what's in it or something?
I don't think so. I think it's just the flavor. It's just a really strong flavor, but it tastes sweet. It's a good one.
But there's going to be are there going to be scores of people getting cancer from stevia in like 50 years? Is that what's going to happen?
I don't know. Potentially.
Probably not. I mean, chemists used to taste their experiments, so, and a lot of them lived till like they were 80, 90, so it'd be fine. They had the beards. They used to put their beards in it. That's what we were told as chemistry, students. Like chemists would usually taste their experiments and like put their beard, like, they all these long beard. They put the beard in it, see what would happen. The beard dissolves. Okay, yeah. I'm not going to taste that one.
If my beard goes away, I will not be drinking this.
Dissolves immediately. Okay, I shouldn't put that down my throat. Cool.
I was assigned shares after selling a 7.5 short put on open that expired today. Is there a way to see when an assignment occurs in the platform? I'm not seeing any assignment history in the activity panel. It would be in your transactions panel. Yeah. So here, this little clock, if you go to your history and transactions, it would be listed there. Since it's not technically an activity that you're doing, it's a transaction that is from the broker's side. So
on the back end, yeah.
Yep, it would be there. But yeah, in your account, you should just see 100 shares of open at 7.5.
As long as you have that stocks clicked.
Yes.
which we forget at times.
Yeah.
I actually have mine turned off now because I'm so tired of looking at RSX. Jesus Christ. When can we get RSX out of the system? It's been 3 years. I already paid my dues. My God.
Yeah, I had stocks unchecked, and then I looked at my P&L one day and it was like up $500. I'm like, where is this coming from? And then I was like, oh, it was like Ford or something that was just ripping, and I had 100 shares from like 2 years. Crazy. What's the name of the tea at Costco? We're talking about the Pure Leaf unsweetened tea. It's a green bottle. It's in a case. And it's not in the freezer section or the refrigerated section. It's just on the rack.
Oh my God. Speaking of Costco, have you seen it since we closed it? It's actually going now, bro. Like, I know, right? Like, do we need to put on 1,000 I did say that, didn't I? I said if it was still going, I'm going to put on $1,000 calendar. I think I'm doing it.
Hey, you might as well.
But March,
when did I close this thing? We
closed it on Monday, I think, or Tuesday? Maybe Tuesday.
December. I closed mine earlier. No, what is this? Oh, here we go. Yeah, January 6th. Where's January 6th?
Tuesday, right? It was Tuesday. Yeah.
Yeah.
It was Tuesday. Yeah.
Yeah. I mean, looking back, it's so funny because right now I'm like, I wish I would have held that thing. But like looking back, if you erase this chart and you just look at this, like this, I'm still closing this. It rallied 50 points in 3 days.
I know. Well, we thought possibly that this morning that there was the news of the tariff stuff coming up, but then they pushed it to Wednesday, right? So maybe that's why it's still ripping, possibly. It's like $900 to do the $1,000 calendar from March to Feb, though. Jeez, dare I do it?
Yeah,
that's a lot.
Maybe you wait for earnings. That's still a long way away, though. But yeah, I mean, I like the recovery.
I do.
I still like Boondock Saints, people. It was my favorite movie when I was a kid. I'm just saying. When you hype it up and then you show it to someone, then you're like, ooh, this isn't exactly how I remember this going. It's still a great movie.
I love how it sounds like you're apologizing for it.
Yeah. I am a Boondock Saints apologist. I think that's it.
That's it. That's all.
I think we're out of time. But yeah, if you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Let's see what the Bears can do. Hopefully we pull out a W. I feel confident in our home crowd. It's going to be glorious. But yeah, fun weekend for all the football fans out there. Hoping for a Bills win too, so we can have a nice and happy Tasty Trade office on Monday. But yeah, if you have any further questions.
It will be really happy if somehow Indiana wins, and then Beth and Vanetta will be extremely happy.
Just happiness across the board. That's what we're looking for. But yeah, we will post those trades to the Tasty follow page shortly. And stay tuned because we got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place on Monday. Go Bears. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Turn it up.
What is going on, everybody, and welcome back to Risk and Reward. Today is Friday. It was a first full day of the trading week. We were able to take a few trades today, but we'll get into all of that. We are going to be running a solo session today, so we'll get into anything we want to get into today. We got some time on our hands at the end of the week. Let us know how your first full trading week went for the year, and if your New Year's resolutions is still intact. But we'll get into that here in a moment. Let us know what you're trading today, what you're looking at. We'll get into it. Dream team time. Gus is here with us in spirit today. In spirit. With that being said, we can go ahead and jump into the Tasty Trade platform, see what's been going on over there. Thank you. No, but not too much going on in the market today. We took a couple trades on the micros today. What's going on, Jared? Cart is down. Contrarian play. We can take a look at Cart, some Netflix. Netflix has been a boring one for me, Jared. It's been a slow one. We sold an out of the money put spread kind of on the dance floor right now. Let's see. 31 IV rank, not too bad. Earnings February 24th. Zoom out a little bit. See what we're working with. Go to the daily. I gotcha. I'm gonna avoid this one for now, but I mean earnings is pretty far out. It's not too much in the way. So we'll keep it on the back burner for now. What is this one? Cart. January 14th, February 27th. See what the options chain is looking like. Decent expected move, decent volume on some of the options. And I mean, it's trading decent volume, a little bit over 3.5 million volume, close to the April lows. Jared, I was looking at Netflix. Netflix is the only position that I have on that is a little bit more of a larger time frame window trade, I guess you could say. We've had it on for a little bit, but it's making new lows on the day. This thing has been getting hammered to the downside. So decent volatility, decent IV rank, and I mean, decent volume, but it's all been to the downside. So it was like kind of a sell the news kind of move it's looking like Netflix was having today. What's going on, Label? Did you place anything before the Super Court decision got pushed back? Had a 0 DTE Iron Condor and that came in quick afterwards, like 50%. No, I didn't really have anything else on today. We took a couple of trades on the micros. But I mean, I was looking at NFP this morning. We got a little bit of volatility today, but nothing too crazy outside of that. We took a few trades this week, so we'll go over some of the trades that we took Monday, Tuesday, Wednesday, Thursday, and then today too. But nothing too exciting outside of that. The market has been really impressive with how we've been rallying to the upside. I mean, another all-time highs over here on SPY. I'm a little bit more keen on QQQ, which isn't at the highs like SPY is, but it's another really volatile asset. So we had a little bit of long delta on in SPY. We took off a couple days ago since we're at the highs. But we're going to look to see if we can get more delta on in there, just as like a longer time frame opinion on the market. So maybe we get some short delta on, or maybe we ride the wave to the upside, a little bit of long delta. See what we got on MSTR. MSTR has been getting absolutely hammered. I mean, that Bitcoin strategy is not working out too hot for them right now. But Bitcoin itself has been doing pretty well lately too. I mean, we've had a little bit of a rally. We've been trying to hold. Let me go to, let's go to here, 91,000, almost 92,000 Bitcoin. I mean, we touched 95,000. So although we haven't really had any significant legs higher, I mean, we're just shy of 100,000. So the pullback has felt really aggressive. I think the noise and just the chatter in the crypto space has kind of died down a little bit. But whenever we rally near this 100,000 again, I'm sure we get a lot more chatter going on. Scalping some of the MSTR puts. I know MSTR, the volume is always really solid. I mean, 18 million volume, the IV rank is solid. Which option contracts are you scalping on the put sides? Are you scalping some of the shorter time frame ones? Since theta might not be as much of a factor for you if you're scalping in and out of some of those puts, or are you giving yourself a little bit of time and just scalping some contracts with a little bit more time on them? How are you kind of going about it? Other than that, a couple trades today. Let's go to the activity. A couple trades today in the micros. Some of these other trades were from the rest of this week. So starting down here on the 7th earlier this week, got the 6th, the 5th. But we'll get into the two from today. So that being said, we'll give this Netflix position a little bit more time kind of on the dance floor. It's not a very large position either, but at least we have some skin in the game with a lot of the Netflix and Warner Bros. Conversations going on right now. And with that being said, we can jump over to the TradingView platform, take a look at some of these executions that we've taken today. The market has been really difficult this week. It hasn't been easy. It hasn't been easy the first week of the year at least, but we've been able to manage the positions really well. And today the market opens up over here, 8:30. Let's see if we can zoom out a little bit. Let's zoom out a little bit. I know we were kind of zoomed in pretty far there. This isn't even the half of it. Immediately, I'll upload all. I need to upload all the trades from this week, so I'll get to uploading the ones that we've taken so far this year, and then I think we'll be updated on all of the scalps that we've taken. But it's not as many as you would really think, because if you think about it, there's a lot of executions, but there's a lot of risk management involved too at the same time. You know what I mean? So sometimes it'll be like taking a 5-point stop here, taking a 5-point stop there, taking another 5-point stop, and then catching like a 30-point run or a 40-point run or a 50-point run or whatever the case might be. So sometimes it's just being really particular and like that entry, kind of weaving in and out, looking for that entry sometimes. So on a single trade idea, sometimes you might have, 4, trades looking to position yourself correctly with the risk to reward that you're looking for. So then you get a little bit of a Christmas tree chart when you zoom out and look at a larger time frame. Kind of crazy to see how many trades we're taking over here. It kind of adds up. But if we zoom out a little bit, we took 2 today. And we were looking to get short near our value area high over here. So we were starting to get a little bit of rejection. We didn't catch this initial move to the downside. So that was unfortunate, but that was another, 40 to 50 to 60 point range that the market is at least offering. And we entered with a couple contracts. I'm going to zoom into a smaller time frame just so we can see, exactly where we're adding, those contracts to the downside. So first, the couple shorts that we had taken was at 25,765 and then 25,060. So, the average entry is going to be around 763-ish, somewhere around there. And then we stop out at 25,769. So that's going to be about a 6-point stop on 2 contracts. If we do the math, that's going to be 6 times 2 for 1 contract. So that'd be $12 per contract that we lose. So when we stop out on 2 contracts for 6 points, we know we're losing $24, right? $24. So 12 times 2, 24, and then we can kind of do the math so we know, what we're risking and if we can justify the risks that we're taking for the trade that we're taking. Let's clean this back up and then we'll go back to our second trade of the day. But keeping this risk intact is really what allows you to kind of stay in the game and take a stab at the opportunities that you want to take a stab at, right? Like if you're risking 6 points and you get stopped out, that's not really gonna, poke your nervous system too much. And you're not gonna really be gun shy to take the next trade. Also because, we're using a stop loss, we're stopping out of these trades when our trade thesis is invalidated. And when the market is ripping, towards these highs, this isn't a trade that I want to sit in for another, 25,759. We went to a high of 25,879. So, over 100 points of drawdown, we would have had to have taken if we didn't use a stop loss. So just being able to formulate your trades and put your stops near levels that invalidate your trade thesis is helpful. And then being able to, find those levels that invalidate your trade thesis allows you to make the judgment call on if this is the trade that you want to take. Like, does taking this trade make sense or not? And it's like, okay, well, I know if the market breaks this high, we're probably in a state of imbalance, which we might go seek prices higher to the upside. That invalidates what I thought was going to happen. So I don't even want to be in the market at that point. And if I can identify something like that when we're, 12 points away, 15 points away, 12 points away, that's attractive to me. If there's a potential for the market to at least run, twice, that range. So if we're risking 12 points, if we have the potential to capture 24 points to the downside, a trade like that might be a little bit more attractive. And, you might catch 36 points, you might catch 40 points when you were initially risking 12 points. And then now you kind of have that 1 to 4 risk to reward coming into play, 1 to 3 risk to reward. And just being able to identify those trades you really want to take. So we can live to trade another day and then at least be happy with the decisions that we made. Waiting for IBIT to rip, some calls. Yeah, we'll switch over to Bitcoin here in a moment. We can take a look at some of those crypto products too. What's going on, big deal? Finally made it in. These are 15-second candles, and we're just zooming into a smaller time frame so that we can get a little particular on where we were adding and where we were stopping out of these contracts. So, like if I go to the 1 minute, it'll just give it to us from a larger time frame perspective. And I know it's a very small time frame too, but it's just whatever, the time frame that you're comfortable with, because regardless of you trading on a 1 minute, a 15-second, a 5 minute, regardless of what it is, if you're risking a high or you're risking a low, it's going to be the same exact price point, right? Like the high on a 15-second candle, if we're looking at the swing high, the high on a 15-second candle, or if you're on a 5 minute, time frame, it's going to be the same exact high. So it's just whatever the perspective you want to view it from and whatever you're comfortable with, trading. But if we come over here, like for example, if we come over here, right, like we get stopped out at 25,769, right? What is that? That's near over here. Like we're on the 5 minute chart. I know the 15-second chart is very quick, but if we're on the 5 minute chart, if you were trading off the 5 minute and I was looking at the 15-second, we still would have been stopped out at the same exact price point. And it really wouldn't have mattered if there was an extra 5, 6, 7 candles within that, little price range. So let's see, what else do we got? There we go. What is a good scalping time frame for structure? To be honest, big deal, I prefer something like the 5 minute. I think something like the 30 minute on a larger time frame is nice to look at the market from a larger time frame perspective. Something like the 30 minute, just looking at, structure, looking at the larger time frame, swing highs, larger time frame, swing lows. And then it's nice to sit and watch the market through like a 5 minute. Sometimes a smaller time frame can have you, can kind of make the market seem like it's jumping around a little bit more than what it really is. But when it comes down to like execution time, if I'm scalping, I like to execute either on a 1 minute or 15-second. That's only when it comes down to execution, just because sometimes the execution really is a matter of like snagging or securing an extra 10 points or 5 points. Because if you think about it, if you're risking a high, right, and it doesn't matter what time frame that you use, but this is my justification for using a smaller time frame. Because if we're risking a high, and if the market comes back and reaches this high and that invalidates our trade thesis, if I'm risking that high and it's, let's say, 10 points away right now, and I know this is the high that I want to risk, if the market drops another 10 points and I enter 20 points away from my high, I now have twice the amount of risk on that trade. Even though 20 points isn't very far away from the high, but from a percentage perspective, you're doubling the risk. So it's like the closer you're able to enter towards or near your invalidation point, the more risk you're going to be able to put on while taking less risk, if that makes sense. So a smaller time frame just helps you kind of weave in and out a little bit easier, but it's not that you got to view the market through such a small time frame at all, because that's not necessary at all, in my opinion. Let's see, which subscription do you recommend for TradingView? Do you need to buy a data feed also? No, you don't need to buy a data feed on TradingView. Also, the free version is completely fine to use, right? We're not using the free version right here. If you want to pay to upgrade the subscription, you can do that and check out all the extra features that you will have. But if you just want to connect your broker, you want to buy and sell, you want to use all these basic indicators, you want to use the volume profile, you want to use the range volume profile. If you want to use anything that you see us use live here on the show, you're going to be able to use with the free version. So you can check that. You can check that out, and you can also check it out, before you even have to, pay for anything. So if you want to use technical analysis a little bit more, want to play around in there, give you a different perspective of things, it's pretty easy to do that. Yeah, it's a big product too. May as well zoom in there where you can handle moves 100%. Kimber Lamine, I think that is it right there. I think I got it. But yeah, especially if you're using more contracts, like whenever you have a good grasp on where you want to risk in the market, that will give you the confidence to naturally add more contracts. But like, I know we talk about like the market moving in balance and imbalance a lot of the time. And like, if the market is trading within balance, we can expect or look for mean reversion type behavior at the edges of value. And then if the market is accepting outside of that range, we have a higher probability to go and seek a new level of value, whether that's to the upside or downside. But by, really focusing and honing in on those edges of value, gives you that conviction on where you might want to place that risk. But it's like being able to gauge that and see it is just by doing it every single day. And then you can also just start off with one micro contract, and then you can kind of see that balance and imbalance play out. But then when you really find the areas on the market that you want to risk off of, it naturally gives you the confidence to add more to your position. Because when you have an idea of what you're risking on the trade, you're not going to be as fearful because, uncertainty breeds fear. And when you take a lot of that uncertainty out, you can define that risk. You're not going to be as fearful naturally, right? So that part has been really helpful. Any statistics point range for NASDAQ or ES for range bound versus when they leg up to the next level? Any statistics on point range for NASDAQ or ES for range bound versus when they leg up to the next level? I'm not sure I'm understanding that one, Big Deal, but let's try to piece that one together. I'm not sure I'm understanding. I wonder if there's a certain point range that's common at each key level before moving to the next level. Oh yeah, that's always an angle that we could probably dive deeper into at the same time. I think there's a lot of things we can dive deeper into, calculating the range of the value area, right? I think calculating the time spent inside a value area versus outside of the value area. Not only the time spent outside of a value area, but also you could, probably calculate the distance. How far did the market travel outside of the value area? And it's like, you could probably quantify and get pretty creative with a lot of the ideas. Do you ever use a trailing stop? Not necessarily, but I think the idea a little bit naturally. Let's see if we have any examples. This week was really difficult week. Let's look back at some of the trades that we had taken. So yesterday was a decent day. We did actually have a decent opportunity yesterday, but let's talk about the idea of something like a trailing stop, because not necessarily, but definitely as the market moves higher or lower, you may or may not adjust the way you would manage your, you may or may not adjust the way that you manage your position. So if we zoom in over here, this was a couple trades that we had taken. And if we talk about how we would have managed this trade as it was in the profit, because that's pretty much what a trailing stop is. Like, how do we manage these trades when they're in the profit? Right? This trade ended up working out, right? We took a loss before that, but this trade ended up working out. But, as this one worked out fairly quickly, you're able to sit very comfortable, right, in the trade and not be too impulsive whenever you get a trade, move very quickly away from your average entry price. But in terms of a trailing stop, not necessarily. Something that I like to do instead of using a trailing stop is just scaling out of the position. There's not really a wrong or right way to do things. It's just dependent on what you're comfortable with. And then also, I'm sure you can quantify your own performance to see what works better for you in your trading. But we rip up into a new high over here, for example, and we choose to take off one contract. We could have chose to take off one contract, or we could have just moved our stop up to this level. And then we could have kept on both the contracts and then rode this thing to the next high and then take both off over here. But instead, we decided to scale one out and then scale the other contract out up here. And then what we had done as well is just keep the last contract on at break even. So it's like, that's just going to yield you different numbers on the back end. So depending on your performance and what works better, I wouldn't say there's a right or wrong way to go about it, but sometimes, yeah, the trailing stop for sure. It's like, yeah, we trailed the stop up a little bit once the market moves further in our favor. But at the same time, it's like making that judgment call. Okay, well, now we can just move some of the contracts up to break even. So now we know we can't lose on the trade, but at least we did secure, some profit by taking 25 or 50% of the position off. But trailing stops, it's funny. That's another conversation that always comes back up. So I don't know, maybe trailing stops one day. Maybe that's a move. Because I know whenever you're trading on this platform too, let's see, I know we got a couple minutes left. Let me see, what is the market doing right now? Maybe we could just show a quick example. What's the market doing right now? We're on the 15-second chart. Let's see. Let's go to today. And I'll show you how easy. If we were to get in, let's just say we sell real quick, right? We never really do this because we don't really have a bias right now in the market on what we're trying to do. But we just hit sell. We just got filled. Let's wait real quick to have this entry populate so we can show something. Is this on here right now? Execution marks? It is. Can you analyze Amazon, please? We can take a quick look. I know we got a quick minute left. We'll take a quick peek at it. Going on, big deal. I like reading some research on the speed of the tape. I kind of like that. Did you scale out based on the structure? I did scale out based on the structure, big deal. It was based off of the swing highs that we had on the left side. But with that being said, we got short over here. We're short right now, 25,890, right? So let's say we put our stop in let's say we put our stop in above this consolidation real quick. We're gonna go right click and then we're gonna hit buy stop. That's gonna populate the buy stop on the screen for us. Give it 2 more seconds, have it populate for us. Give it 2, there we go, buy stop. So trailing stop, we don't necessarily have the trailing stop right here, but one thing that we can do is if we were to make new lows, and you wanted to secure something or at least reduce your risk, we can click, drag this down, and then we can kind of manually have that trailing stop in there for it to manage our risk for us. Because, if we're 90% of the way to our profit target or where we would be comfortable on getting out of the market, we don't really want to give 50% of that back or 60% of that back when we're 90% of the way there. Maybe take off 90% of the position if we're 90% of the way there, but we'll circle back around to that. We just made our commissions back together on stream. We're going to close that right there. There we go. We're going to close that. I scalped a huge amount of shares in Apple yesterday. The price failed to meet my limit. When I tried to change it, it went to pending repeatedly. The price dropped, bounced back, could not sell. Really? Huh. I hope you're able to sell now. I know whenever you're looking to get in and out on, very quickly, whenever it's not executing very quickly, sometimes you get a little bit of slippage or whatever price you were looking to get out of. So I know how that is. But Apple's a pretty liquid one usually. I know we're running out of time here. We're gonna hop right here. But just because I said we had to quickly check out Amazon, we got to do it because I said we got to do it. Big deal. We'll throw a volume profile or something like that up on it next time. But Amazon trading towards its highs, especially at the beginning of the year. Hey, look, you're trading near your highs at the beginning of the year. The bar is set pretty high. Like you got a lot of ground to make up for, and you got to really hold, and show some new valuations because I don't know, a lot of these names are near their highs as we head into the new year. Yeah, the broker helped me eventually. Good. TT platform, certainly some. I got you. What's going on, Soul Train? The cursor issue in the bid being black. I got you. We'll relay that over as well, Anthony. We'll relay that over as well, 100%. And I know. A lot of the feedback is always listened to, so it's always helpful. Always listening because the best products and software. Tasty is always going to try and achieve. So it sounds like at any broker it can happen. The cursor issue in the bid. Got you. Well, we are running out of time here, guys. That's going to do it for today. We will be back next week. It was the first full trading week of 2026, almost at 2025. We'll see what we get. But thanks for taking the time to hang out. I hope everybody has a great weekend. Let's manage our trades, manage our risk. Be sure to stay tuned for more segments coming on next. E-Media, Anthony, Soul Train, Big Deal, Harold, everybody, thanks for taking the time, and we'll catch you guys next time. Peace.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Friday, January 9th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio, and Tasty Red. Here's Ilya Spivak and Tasty Black. How are you today?
It's an interesting day. My boys got the fever, but I'm going to the Warriors game. So we're here and we're there.
So when everyone at the Warriors game comes down with SARS-CoV-3, we can blame you.
I am going to get myself checked out for the flu before I go, just in case.
Well, I wish I could say the same. The Knicks are out of town this week, and I haven't been to a game this year yet. I need to really get going. I was going to wear green on the show today because the S&P is breaking out, but as producer James reminds us, can't wear green because that would remind me of the Jets. So maybe it's a little Costanza action here. We're pulling the Costanza here, Ilya. We're rooting for this breakout, so we're wearing bear red today on the show. Tasty red. It was a mixed jobs report here. No SCOTUS ruling on tariffs seemed to be the top line news of the day. But there's a collapse in Fed rate cut odds on the other side of the December jobs report, which is worth going into.
Yeah.
Ilya, John, we can go right to the slides here as we get into this, making our way through the show today on this Friday, wrapping up the trading week. Shouldn't say GDP trackers because I definitely know it's a non-farm payrolls report review, although the GDP trackers will be discussed on today's show because they have surged in recent sessions. Ilya, the actual number itself was a touch softer than the consensus by about 10K at 50. We also see that the unemployment rate comes into 4.4%, which may be precipitated by the fact that the labor force participation rate came down by 0.1% as well. But wages are firmer, which I suppose is good news. The 3-month average of jobs, the rate of change there is minus 22K. The October revision was horrific, lobbing off another, 68,000 jobs, if I recall correctly. So between the October, November, and now December miss, the economy's added roughly 86,000 fewer jobs than we had anticipated, or at least we thought we did prior to about 8:30 a.m. Eastern this morning. But it's not enough. It's not enough to convince this market that the data is there to get the Fed to move on rates, because the consensus after all of this is for a 5% chance of a 25 basis point rate cut later on this month on January 28th. That checked in at 11.1% yesterday, 16.6% a week ago, and 21.6% a month ago. So Ilya, I know we're getting close to this meeting. It feels like we can put a stake in the January meeting officially now. Getting a swing back to above 50% odds would probably require something terrible to happen. And there's just not that much runway in terms of the data to help shape that narrative.
You're absolutely right. And of course, January was never really on the board. We've been looking at the likelihood for a January cut kind of hovering in the low teens going into the holidays, and now we're into the single digits, but we were never really looking at a meaningful probability that this was going to happen. And I think for the markets, the question was always, okay, so the Fed has created this sort of window where they're saying they're going to paper over liquidity shortages on a temporary basis with short-term purchases of securities. And they gave a really interesting window for when they would do that. They said, we're going to start in December and we're going to run through April's tax season because that's a cash crunch. Okay, fine. Is it any surprise then that the markets have the first rate cut on the board this year at the late April meeting after tax day? I don't know, but certainly seems like there's some symmetry there. So the markets want that cut then, and they want another cut no later than September. We saw the total tally for this year narrow in a little bit today, which kind of jives with everything else. But we still see at least a pair of rate cuts on the menu. It's still 50 basis points for this year. That's not as dramatic as it was even yesterday. Yesterday, the markets had 56 basis points. That's a different story. At 50 basis points now, we're back to basically early December for where we are on 2026 policy expectations. And we'll see because for whatever reason, the markets thought that these numbers were supportive and that this reduces rate cut odds. That actually makes some sense. With the third quarter jobs picture, whatever it was, we had a situation that wasn't as bad as what the Fed said. Powell was guesstimating about a 40K average loss. That's not what happened in the third quarter, though things started to cool off. In the fourth quarter, we had a pretty ugly October for obvious reasons. We had the government shutdown there. It seemed like to get to the Fed's average, what Powell was talking about in December, you had to have that bad October, and it hasn't continued and hasn't continued since.
It didn't. That, I think, is the big thing, right? As bad as October was, and we had that big revision lower,
it didn't continue.
The revision wasn't there for November either to the upside, and December missed. That's not minus 40K for the fourth quarter.
No.
Those numbers are going to be revised still, as we know. But
That's
as
right.
it stands right now, it's not minus 40K. So the economy is a little bit better.
It was a soggy rebound, in fairness. I mean, once you do the kind of Powell haircut thing, the rebound from October was very slow. It's not like people got rehired immediately after those payrolls were lost. But to your point, it wasn't that sort of a Powell advertised decline. Moreover, in the third quarter, consumption was really strong again after a really weak first half, where everybody was apparently waiting to see what the tariffs are going to do. And there was all this back and forth with imports, with inventories, and the numbers looked like a mess. In the third quarter, normal GDP reports strong consumption. On top of the wage growth number today, which jumps to 3.8%. So just in case you want to talk about an affordability crisis out there, just keep in mind, wages are growing at the fastest since August.
Real wages are starting.
And are growing well in excess of inflation by a good 1% and some change. So you get that, and then you also get University of Michigan consumer confidence data, which comes in at the highest since October, September. So you end up with a story about the fourth quarter where consumption still looks strong, and that's 68% of the economy. So things look pretty good here.
They look a lot better than I think most people thought they'd be at this point of the year. Keeping an eye on the GDP trackers, Ilya, yesterday the Atlanta Fed upgraded their fourth quarter tracker to 5.4%. Today it's reduced ever so slightly to 5.1%. Ilya, if that thing gets cut in half still, if we have a 2.6% real rate of growth for the fourth quarter, in a quarter in which we had a government shutdown, I think most people would have walked away and said, that's great. Resilient. So the fact that it's still sitting up near 5%, and we talk about when we really take these GDP trackers seriously, I see that we have our next GDP report coming out in a few weeks' time. It's no longer like, oh, this is 2 months away and let's see how the data performs. No, we've basically gotten the bulk of the fourth quarter data that goes into GDP. So keeping that in mind, New York Fed nowcast, last week it was at 2.07% for the fourth quarter. It's now up at 2.62. So we're beginning to see that all of these forecasts rise. So rising GDP, rising consumption, and ultimately that's something that may help gird the stock market and stronger corporate earnings, perhaps. S&P 500 here, this very moment, trying to set a new all-time high in the ESH5 contract. High that we have here from Fed Day, Ilya, is 7,014, which is where we find ourselves just very right now. The Russell here is leading the way here today alongside the NASDAQ.
That's the one I'm looking at the most closely. I'm trying to see if maybe I can get myself into some sort of long side exposure because this looks like it's breaking out.
Breaking out 2,500 to about 2625. It's a clean 125 point range in the Russell that if it's a bull flag, you look to 2750 or so. And with IVRs in the low, double digits, 10.3 barely, low vol, fairly low volumes in the market today. We're still not through 1 million contracts traded, even though we're past that 1 Eastern hour on a non-farm payrolls Friday. low vol, low volume. Those have been fairly reliable hallmarks, Ilya, of a bull market that's difficult to step in front of right now. Momentum suggests it's a little bit of a melt up here. So to that point, volatility today, 14.46 in the VIX. This is going to be, if we were to get down here and stay down here, this would be the low close for the year so far. In the VXF contract, we're at 16.13. And in the G cycle, we're now at new cycle lows. So volatility is coming back in across the curve here, as we're seeing both the S&P and then, Ilya, of course, the NASDAQ here take two for another breakout attempt as the Russell finds new highs.
Yeah, I mean, it's an interesting sort of setup. I mean, I think that obviously the Russell looks the best of the bunch. There seems to be no question there. S&P is basically at its high from that October 30th post-Fed sell-off. We still haven't made a new high. The markets are still wanting 50 basis points out of the Fed, which is still a rate cut more than what the Fed wants to give them. And the question still, as we've been talking about, is why in the world do the markets want rate cuts when the economy looks as strong as it looks? We still have all those rate cuts that the Fed did last year. They've got 12 to 18 months to work their way through the economy. We still got the tax benefits from the big, beautiful bill, whatever that thing is called, that's coming up this year. That's going to kick in as a form of fiscal tailwind. So it's an interesting sort of situation because the markets seemingly have everything going for them, but they want a pair of rate cuts. And so you sort of wonder, well, what's your problem? Why?
Could I perhaps offer a theory there?
Yes, please.
He's active on Twitter now. He's a Harvard economics professor, Jason Furman, former Obama guy in the Council of Economic Advisors. Several months ago, he pointed out that if you were to take out all of the data center capex spending this year, U.S. GDP would only have been around 0.1% in the first half of 2025.
Yeah.
So if I'm an administration official and I'm looking at the state of the economy and I'm seeing a 3-month run rate of minus 22,000 jobs, and like I'm Stephen Mirren, for example, right? He's on the Fed, but if I'm Stephen Mirren and I back out AI and I try to figure out where inflation is less this data center spending, which we know is not going to continue ad infinitum, then where is the rest of the economy? You talk about a K-shape, Ilya. The economy is growing at the top line, but most workers and households are not seeing the downstream benefits because data centers
is the interesting thing
downstream benefits
because consumption is strong.
Yes, and maybe there is a wealth effect. We know that Americans, in terms of exposure to the stock market, is basically sitting at all-time highs, getting close to 60% of individuals in America have some exposure to the stock market. But I would posit that if the administration is looking at the data and really combing through it with a fine tooth, if Jason Furman is correct, then it's built on stilts. It's built on data center growth, and it's not really a true growth number. So lower rates and more fiscal stimulus may actually be something that helps sustain what appears to be a top line boom, but it would actually help the underlying growth trend pick up itself.
I think that's a fair argument. Where I have a hard time reconciling the markets getting all kinds of negative around those sorts of ideas is, and of course, the chatter out there is AI is hype and it's overdone, which, by the way, as you know, I am sympathetic to that conversation. I think we are approaching some kind of a .com-ish type of situation. Not necessarily exactly the same, but I've argued all year last year and continue to argue that all of these types of technological booms eventually get past the initial hype stage, have a reset, and then the real multi-year, multi-decade adoption cycle starts. This is railroads, this is telecoms, this is cars, whatever, you name it. Everything that we have data for historically going back to industrial revolution times. This happens every time. So I'm sympathetic to this idea. Where you lose me on this argument is you go, okay, the service sector, according to the ISM data, which I would argue is at this point a little bit more reliable than these NFP numbers, which the BLS officials themselves are saying are bunk. A bunch of retired BLS officials are saying, look, the agency is so understaffed and the Department of Labor so ignores it that we don't have enough people. Most of this data is imputed. Who knows what it is? But the ISM report gave us a 10 to 14 month high, depending on if you look at jobs or new orders, but really hiring. And most of the economy is service sector, and most of the hiring is there. So if wages are growing as fast as they're growing, if consumption is as strong as it is, according to the third quarter, I don't know how much of a K-shaped economy you can really impute here. I mean, people are buying stuff. Their wages are growing by a full percentage point faster than inflation, 1.1% faster than core inflation, which is what they care about.
Right.
They're getting jobs, apparently, at least as far as the service sector is concerned, and that's 80% of employment in the United States. So where is this K-shaped economy? Now, obviously, it feels expensive because prices for stuff are higher, but that's mostly because people's interaction with the price of stuff is goods. Oil, eggs, milk, beef. Thank you, tariffs. We know about that, but that's only about a quarter of a percentage point of inflation in terms of contribution. Most of it is services. 180 basis points, 1.8 percentage points of the 2.7% inflation rate. That's not anything but demand for services. And to the extent that services like insurance, for example, are ridiculously expensive, it's a function of undersupply, not affordability. And that undersupply is a function of bad policy that artificially wades into markets and undermines it. And basically says, we're going to have undersupply by dint of rules, not by dint of supply and demand in the market. So rate cuts, what are they going to do with all of that? They're just going to make things worse. So it's interesting that the markets want these rate cuts. And again, to my mind, perhaps they want them because they see all these weird asynchronous things happening in the economy, and they go, we just want insurance. Just give us insurance. It's not that we see something bad. It's that we don't know what we see or what to make of it.
If we are breaking out, Ilya, like, do we need rate cuts? Sometimes we don't need rate cuts for the market to rally. The market's had its turns higher in recent years when the Fed says, sorry, we can't cut. Things are going better than expected.
Sometimes you got to raise, Chip.
Right. And, if that's the case here today, the breakouts that we're seeing, S&P 500 through 70.14, the measured move on this triangle, maybe you want to be a little bit more conservative and say the breakout point 69.90. So you'd shave 25 points off this target, but it would give you 74.20 up to 74.45 in the S&P 500. It sets up an interesting dynamic, Ilya, where it's something we've been watching for recent months, going back to last July. This analogy with the 1998, 1999 bull market. And
I'm a lot more comfortable, by the way, getting long this market now that it's been consolidating since October and it's spent months going sideways. This feels like a much more well-founded breakout if it occurs.
Yes.
And I would be perfectly fine getting long this now that it's taken all these months to digest and to digest and consolidate. That's a very different story than the hysterical run-up for much of last year. We've had a good time to digest all of this.
We have. And so if we're following that analogy still, which, those analogies never really hold, market conditions change, rules change, laws change, the economic regimes change. either way, though, it would suggest that we still have some more airspace ahead of us.
Yeah.
With a volatility coming in after today, we have a SCOTUS ruling on tariffs, not today, but perhaps next Wednesday. I'm thinking that we still have some room to move to the upside. So sustaining the long S&P 500 exposure, which perhaps getting into the money sometime soon, 70.50, 7,100. Likewise, sticking long MES through the weekend, which we're going to put up here. That entry was 68.88 on the most recent roll. And then a whole bunch of other minor stock positions, Ilya, which have been posted to the follow page here today because I like equity exposure at the moment. We've been looking at Google, which the 30-40, 30-50 call spread here. In Google, there's still something from December, which had the 330, 340 call spread on, and kind of feels like it's a market that's trying to break out here right now, given the price action. So kind of, you say sometimes you got to race chip. I feel like that's definitely a situation for us to look at. I really like Tesla yesterday, which is why I added a short put spread, and we're up against the trend line from the lows last April all the way through November. And there are 5 different touches of that trend line. So this is not just 2 points being connected. That is really something sustainable. Operating with the short put spread at the 415, 400. There's some Broadcom sprinkled in there because Broadcom's been following Google and it's up 3.71% today. So short the 330, short the 330, 320 put spread, effectively saying that the recent ranges are going to hold. We don't break below 320. We're golden. And then I believe a little bit of Meta as well, because we see here around 635. There is a little bit of support. So short the 635, 625 put spread. I'm really levered long right now, Ilya, in the stock market here in the follow account. But when you get this kind of chart set up, right? If it's the S&P 500 breaking out, if it's the NASDAQ breaking out, if it's the Russell breaking out, I know where I want my chips to be, and it's not going to be fading this move in a low volume, volatility contracting type of situation.
No. And I mean, in fairness, volumes have come back versus last week, but they're still very, very low. We're not looking at anything like we're used to for sort of normal action, which I guess is not the end of the world when you consider we're still in the single digit days of January. So things are early yet, but I don't see a reason to question it until there's a reason to question it.
We do have equal weighted S&P 500 hitting another fresh all-time high here this week. It's the third different day in which we've seen a new all-time high carved out. QQEW is trailing a little bit behind, but broadly speaking, breadth has been good, and the small caps are the ones that have been kind of pulling us forward. If that's because of Trump's announcement about his reps buying bonds, trying to do QE, I think the market's really misunderstanding that. We're going to go into that in the bond market section just around the corner. Yeah. But you have home construction up today, home builders up today, ITB, XHB are the top performers. ITB's up 5.5% right now. Huge gap to the upside. Missed opportunity because we were literally talking about this 2 days ago in Futures Power Hour as a potential long. Bummer. SMH is back on the highs, up 2.76%. The only real quip that I have here, Ilya, with today's rotation, which 4 of the 25 sector ETFs are red, 21 out of 25 are green. The banks are lagging, which you're seeing some of the energy
kind of interesting.
Yeah, so energy's lagging. The banks are lagging a little bit. They're not really in the driver's seat today. They've really been in the driver's seat recently. It's the only blemish I'm looking at in terms of the mix of what's happening in the equity market right now.
It makes you wonder why the banks are down, because it's a Fed rate cut kind of story, maybe. Obviously, the odds came in a little bit. The banks don't want that. The banks want those cuts. And it's not like the banks are falling apart. They're just soggy-ish. I mean, if we look at the actual move, what have we moved actually in, let's say, KRE? 6 cents.
6 cents in XLF.
I mean,
maybe I'm making making a big deal of nothing, perhaps.
Yeah, like I'm not looking at this and going, oh no, the banks are deeply disappointed with the absence of Fed rate cuts. They're not happy, but they're not upset. They're grumbly, if you will.
Yeah. And, from a certain vantage point, Elia, do the banks want rates at zero? No, it's so difficult to get meaningful net interest margin at those levels.
The Economist made this point last week as they were talking about affordability. They were saying, well, people are reacting to the idea that things are more expensive now, but of course they are. They're more expensive now because inflation isn't negative. It isn't 6 or 7 or 8%. It's approaching the mid twos and wages are growing faster. But yeah, nominally, when you compare to I'm used to buying eggs for X 3 years ago, and now it's X plus. But if you wanted those prices to come back down to where they were, as opposed to just slowing the pace of rising to what is the Fed's target, 2% inflation, which, by the way, would be increases in prices. They would just be much slower than wages. But to actually get those prices to come back, you would have to crush the economy. You would have to fire hundreds of thousands of people. You would need to basically put economic growth into reverse. Does anybody really want that? No.
Homeowners don't want that.
Nobody wants that. The banks don't want it. Consumers don't want it. Why in the world would you want a deep recession? So that eggs could go back to
LTVs turn up.
What? $4 a carton instead of $5.5, $6? What? How much better would it be to just let the wage growth run so you can afford the $6 eggs versus crushing the economy?
Yeah, no, the positive wage growth is what we're going to need. Maybe some of that comes back on the other side of tariffs being struck down next week. Polymarket briefly today jumped to a 32% chance that the tariffs would be allowed to stay on. That was a move up from 25% when we heard that they would not be making their announcement today. The odds have since settled back into 26% or so. I only bring that up because before we get off the stock section of this particular program, XRT earlier this week, the retail ETF, looking at something like a potential breakout gathering pace, and the retail ETF was the one that was most hampered from post-election through April last year. Trump gets elected, the tariffs put on and then ultimately removed. I would think that these are the stocks that are going to be most sensitive next Wednesday in the event that we actually get some sort of maybe the tariffs are removed and the administration is going to try to reapply them in various forms or fashion. But it doesn't mean that you wouldn't see a possibility of, maybe a breakout. So, Ilya, I see a clearance of the September and the December highs here. We got the close through there yesterday. Today, we rallied off those lows to move back through those levels. An ascending triangle that looks like this to me is, forget the narrative. That is a bullish technical pattern regardless. So instead of calling this, there was no SCOTUS decision today, take off the trade for a small loss, absolutely keeping this in the pocket for next Wednesday. And it may expire worthless, and maybe the market hasn't fully priced in, but in the odd chance they don't, the technical pattern looks pretty good.
Yeah. I think that is certainly something interesting here. I mean, the breakout looks legit. I don't see any particular reason to question it here.
It's not even a diagonal. It's a horizontal line.
That's right. I mean, that's why I'm looking at the Russell and going, why are these volatilities priced so that the best I can get is 1-to-1 risk reward? Let me get at least 1.5 to 1. But no, I might have to wait until Monday. But as I'm looking at this, I mean, it's a clear break of a former high. Maybe it's right, maybe it's wrong, but it's the kind of thing you roll the dice on and go, okay, if I can structure something with decent risk reward, then off I go.
It's interesting because when you look at the market pricing right now, before we head over to bonds here in the Russell, if I were to take, there are different ways to measure this. I could treat this as simple, sideways move. It's 125 point range. We add it to the top, 2750 target or so. If I were to do a Fibonacci extension, swing low, end of November, high, mid-December, the lows that we have here at the start of the year, it gives you a 2800 target, which 2800 for the Russell from here, I mean, we're not calling for a small rally. right? We're calling for like a 7% move to the upside, 8% move to the upside. But the way that the options market is priced now, if we were to go to the end of March here, the 1 standard deviation move is up to 2,900. So, trading this higher right now and thinking that this is something that looks like it wants to break out and we have these technical targets to work with, and how outlandish do they appear? The current volatility pricing is saying that those moves would be inside the expected move between now and the end of the first quarter. So I have my stock exposure. I have plenty of it for myself right now in the follow account. This is a 4-to-1 trade, Ilya. Risking 1 to make 4. It's expensive in RTY. Maybe folks want to do it in IWM, but if you're trading as a technical breakout trader, right, the math is the math, and you operate and you set your strikes around those target levels, and hopefully they hit, as we just saw in copper recently, where we had the measured move run up through 575. Worked out like a charm. The yield curve is twisting today, Ilya, as cut odds sink. We've done a fairly good job covering the cut odds, I think, with notes slouching off below 112 briefly before bouncing back. My current position here is absolutely killing me because we just need to get away from 112, and it's a freaking magnet. ZB is having a much better session, though. Is this a flag? Is this a continuation from a head and shoulders pattern? Are we bottoming down here? Earlier today, it looked like we were going to break out. Now it looks like we're still stuck in the middle of the range and can break neither 14.5 or 116. So I find myself stuck sitting in a max loss position, as I have been in the long put spread. Ilya, my concern here, or attention rather, is on this news last night that Trump instructed his reps to purchase $200 billion of mortgage-backed securities. This is something that theoretically can be done through Fannie Mae and Freddie Mac.
Mm-hmm.
There is the ability for these institutions to go out there and make these kinds of purchases. However, they would be sterilized purchases.
Yes.
The government would have to issue more debt to make these purchases. Okay. And so to that effect, there's no change in bank reserves. There's no change in net liquidity. It is an accounting tool to help compress spreads. Although if you take a look at credit spreads in the housing market right now, Ilya, you might argue that this is not the time to deploy such policy because the spreads are fairly tight.
Which is, of course, the Fed's whole thing. They've been cutting to those spreads with the short-term paper purchases because there's been a crunch in the difference between the Fed target rate and the overnight SOFR. And obviously, we had the Fed end quantitative tightening and then take the next step of throwing some more temporary liquidity into the mix to get those spreads to come in. And of course, that extrapolates out over maturities. So it extrapolates out to mortgages just as well.
Is this something that's going to materially bring down yields? It's a nice story. It seems like it's a way for Trump to try to circumvent the Fed with his own QE program.
Or maybe just take credit for what the Fed is doing.
Right. Like if you're sterilizing your asset purchases, then there's no change in anything. When the Fed was doing things like we're selling 2s and buying 10s, the net change in the market is effectively negated. It's just they're trying to shape the yield curve.
They're trying to twist the yield curve. Yeah.
I got some people tweeting at me yesterday when I retweeted, like, who are Trump's reps here? Saying, like, do we have to buy ZN? Do we have to buy bonds now? If you bought ZN on it, it didn't work out today. If you bought ZB, theoretically, you're up a little bit. But in terms of that being a sustainable catalyst, I, for one, don't necessarily think it will be, given the laws around how these GSEs are allowed to operate.
Yes. Well, there's that. And there's also, if what the Fed is doing with these short-term liquidity injections, which, by the way, if you look at the Fed balance sheet, it's significantly up now with these purchases. This is short-term paper. It's going to expire and roll off the balance sheet quickly. That's the idea. That what this paper does is it holds over a liquidity gap that the Fed has identified in looking at these spreads blowing out. I mean, we were saying at one point in October during the government shutdown, the situation got really, really hairy. In early November, the spread between SOFR, overnight SOFR, and the effective Fed funds rate, the median, got up to as high as 36 basis points.
Real quick, you mentioned
that's astronomical.
That Fed at balance sheet is starting to bounce back up again. This comes from Macro Edge. I shared this earlier in our internal chat. But I'm bringing it on.
And again, this is short-term paper. This will expire, and as long as the Fed doesn't reinvest it, the balance sheet comes right back down. This is not holdings of long-term mortgage bonds or 10-year bonds or 5 or even 2s.
No.
So this will roll off the Fed's balance sheet in a hurry. But if you're Trump, you're going into the midterms, your approval ratings look not so hot so, and you've got to do something, then you see the Fed doing this, and you have clever people around you, which he does. Kevin Hassett, for all my disagreements with him, knows what he's talking about as far as the mechanisms, mostly. When you talk about Stephen Miran, again, I disagree. That's why I was saying, thank God you're not him. We'd be arguing here for 8 hours at a time, not 1. But he certainly knows how these things work. So,
well, that's the funny part.
If you had to
this,
make the perception that you're doing something, meanwhile the Fed is actually doing something, but you're taking credit, it's okay for the midterms. Might help.
Well, that's the thing. Like, maybe people's memory is shorter than mine.
It is. Let me answer your question.
I recall during the QE years, people were confused as to why when there was QE, 10-year yields went up, and when the QE stopped, the yields came down, and then when the QE went on again, they went up. And then
my God, I used to have to explain this practically foaming at the mouth because people were screaming, they're printing money. And I'm like, that's not what QE is.
I mean, the whole point of QE, and maybe this is what Trump is going to, I mean, the knock-on effect, legitimately, QE, as Bernanke and et al. Designed it, if you read their literature and their writings from those days, was to push people out along the risk curve, right? I'm not talking about what they're saying today about what happened then. I mean, if we look back to their contemporary writings at the time the crisis and other things were going on, they were
and you and I were
saying,
trading at that time. We heard them live.
Well, and they were telling us basically like, you don't want to buy government bonds. If you're a government bondholder, you probably should be buying corporate bonds, right? Oh, and if you're a corporate bondholder, you're not going to get your returns there. You probably should be buying equities or like, distressed debt, right? Or lower quality, not AAA debt, but like BBB debt. And the whole idea was to nudge everyone out along the risk curve to provide support to asset prices. At the end of the day, everyone has a required rate of return. You need to beat inflation. You need to grow your money at a certain point to achieve certain goals if you're saving for something. And so if you can't get your returns because the 10-year yield is no longer at 5%, it's at 2%, you're forced to take other kinds of risks to achieve said returns. So, Ilya, I mean, like if we're going to do window dressing of $200 billion of asset purchases vis-a-vis Fannie Mae and Freddie Mac, which is ultimately sterilized, but it invites a whole coterie of look at what the president's doing to help the economy going into midterms. It's just another thing that is asset inflationary as far as I'm concerned.
Yes.
So I guess it helps the stock market.
I mean, this came up with the idea of the $2,000 tariff rebates. What could possibly be a worse idea than artificially driving up prices and then giving people free money to pay them? What could be more inflationary? It's a nightmare. This is very much in the same vein.
You know, gold today has had a bit of a day. It's up 1% right now. We did try to break out earlier, and it appears a new breakout's getting started, Ilya. We do have a triangle here that started to consolidate at the long side of a multi-month uptrend. It's found some, well, it really hasn't done anything, you could argue, for the past several weeks, going back to mid-December. But we've been consolidating above the former highs from mid-October. And the lows this week, when we sweep through there, that's exactly where we catch before cycling into a new high. It doesn't really matter how you draw that, Ilya. It could even be the more recent local highs that we had. And for what it's worth, at the start of this week on First Call, we were pointing out that if you're using the Druckenmiller method, which is applying the 8 to 20 multiplier on your time frame, and you go down to say something like a 4-hour or 1-hour chart, and we had this inverse head and shoulders pattern down here. And if I recall correctly, it was the 1-hour chart we were looking at, left shoulder, head, right shoulder. The difference was about 42.85 up to about 44.25. It gave you 80 points or so, and it would mean, given the time frame, the resolution, 4 times 20. I mean, you had like 3 or 4 days to work into, maybe 4,500. We're at 45.05 right now. So perhaps we didn't get there exactly in 4 days, but the thrust of the, analysis, I think, was correct. It's setting us up into a potential breakout here, which is something we shouldn't ignore. And a return back to the highs near 4,600 seems feasible. Small caveat, even though that's what I'm positioned for. Not loving this decline in volatility intraday as the market's trying to stay up. Vol down here, Ilya, would be the lowest we've seen volatility since the market was really selling off on the first Friday of the year during that downtrend. So declines in vol have been precursors to consolidation or pullbacks in gold. But for now, with the market shaping up the way that it is, I got to stay long, have to stay through it. It's a breakout. It's a triangle breakout among many triangle breakouts that we're seeing today. Maybe I just have triangles on the mind, Ilya, because they've been everywhere as far as I can tell.
I mean, you don't have to be a triangle man, as it were. You could be a horizontal man and take a look at the gold chart and go, you know what? We had a hold, and now we appear to be breaking out. And if you look at it on, let's say, a 4-hour, then you can see that the most recent price action looks more like a break and correction than it does a hold at these levels. But worst case scenario here, you're just holding against the January 6th high. So, okay, fine. Maybe that's what's going on. You're just holding against that high. You're not getting a meaningful run. On a 4-hour chart, you've got a kind of shooting starish candle there. So maybe you pull back some. But until you're back to, let's call it 44.80, maybe even 44.50, 4,400, there's just not anything meaningfully bearish about this.
No, and it feels like the story has just been triangles. I know it looks like I'm going into Rain Man mode right now, but Ilya, it feels like this gold story for just the past several months has been continuation.
And we've talked about this, the idea that we have a 3-year story here left. Deglobalization isn't going away. This is obviously not being motivated by the dollar or by yields because it's ignored those signals.
It has. So leading into next week, it looks like we still have some room potentially to the upside. I'm going to be leading long deltas here, both at the 46-day, 4,600, 4,625, and then at the 108-day, 5,000, 5,100, which they, some around here called me a madman, Ilya, but that is within the expected move now for the time frame with which that this trade has been constructed when it previously was not. So this market is showing you that there is a lot of call skew at the moment, and buyer or seller beware. If you are shorting gold, just keep in mind that gold has been tracking higher with vol. So if the market does break out in your short calls, that could arrive much quicker. Or dare I say, objects in their rearview mirror may be closer than they appear in such an event. Silver prices, 6%. The rebalance that it came through this week, it did cause a little bit of agita here in the price action, but that uptrend from those late November lows maintained thusly even at a test yesterday. A triangle of this nature, Ilya, I've got to say, forget the time scale here, but an ascending triangle like this, we're talking $95 an ounce becoming a measured move, which seems preposterous, but silver's done crazier things in recent months. A move up to 95 is 76 days to expiration. 95, 96, keep it tight. Risking 1 to make 4. Feeling like a real cowboy, the product can get very big very quickly. But again, what's the market pricing in? Saying that this thing could go up to 95 before 76 days to expiration, the market's pricing in to move up to 102.75 to 103. So again, heavy call skew here. And unlike gold, the vol is sticking around a little bit. It's been meandering right around 86 to 90 throughout 2026, and it stayed there even with this decline over the past few days. So staying long, looking for exposure, extending duration, keeping out of the money, rolling into the money, and just watch, rinse, repeat, as has been the case for the past few months.
Yeah, I mean, it seems like, speaking of triangles, this is about as clear cut of an ascending type of triangle setup. Now, granted, it's not technically fully confirmed, but that's not really the point. It's the spirit of the pattern that matters much more. You have a flat top with a clear breakout point, and you have higher lows. So the underside is getting squeezed up into that horizontal barrier. And so what you have here then is a situation where it seems like whatever is happening into this barrier from the underside, it's getting caught at higher levels. So it appears to be conviction giving you a kind of tip of the hat saying, whenever this consolidation is done, the direction of the breakout is what you would expect in this kind of a situation. You would expect a breakout higher. Typically, these are continuation patterns. So you look at this and you go, okay, fine. Do you have a breakout here? Not yet. I would argue if you're already long, you stay. There's no reason to do anything otherwise, in my mind. If you're not already long, I'm not already long. I was long last year. I'm not long now. If you get a breakout through that high, or you get a pullback toward some sort of better risk reward relative to that high, maybe back down into sort of 74-ish area, maybe back down to 75, 50 even, where you have the sort of horizontal level there internally. Okay, now at that point, the risk reward looks better, and you can make a play at something. I would just argue the risk reward isn't great to be attempting to enter right here, right now. But as far as I'm concerned, I'm a buyer, I'm not a seller.
Can I give you the 2-week moving average?
Please.
2-week moving average here is now the yellow line. Typically, it's our 1 month, but now it's a 2-week moving average, Ilya. We begin to close above it for the first time here on November 25th. And look at how we've rode those rails between the 1 week and the 2 week. This is like, there's no holy grail technical indicator, as you and I have said a number of times. I have a tool of technical indicators, a suite of them that I use. 5, 8, 13, 21, 35, 55. Fibonacci levels, 5, 10, 20, 50, 100, 200. Psychological numbers, all of them EMAs. And not every chart is going to adhere to the 5 or the 8 or the 13. You have to see which one this particular, market move seems to be respecting. So in this particular breakout, this envelope between the 1 week and the 2 week, that seems to be the backbone. And that aligns perfectly here with the move that we've seen off the November 21st low. So until this changes, right, until this uptrend, this pattern of behavior, this characteristic of the uptrend is negated, I don't know how we can get bearish on this yet, whatever the appeal is. And I would also round that out with, hey, another shot at 80 or 82. Don't be surprised if we get another CME margin hike, which up until now, we squeezed out the riskiest, the most levered speculators already in the first 2. So they might carry less and less impact. Ilya, copper here. 2 days ago, we decided to take a step back out of copper, or 3 days ago to take a step back out of copper as we were running up into the highs. We were at 21 DTE. We had an opportunity 2 days ago to get back in at the 1 week moving average, because very much like what we're seeing in silver, we have this backbone of a rally here between the 1 week and the 2 week. We could call it between the 1 week and the 1 month. Copper prices have been catching. And so effectively, we're getting back to break even-ish on the position, looking for a move to 615, 625. I know volatility is up, and I know that's something that makes executing these copper positions expensive. But much like the other metals, this trend higher in vol over the past several weeks and months has gone hand in hand with the price expansion. And while both of those facets remain, not going to play hero ball here and say this is the top and the trend is finally over.
No, and for what it's worth, I'm not touching this way or that. I look at copper more as an indicator, just because it is as choppy as it is. I'm mindful of the fact that Latin America is something of a shaky situation currently, and the biggest suppliers in the copper market are there.
Yes.
I mean, certainly Australia is a player, but looking at South American copper mines, that's really where the meat of the action is. And certainly the meat of the action, if you are a subscriber to the Don Rowe doctrine, as the president has apparently embraced. It's really funny how The Economist, as far as I'm concerned, that's the first time I saw it, they came up with that name. This week they have an article saying, well, if you execute it this way, it's not going to work. They didn't go out there and say, he cribbed this from us, which I thought was interesting. They missed an opportunity. Or maybe they just didn't want any parts of owning it. But to the extent that we're after natural resources in the Western Hemisphere, copper is a big one. And
can we not, which actually we're going to roll into energy here. Can we not for a moment be after resources in the Western Hemisphere? Because it seems to be hurting my natural gas position. Also, like, not necessarily pro-imperialism on this side of the aisle. Ilya, I hate natural gas. I can't stand this guy. I'm just eating a loss here. I'm eating a loss.
We're gonna have I'm gonna talk to the folks here. We're gonna have an intervention for you. You've got to stop doing this to yourself.
I've got to stop trading natural gas. Close all of it.
I don't touch this thing with your money.
If you give me your money, I'll keep trading it. But you know, the plan was to see if we could get a hold right in this contract with a hold of the low that we had on January 6th. Today is 6.35% loss negates that. So I am out of natural gas. It was the worst. I think it's the worst performing thing for me today. Yeah. Today's a good day otherwise for me. Silver, stocks, all those are going up, but the natural gas is just raining on the parade. So oil bounces, Ilya, 2.65%. Hello, downtrend.
This now is very interesting.
Well, our friend, the Ayatollah, while he's not responding to me, he seems to have his hands full because the streets of Iran are filled with protesters.
Yes,
over 170 towns and cities across Iran have been filled with protesters at night.
And they've captured a few towns now.
They've captured a few towns now. A few meaningful statues have been torn down. The revolution, not going to call it that. Don't want to get my hopes up. The resistance that's occurring in Iran. Listen, Iranian Shia should be natural allies of the West, as far as I'm concerned. As we're taking a look,
I pray for these protesters and I wish them the best of luck.
I've seen a lot of photos of women without headscarves on, lighting cigarettes with photos of the Ayatollah, and that's not the kind of thing that happens in a country like that without severe repercussions.
As a post-Soviet who witnessed the collapse of the Soviet Union firsthand as a resident of Moscow at the time, I can tell you this sure smells familiar and smells like a point of no return.
Well, that does raise the question, is there something that if the pressure on the Iranian regime is increasing and Polymarket, as if it has any sort of edge, and we know it's been wrong about things before, but you know, the people are thinking, the global economy is thinking that the odds of this may be increasing. So oil here, here's why this matters more now. Volatility is up. That to me is what makes this fascinating. We're starting to see the IVRs go to their highest levels that we had since the end of October. So whatever meandering that we've had down here for the past several weeks and months, that's quite frankly, this decline in vol and staying low in vol, that's what's defined this downtrend. So, gosh, I'm going to feel real dumb, Ilya, if 2 days ago when we were talking about the potential over-leveraged short position right now in the market, and we have to look at along the curve because the vol futures are so flat that you could go out and get like a $70 call in oil, a 70-71 call spread or something of that nature, and you could get a 4-to-1, 5-to-1 potential setup. And I didn't act on it. Hopefully, maybe some others took a look at it and came to a different assessment that I did, that it wasn't worth the trade. But the Strait of Hormuz, we know from last year, if something's happening in Iran, oil can go vertical quickly, much faster than what could happen in, say, with respect to Venezuela. And I would not look at the last 2 days as a move related to Venezuela. This seems to be more about Iran. And as always, Ilya, if our friend of the show, the Ayatollah, decides to respond to any of my messages this weekend, particularly about
the show,
about mining the Strait of Hormuz, I love it. I will put it out into the world. We do need to keep moving, though, because we have only 2 minutes left. Dollar here continuing to turn that corner. Yesterday, we were exploring a potential opportunity in the British pound as it was seeping below its late December low, break below the 1-month moving average potentially happening today. The euro here, likewise, Ilya, continuing to break lower. But I think we got to talk about the yen, because the yen is now at a new cycle low in the H6 contract, and dollar yen itself is up at the highs that we saw for 2025. Okay. There was the intervention trade that we had on for the holidays, which technically is a position that will be expiring today, worthless. But it's like a $30 loss. So thinking about that again, as we go into the teeth of a 160 level, what could a intervention trade look like? Long 65, short 66 call spread, risking 1 to make 10. Given everything else that's going on in the market right now and the equity exposure that's working for me, I think that having some protection like that through the weekend may make sense. And I will try to have that in my pocket as long as dollar yen is sorting with the 160 figure for the foreseeable future.
Yeah.
Take us out here. We have 30 seconds for currencies. You have 10 seconds for currencies. Oh, gosh. Stay long the dollar?
Stay long the dollar, stay short the euro, stay short the pound, stay short the Aussie. It's all seeming to come around. Don't touch the yen. It seems to be confused.
We do have that push of DXY through the 50-day yesterday, follow up here today. Maybe a pivot has been reached. What's next on the calendar? Not really much of anything coming this Monday. There are some Fed speeches, though. John Williams, the gentleman who gave us the confidence in our December rate cut with his post-Thanksgiving speech, he will be talking at 6 Eastern on Monday afternoon, right as the futures market reopens. So really not much during the day that matters. But you know what, Ilya, you and I will be back in an hour time. We are going to take everyone out with last call today. So we'll see everyone soon. You do have Dr. Jim up next, video on demand here. He's back next week, so we'll welcome him directly after the show instead. Good luck trading for the next hour. We'll see everyone at last call.
You're there, everybody.
Nicky, we are back, son, and you know what that means. Time for a little more Tasty Live with Confirm and Send. But before we get there, let's take a look at the market after the number came out. Even the S&Ps are up around 10 to 15, maybe 8 to 15 on a wide range. They're up 23 right now. That's about a third of a percentage point. NASDAQ's up 43. It caught up to the Russell, which was up the most pre-market. Still up the most right now, up 13 handles, about a half a percentage point. Dow up 160. They're all up around a third of a percentage point across the board. Volatility down 11 cents to 1640. We both talked about how volatility caught a little bit of a bid yesterday. You quoted the
VIX one day.
Yeah.
VIX one day. You don't have to. You have the. It's VIX and then 1D.
There we go.
1D. Yeah.
I had it up there earlier. Sorry, brain fart by putting it up.
It's okay. You're getting older. You forget these things.
Absolutely.
That's why I'm here.
Absolutely. That's why I need you. Volatility upticked in the short term, but when you look at the volatility on the more monthly type basis, volatility had been up, but up ever so slightly. You can see here how it's come back down. Bonds are up 2 ticks, back to about right exactly where they were before. The unemployment number came out at 115.14. I think the market has everything perfectly priced at this moment, which is scary in itself. Bitcoin trading just around $91,000. Oil up another 50 cents. Had a couple of day run here to the upside, back to the higher end of its most recent 2-week range here. Gold up about $32. Silver up around $3. Silver up around 4%. Gold up around 0.75%. That gold silver ratio is trading around 57.25. It's moved about $200 to $300 this morning so far, one direction or the other. That's all I got, son. Let's get to confirm and send. And I know you have to leave at the top of the hour, not the 8 o'clock hour, but the 9 o'clock hour, because we do have Fast Market where we'll look at some trades from our viewers. But then I'll have Jamal coming in at 8. And then Jamal coming in again at 9 and staying with me for the closing hour there. So if you haven't seen Jamal in a while or watched his show, you can get a little bit of Jamal in your life today.
Beautiful. Let's do it.
Son. I know you're going to career day. This is good.
Yes.
I wish I was filming it.
If you want to come in and impart wisdom on the youths, you can come as well. I mean, it's in your stomping ground. If you yeah, maybe we could go to lunch. Who knows?
Maybe I'll do eat lunch is right.
Yeah, maybe I'll get invited. Who knows?
Yeah, who knows?
Friday, January 9th. Let's do this. I did my first put broken wing butterfly in GLD at prices that are now well below where gold is trading. I collected around $3 and the position is now trading for 60 cents. When should I close this?
Yesterday.
Well, today's even better because gold's up.
Yeah, you are you are right, because
it's probably marked at 20 cents now, 30 cents.
Yeah. I mean, here when it's such a subjective question, right? You put it on a put broken wing butterfly has risk to the downside, and gold has rallied. That's exactly what you wanted. So you got exactly what you wanted, and you're asking when should I take it off? I mean, I probably would have taken it off before this, but there is no right or wrong answer. I mean, the lower you pay for this, the better off you'll be. Now, you can do what Nicky has done and demonstrated yesterday pretty well with a lot of his trades. Buy back the inverted short put spread by buying the strike where your break even was and selling the long strike that you have out there, and you'd make yourself an equal distance butterfly. Like, let's say this was $5 wide and you did a 5 by 10, you'd be $5 by $5 by $5, and you'd have a free shot to the downside. Whatever you paid for that spread, you're adding to your 60 cents that it's trading at right now. But I just take it off. You got the move you wanted. Great trade. Pat yourself on the back and buy your loved one some flowers or something like that. Good job.
Yeah. No, I agree. I mean, I like the adjustment of buying in the risk and leaving on like the butterfly, but taking the money and running, I love it too.
We're both closing it, is what it comes down to. You might be leaving an existing position. I might be closing it completely and using the money someplace else. We're both. Yeah. The idea here is we're looking to close. We're looking to do something that's going to take off the risk.
Yes.
Next question, please. When you scalp, do you close winners based on a dollar profit target, or do you have a target priced in mind you'll hold on until the underlying gets to that price?
I would say usually my scalping is mostly done within the intraday time frame. I don't really have like a core futures position, but I would say I usually just do it on feel, and I just try to take the money and run. I mean, scalping futures is a tough gig. If you get a couple bucks out of it, you pat yourself on the back and take your ball and go home. That's kind of how I've treated futures trading here. I mean, I've gotten pig-headed with some of the silver, and you get a little too big. But in general, I'm just trying to make a couple bucks and move on. It's not my core. It's not my core trading.
Yeah, I would go the same way, and I would also say, it's very easy to add to positions. It's very easy to when you're futures trading to Imagine if you're a little bit bullish, a little bit bearish. It's easier to get longer, longer when you're bullish, and shorter when you're bearish at what you think are advantageous prices. You got to be careful. It's been said in the past, and I'll say it again. You don't realize how big small really is. Futures are big products in their own. There's a lot of leverage. So watch yourself there. But yeah, I think, listen, if you've got expected move of the E-mini S&Ps, and I'm just going to throw out a number of $20, and you're trading somewhere in a scalping range. So let's just break that $20 and cut it in half, $10. If you're trying to make more than $5 or $10 on that future scalp, you're fooling yourself, because the expected move is so much inside of that, and you're not going to catch the high, you're not going to catch the low. So you're really looking to get something inside that range of the daily expected move. Next question, please.
On the last call, Mike said he did a stupid. What is that?
Well, I wasn't watching, but I could tell you what a stupid is. I mean,
yes.
Exclude myself here. If you're just talking about options, then we're looking at something that has the same delta on both sides of the spread. So let me explain. So if I was buying a call spread, that would be long delta, and selling a put, that would be long delta. If I did those three legs together, that would be considered a stupid. I mean, it's nothing bad about the trade.
It's just a double. It's double. It's bullish, short,
bearish in the same trade. It's basically, a 50-50 shot, maybe a little bit better. In my example, it would be better than a 50-50 shot, because the naked put has a little higher probability of success. The call spread is a 50-50 shot. But, sometimes they'll say I'm selling a put to finance buying this call spread. I just call it a stupid. I would prefer you do one or the other. Like if you want to put more buying power to use, sell the naked put, in my example. Or if you want to put less buying power, you have a smaller account, buy the at-the-money call spread. But combining the two seems redundant or stupid.
Well, we might call it a stupid, but my man Mikey sold a put spread in SPX to buy a call spread in SPX. So that should be nice today.
Beautiful.
Sometimes it works.
Yes. Sometimes it works.
Yeah.
Yep.
Next one here.
I'll get this one.
Okay.
I know we like placing trades at 45 days. What's the window of time you're willing to open trades before you look out to the next month? Right now, it's 42 days until February expiration. When will your new positions be placed in March?
Oh, I try to stay less than 60 days. I mean, I've done some March, February diagonal spreads, which are a little bit different. Like if we're talking short premium, I want to be, if you're past 60 days, it's a little bit too much unless you're doing like a laddered puts or stuff like that, where it's just, that is the strategy is going further out. But I would say 60 days is usually like the upper limit. In terms of the lower limit, I would say somewhere, like if you're doing a broken wing butterfly or a ratio spread and you want to go into a 10 or 15 day expiration, I'm fine with that. But other than that, like put spreads, strangles, puts, I'm usually not selling those past the 21 day.
Yeah, I agree with you. I mean, that's pretty mechanical. I mean, you've done some March, February diagonal spreads.
Yeah.
Like, and March has 70 days, and you just said, like 60-ish days is my limit. What you're really looking at is if you're intra-month, meaning if you're just putting a position on in 1 month. I'm not looking at March with 70 days. Right?
No.
45 days is paramount or optimal. And from our research, we got 42 days right now in February. That's where I'm pretty much sitting until we get to around 20-ish days till expiration, which you highlighted. So 100% correct. I'm all in on the monthly options that have closest to 45 days right now, and way too much time to go for March. Good job out of you, son. Good job out of the market right now. Even the S&Ps are up 24. We'll take a quick 90-second break. We're going to recap this week in stocks with Jamal, who will be on momentarily, and then coming back at 9 o'clock while Nikki goes to career day. You don't really have like a shirt and tie or anything like that. Are you going to?
No, and you know, career wise, I don't know if I have that much to say. I was just like kind of
come on, in this day and age, you've been at Tasty now for what, over
10 years. 10 freaking years.
Yeah. That's unheard of. You should have a gold watch.
I really should. There is something. At least give me like a jacket, you know, like one of those.
Yeah, Jamal got a jacket. Jamal got a trading jacket. Yeah, Mikey got a trading jacket. How come Nikki don't get a trading jacket?
I don't get shit. I mean, I'm just, you know.
90-second break, come back. We got more Tasty Live after this. With This Week in Stocks, Jamal. If he has his jacket. Nikki, we are back, son. And you know what that means. We've got This Week in Stocks with my man, Jamal. Jamal, I'm very disappointed in you right now. No Miami jersey on, no trading jacket on to make Nikki jealous. I mean.
I wanted you in full Canes gear. I thought you'd have a beak. You know,
I know. I should have. I should have.
Here. Come on,
I should have. You know, the shirt I had on last night is dirty, but I'm going to Miami. I'm going down to Miami next week for sure for the game.
You're going to go to the game?
Yes. And I get questions a lot about what's up with Miami. Look, I grew up in Miami until I was 10 years old. Okay. Tony can attest to this. When you grow up somewhere like that, it's just in you. Okay. I mean,
you just learned how to wipe your own ass when you were 10.
Well, I can't control when I move away. Okay. I can't control that, but I did go back a whole lot. I know you've been back a whole lot. You've been away from New York. Almost cursed. You've been away from New York for a very long time. Yeah. You still say you're from New York. Okay. You're more Chicago than New York, so you can't talk.
Definitely more Chicago than New York, but I was at least born and raised there. I mean, you were conceived in Miami.
You moved at 18. That's only like a few years more.
I mean, did you at least go to college in Miami?
No, I didn't. No.
I mean, you know what?
You didn't go to college at all. What difference does that make?
I am not allowing you to go to Miami to watch this.
Yeah.
I grew up in Miami. I lived there until 10, okay? I went back every year until 16. Does that count? Is that close?
Man, 10,
is that good enough for you?
That are older than 10.
I give it to you, Jamal. I give it to you.
Thank you, Nikki.
He's a cantankerous. He took that role over really easily. That was it. That's his bread and butter.
Right into that, huh?
Yeah, you slid.
I know, right? I love it. We need 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 this type of energy for sure. How you guys doing?
I will ask you though, Jamal, because I know my dad was probably not awake for it. But that last play, did we have a little bit of extra hand, action in there? Was there a little bit of? It's over. It's done.
I mean, they're letting them play. I mean, what do you want me to say? They're letting them play.
I will say, it looked like. I'm glad that they didn't call anything because you can't decide a game on something that's bang bang like that. But the whole freaking game, Miami was getting no calls, nothing. It was, you had the targeting call, you had like these, late hits. Like it was a little bit, the roughing the passer. There was like 2 roughing the passers. It was, I was worried that the SEC was calling it in. You know that was kind of on the dog.
Spoken like somebody Nikki, who had Miami.
I did have Miami.
First of all, let me introduce you guys to being a University of Miami fan, okay? This is just how it goes. You really don't get calls. This goes back to about like 1983, 84, okay? Just being real. I mean, it doesn't matter. If you're playing a big team, usually the calls are going to be against you. This is how it goes. Jimmy Johnson said it best. You got to win the game and make it sure that you win. I mean, this is how it goes.
Is this Catholics versus convicts 2.0 if Mendoza wins? Because he's that boy, he's like a virgin. Like that guy, he's by God. And then you got the bad boys of Miami, late hits, roughing the passers, that stuff. Is this 2.0?
Well, he's from Miami. Don't let him fool you, okay? I mean, he's from Miami. He went to Christopher Columbus High in Miami, which is the same school that Cristobal went to. It's going to be – I'm actually glad that we did not play Georgia and we played Mississippi instead, Ole Miss or whatever, because I think it was better. I think if we had played Georgia, I think it would have been psychologically harder for Carson Beck, our quarterback. Yeah. And I think it's going to be hard for this dude to play against Miami because it's in Miami. If they get there again, we haven't crowned them yet, but if they get there, we'll see how it goes. And I'm pretty sure if they get there, I won't be the only one in Miami. I'm pretty sure Beth is going to end up going too. So it's just going to be that type of game.
Amazing. What's the get-in price? I haven't even looked at the tickets yet.
I don't know, and I don't even care about getting into the game. Honestly, I'm just going to be in Miami. I mean, you don't need to go to the game in that situation. Matter of fact, the stadium is way far away from where the real action will be. So
okay, I like it. The heat is on, baby. Let's go.
For sure.
I'll be honest.
How was the week for you guys?
Be honest. What are you going to eat in Miami when you go there? The first thing. Are you a Cuban sandwich guy, or is it just something else that you do? Well, you were 10 years old. You probably just had like chicken fingers.
Here we go again. This guy. You
got a Polo Loco out there.
Never mind. Yeah. Let's talk about.
First of all, we have real food. Okay, we have probably some Cuban food for sure. It doesn't need to be a Cuban sandwich. We'll have a little Haitian food for sure. Something along those lines. I mean, all right. Real stuff. We're not tourists here, Tony. Okay, are you going to Little Italy when you go back to New York? Is that what you do?
Yeah.
You go to Soho. Do you go to Soho? Is that where you go?
Yeah, 100%. Randazzo's, 100%. Get myself a little a steak at a steak joint.
You're such a tourist. You're such a tourist. I mean, seriously.
Yeah.
Don't you go to somebody's house and get some food? Or do you know anybody there anymore?
Yeah, I do. You're right.
Yeah, Uncle Rico and Aunt Mary.
Aunt Mary, you're right.
Yeah, there you go. I still remember.
By the way,
blind.
They're both gone.
Yeah.
Did you guys notice?
One quick question for you. Let's bring this back to the market here in This Week in Stocks with my friend Jamal.
For sure.
Is This Week in Stocks really all about today and really all about today that maybe it hasn't happened with the tariff talks and the unemployment number, which we had this morning, which really hasn't moved the market? Matter of fact, even the S&Ps are just about where Nick sold them. They've had about a 5 or 8 handle move.
Yeah.
Talk to me.
I wouldn't say so. Honestly, I would say it's more about the lack of movement this week. It's been we've been within the range all week. The average move for the week has been, or I should say the last 9 days, trading range has been about 38 handles in the SPX. And most days we have not eclipsed that. And I would also say it's been a small rotation. I can't really call it a rotation yet because we've only had 6 trading days or so in the new year. So I can't say we've been defined by quite anything, but there's been somewhat of a rotation. When you look at least at a couple of days this week, for sure yesterday, I know for sure, speaking of being on the trading floor, when Mikey and I were on the trading floor, we were noticing sort of this change. You saw like the consumer staples were up 2% yesterday, and I noticed that on Tuesday a little bit too. And I think there's, if you look on the week, at least some of the bigger names that have moved, some of it has been the oil names. Again, coming into the week, let's remember that. We thought that there was going to be this big move, probably to the downside in the market and maybe to the upside in oil. And while we didn't get that, we did see some oil names move. We saw Schlumberger, you saw Valero, VLO, you saw Halliburton. You saw a lot of oil names moving this week. You also saw some consumer staples names move on the potential news of tariffs. I don't know exactly when we're getting that. We're supposed to get that at some point today. I haven't seen anything yet, but we were supposed to get some tariff news.
10 Eastern, 9 Central.
Is an estimate of when these sort of things come out.
Right around right about the time when you're coming on for our market measure, we should have the most volatility in the market, or at least some movement, although VIX is basically unchanged. But to your point, and to Nick's point, he brought up the VIX one-day did expand yesterday, and you are right. I don't know if it's a rotation or if it's a catch-up. I mean, when you had everything that went on in Venezuela, and you talk about all the oil reserves, I know I got a lot of emails about oil itself, which had a move that was kind of muted right after the Venezuela taking of their president. Actually went a little bit lower before it went higher, but it's been in its range. The independent stocks like the Exxon Mobils, the Valeros, those had movement to the upside. So that really, the play really was to be in those before the taking of the president. So
yeah,
I mean, I don't think
that's exactly it. I think that's exactly it. The idea of the being them before, a lot of people are like, well, should we get in those now? Is this rotation coming? Is this going to be the thing for the new year? Getting into oil names? I don't know the answer, but to start the year, I could say, you saw those oil names move to the upside. You saw banks move to the upside. They pulled back yesterday, but banks were on the move. JP Morgan, Goldman, ahead of earnings coming up. What is it, next week, I think? They're starting the 13th, 15th.
Yeah, they start on the 13th. All the banks start with their earnings. And Nick, you got a chance to scratch or green scratch, as your other old partner, Mikey would say, your futures.
Nah.
Maybe you want to close half?
No. Come on.
Does this happen all the time, you guys? There's the bats trading.
I didn't really want them. Like fading the move wasn't them up 14 or 15 handles. We really had no move after the number.
You take 10 points of heat. My God, live a little. I mean,
I hear this a lot from Tony about your trades. I want to know. What I want to know is what annoys you about his trades. What trades does he do? I hear all the time
how profitable they are.
I know you're probably mad about that. You're probably mad about that.
I want to hear. Nikki, I want to hear from you. I want to hear what trades you're like, oh my God, again? Do I got to do another? What is it? Is it the ratio downsides that he loves to do? Because he loves to do ratio downsides. I know that.
Yeah, I mean, I had him. We got a lot. Who knows where CrowdStrike's going to be? But it's hard. I'm very active, and I'm in a lot of things. And he has, a short attention span. He's very forgetful. So he kind of is starting to miss these things. And I'm like, Dad, we got long this at the end of the day yesterday. Like, don't you remember? Like, I feel like I'm like, it's like the early signs of dementia. Like, Dad, like, it's me, like,
it's me.
We're trading, like, it's tasty, remember? So that's kind of the hardest part of this transition is keeping him along, keeping him fresh. I'm looking at like certain vitamins that I could get him on to sort of help with that. If you got any ideas, send me an email, please.
Yeah, send email. There are certain vitamins to help with memory. I forget what they are.
Memory and stuff like that.
Yeah. We're trying.
We're trying.
I mean, I could easily say it's been a boring week, which it has, but there's been a lot of different things that have happened, if you're noticing, and it might be setting up for something else. I'm not sure, but I could say that the tech names themselves have been kind of quiet still. This has been a solid 2 months. For those who complain about the concentration of the tech names at the top here, they've been quiet, man. I mean, NVIDIA had CES. A lot of those names were at CES this week, right? They had presentations. They talked. NVIDIA did have a little pop after their CES presentation, but not really anything sustainable, right? And so NVIDIA, Microsoft, Meta, they've been quiet for like 3 months now, dude. Like it's crazy.
The Nasdaq,
but it's not
didn't make all-time highs like the E-mini S&Ps did, and even the Russell, which was the weaker or the lagger for most of 2025 in the market. Nasdaq was the strongest. The Russell made a new high. The Dow made a new high. The only one that didn't was the Nasdaq, and that's the one that's really taken us to the promised land. So that's what's giving a little bit of hope to the bears. But it's really just been, as you said, I don't want to say a stock pickers market in 2026, but a little bit nimble. And I think the Tasty Live crowd is pretty nimble. We go where the action is. I don't think we marry into too many positions. You haven't mentioned gold and silver. Those have been some big movers. As a matter of fact, the gold-silver ratio spread is down to around 57. It got down to around 55. It got up to around 59. So it's definitely mid-range at 57 right now. That would be either long or short 2 gold contracts and long or short 1 silver contract, depending on which way you want it to go.
Yeah. True that. We've I don't think we've gotten a new high in silver, but I think we came close to a new high in gold if we not eclipsed it. Maybe
the other day we did, I think.
Yeah.
We got up to like 45 and change, I want to say. Was like the high, or almost 46. Yeah, 45.80 was like the high.
Yeah,
they've been resilient. I mean,
like 82 or 81 or 82 a couple of days ago too.
Copper too. I mean, all the metals have been going nuts.
Copper that's actually a good call out, because copper actually, I think, got to a new high again. We saw the big dislocation in copper a few months back, and it's back, man. And that's something. So yeah, I mean, they've still been very resilient. You would have expected them to fade hard by now, but they've been very resilient.
You can mention copper, but you can't trade copper, I don't think, if you're a retail investor. I don't.
It's still the put spread.
Okay, sure. You want to trade it with an option put spread? Sure.
Don't you remember, Dad? Don't you remember? It was yesterday, Dad.
Jamal, I'm going to give you the parting words, and then I'm going to give my son the back of my hand when we go to this here. Give me your parting words, Jamal.
I would say it's only been a few days. It's only been 6 days. There's nothing to get too bothered about one way or the other. We'll see where this year ends up. And
I think the oddest thing about this week was, at least for me, I took off on Monday. Kids didn't go back to school, at least here, until Wednesday. I can't believe today is Friday already. I'm all messed up. So next week I'll be on the straight and narrow, nice 5-day week, getting back into everything. I don't know. For me. The days
and the one last thing I will say, it's clear that the jobs reports don't really mean a whole lot right now.
I don't think they ever do, but sure, I don't want to make my friend Chris mad. So
we've had big moves before. We've had big moves on other ones. I mean, you can see the spike at 7:30, whatever.
You had big moves on Thursdays too. I mean, like, it doesn't mean anything. Like,
Oh God, jeez. I mean, you could see the volume spike on jobs reports. I will say that it's obvious. You could see them typically. You didn't see it today. It wasn't even there. It didn't matter.
Hey, if it brings all the boys to the yard, if it brings all the boys to the yard, I don't care what you call it. I'm happy it happened. All right, my friend, let's take a quick 90-second break. Thank you, Jamal, for coming in. Good luck with Miami in the coming weeks or so. We'll take a quick 90-second break. We'll come back. We'll catch the opening bell right after this. We'll be back in 90 seconds with Tasty Live. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Fast Market. I think I was real early, premature, as we would say in my boomer language. And you were a little late. We would call it holding out strong.
Okay, perfect. Didn't land. I agree, John.
Can't get any love from James. Even the S&P is up 22, NASDAQ up 75. Russell, the strongest of the group, up 25. That's a full 1 percentage point. And the Dow up 150 and change. All seems like smooth sailing at the moment as volatility's in by 7 cents. Let's get to Fast Market.
Let's do it.
Check it out.
Yeah.
Yeah, there we go.
Market.
Much better. Give us a little applause, James.
Woo!
Can't get it.
No, there we
go. There we go. Thank you, sir.
Let's do it. First trade.
Ready.
Let's see what the team put together. Rivian bullish. Okay, Rivian not crazy bullish before earnings. Stock super cheap though, thinking the 2022 February strangle. RIVN.
IV rank of 41 is pretty good. February earnings come on the 19th, the day before expiration. So I think you're okay there. You know, if this strategy works out, you'd be going on a 3-week time frame. But look at the, it's hard on a $20 stock to sell a strangle. You go to the 20-ish delta options, and everything is relative. But you go to the 20th delta options. What do you get? $1.50? You know what I mean? Like,
yeah. I did a covered call.
Okay, that definitely.
We don't do a lot of covered calls, and I think this is a spot. I mean, it's had a nice rally, so I'm certainly buying near the top here. But I think we can use this as like something where we can try and reduce basis, see what happens here. Obviously, if the stock goes up, that would be a great thing. But small little position, I think it gives us a new strategy we don't typically utilize.
Sure, and you could have made it less or more bullish by going closer or further away from the market. You did the 22 strike with the stock just under 20, which is actually almost an option that has a 40 delta. Usually we go to a 30ish delta. So you take it a little bit more here. You could have gone down to the 20 or 21 and collect another 20 or 30 cents. I like the strike selection you used, but you can make it more bullish and more bearish is my point by going further out of the money or closer out of the money. I would probably stay somewhere between 50 delta and 25 delta, but again, it's up to you. Yeah. You did the 40 delta basically right in the middle there. I like it.
I chose that because that's what Brian was looking at for the calls. So I figure I follow my man.
That's right. Listen, if they take the time yeah, good for you. Good for you. All right. Next one, please. Crude oil here, ready to explode higher. Well, it has a little bit, right? /CL up almost 6%. So good job out of you, Abhishek in Abhishek, sorry.
I don't know. You could be right, too. I just said
you sound better. In San Mateo, California. Good job out of you. I hope you did this yesterday. Oil up $1.36. What do you think about here? I'm locked in on the February call spread. 57.60 for $1.25. 50-50 shot, but he likes it. /CL. What do you think here?
Yeah, you had good timing on this yesterday. We sold puts earlier this week, and I closed them out yesterday, and then I actually rolled into an iron condor. So I just have a 2-point wide iron condor here, 53, 51, 65, 67. I caught it on the way up. I didn't catch all of it, but I think here is a good spot to be like neutral. If we get a little bit of a downside move, I'll lean long from there. Get a little bit of an upside move, I'll lean short from there. I think that's, this 60 spot is kind of been the chop zone. So I'm playing it a little bit neutral at this point.
I would agree with you, and good call by San Mateo, California here. And more importantly, the strike selection was good. Yesterday, the stock was closer to 58. He's buying the 57.60. A little bit of call skew. It's exactly the way I would do it if you were bullish in oil. About 1 strike in the money, about 2 strikes out of the money. That's the way to play it. Good job out of you.
Yeah. A little bit of a bid in volatility here, up 18 now.
A little bit of a bid in volatility, but as high as we've seen it for the day since we've been on the show.
Yeah.
Yep. Good catch.
Next one, please.
And the VIX 1 day, just to put that in perspective, is actually quite a little bit of a bid too, 1375, so it's a little bit higher. PayPal support, February 55 puts. What do you think here? PY.
I do not have a position here, so we're going to rock and roll.
Yeah, stock hasn't had an uptick. I don't know why he thinks there's support there, but I will agree with you 100%. I mean, it's trading at numbers it traded at in April, and maybe that's what he's thinking about support. Hard to go 10, 12 months away or 9 to 11 months away and say it's now support. But hey, price is king, and we agree with you. All right, you sold the February, which would be 42 days, the 55 puts. You sold those 55 puts, which have a delta of around 30-ish, 32. Classic mechanics on a high IV rank stock, which is good there, and directional bias. Blake in Madison, Wisconsin. I hope you got your mojo working.
I like it.
Beautiful. Next one, please. Apple. Actually trading cheaper relative to the rest of the Mag 7. Yeah, you're 100% correct, Craig, in Roanoke, Virginia. I've been there. Been considering adding shares or maybe that June, Feb, 250, 270, poor man's covered call. Not exactly cheap, but feels worth it for the long haul. What do you think about Apple?
250, 270.
Yeah, stocks around
June, Feb. Oh, so you're going far out.
He's going like 160 days out. I think a little bit too far for me, but when you look at the June markets, they're in Apple, they're certainly good enough to trade. I mean, they're a nickel wide.
Yeah. I'm going to do this a little bit shorter duration. Let's go April, Feb.
Sure, April's 100 days. I think that's far enough for a synthetic long spread, right?
Yeah, and I'm going to use your strikes. I'm going to do the 250, 270. It's marked around $15. So you are paying net extrinsic value here, about $700 or $7 per share in extrinsic value. But you do have one extra roll in this because you have March and then you got April after that. So you with a roll, you probably are going to collect another $4 or $5, assuming the stock stays here or goes higher. So I don't mind this.
Good. I don't mind it either.
I'm following.
Yeah.
All right, 1462.
1462 it is. And just to give you a little bit of context behind it, it's got about 30 delta to it. So it's definitely, covered call, like it's a poor man's covered call. I mean, it's basically like a synthetic covered call.
Yes.
Basically like a naked put.
Perfect. I like it.
All right, beautiful.
I probably could have done puts. Should we do puts too?
You want to do a stupid?
Yes.
I only say that because we had the question about a stupid. So you're looking at Ivy rank of 19 in here. You've got a March, you got an April Feb spread on now, and you're looking to sell puts. I would probably go down to around the 15 delta since you already have long delta. That would give you almost.
Yeah, I was thinking about like the 240s as a 22 delta.
Yeah, or the 235s with
235s. You want to do that?
Sure. 235 is around 15-ish delta, 16-ish delta.
All right. We're going to do the puts too. Double bullish. The stupid, baby.
You're all in Apple, man.
Yeah. I mean, it's had a nice little pullback here. Why not?
Yeah. Down $1 today with the NASDAQ now catching a bid up 20. So sure. I get it. You get it.
Cool.
Beautiful.
All right. We're in. Thank you, Craig.
Next one, please. SPX 0-day iron condors have been money for me all month. They've been money for us too. The month is only a few trading days old, so it's been real money for us. Keep going. Keep doing this until it stops working. Jeff, I think you're right. What do you think about it trading it today? I already spoke about what I thought about it today earlier. What do you think about it? Jeff in Miami?
I'm going to be out of here soon, so I would say no. But if you would like, we can certainly do one.
Yeah, no, I'm gonna abstain today from it with everything coming out at 9 o'clock, and maybe be a little bit more reactive when the market, and when the market moves at the 9 o'clock tariff decision.
Mm-hmm. Okay, cool. So we're gonna pass, Jeff, but
we're gonna pass. But I love it, and I think it's become a staple for a lot of Tasty Live traders with the appropriate size count, and it's been working quite good. You are going to get your full losers in there every once in a while.
Yes.
But it seems to be a profitable trade for many, at least from what I could tell from the emails I get and just by watching X and other places. So good job of them. We have been 5 for 5, my friend Mark just told me. Good job.
Beautiful.
Beautiful.
I bet. Happy New Year, bats. My resolution, stack more Bitcoin. All right, Sean in Hong Kong selling those 50 puts across every month. That's laddering, right? It is certainly laddering. Mm-hmm. I do have long shares in IBIT. If I didn't have, I mean, I guess we could probably do a little bit more.
Yeah.
You want to do February and March?
Sure.
And we'll do the 50 strikes?
Sure.
All right. All right, we're in. I sold the February and March puts. These are laddered puts. I definitely have some long delta in Bitcoin. I'm with you, Sean in Hong Kong.
Yeah, I'm with you too, Sean. IBIT has been a good trade. Coin has not been a great trade.
No.
Is it BITO? What's the other one? BITO has been a horrible trade. So iBit would be the place I would be trading if I was looking to do something in there. So more importantly than the directional bias or anything else like that, you pick the right vehicle.
Yeah, I like it. I'm in.
Next one, please. Tesla down 10% in 3 weeks. January is usually bullish. Grab the 430, 445 Feb call spread. Gary in Medford, Oregon says with a period, but I think it's kind of a question mark.
430, 445.
Mm-hmm.
I mean, it's a risk one to make one 50-50 at the money shot. Volatility is relatively low. You got an IV rank of 8. What do you think of this?
Tesla unchanged today. I mean, I don't hate it. IV rank of 8 does kind of want you to do a debit spread and not sell premium. So I think Gary's in the right space here. Earnings are January 28th at the end of the month. I mean, this might be a March Feb diagonal spread for me, maybe more than just the 50-50 shot. But I don't hate the 50-50 shot either. It depends on how bullish you are on Tesla. I'm trying to talk about Gary opinion here. March volatility is 51. Feb volatility is 50. Not too much. One vol points doesn't scare me. If it's more like 3 to 5, then it scares me.
Yeah, I don't mind it. I mean, we don't do a lot of these, so
the vertical spread, go for it.
Yeah, just like an at the money call spread, just
yeah. It's basically like it's a synthetic covered call. It just uses too much money to be a covered call to the candidate because the stock is such a high price stock. You look at a $400 stock.
Yeah.
Yeah.
All right, I'm in.
Beautiful.
I did the same strikes. Thank you, Gary.
Beautiful. Good job out of you. You paid $7.18 for it. You just did a $5.
I did a $15 wide.
$15. I couldn't see it.
Yeah.
434. Yeah, you're good.
Same. The risk one to make one.
Yep. Totally. RBLX. Think the sell-off is done. Probably going to be range bound here. Selling the 65 put 90 call for 555 triple nickels. Closing before earnings. What do you think about RBLX?
So I have a leftover short put at the, what am I at? 80. I think I was at the 80 strike. I have the 80 strike put. So
you got bullish delta in there by default already, and we would hope that that Todd in Pueblo, Colorado is correct too. We hope that it goes higher too.
Yeah, I'm going to move this to the 65-85. Get you slight short delta, basically zero short delta. I mean, you have 1 or 2 short deltas here, but it's a neutral position. I have long delta, so I will be net long.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Hello, everybody. Happy Friday. Tim Knight here, and we've got a very green day on our hands. The Bulls running roughshod over the 1 or 2 bears left. Today was supposed to have 2 events, the jobs report and the Supreme Court ruling on tariffs. The second one didn't happen. Everyone was on the edge of their seat, wringing their hand, all excited, and 10 a.m. rolled around, and like some totally uninteresting ruling came out, not the tariffs one. I'm not acquainted with the Supreme Court schedule. I don't know if it's like once every Friday is coming out, but it'll happen when it happens, I guess. They don't pre-announce what's coming up. The jobs report did come out, and not that many jobs out there. Only 50,000 added in a nation of 1/3 billion people. And that's what the bulls wanted to see. Weak jobs, and therefore everything's up. The RTY, the ES up about 2/3, 0.75%. The strong one is the NQ, up over 1.1%. And metals are having another good day. Metals continue to absolutely thrive. So I've got a bunch of charts. Let's jump right in and see if we can cut through them all. And by the way, the one complaint we've got on this show, I'm glad it's just one, and it's easy to solve, is you can't see where I'm pointing. And we've made a change that should cure that. So hopefully we'll have 0 complaints now. Because I realize if I'm pointing out this and pointing out that, and you can't see where I'm pointing, that's not very helpful. So you can see now, I believe. Here's the IWM, the small caps. Lifetime high. We sneaked just a teeny bit above it yesterday, and now there's no question about it. We've jumped right over that line. So this is a confirmed breakout. It's in candlestick terms is a spinning top, suggesting some uncertainty, as opposed to these lines which are sort of resolutely higher. But we are, and there's no doubt about it, heading for a lifetime high close, and intraday lifetime high has already been accomplished. The diamonds are up, but not quite as much, about 0.5%. They're in the neighborhood of lifetime highs, which was achieved on Wednesday. Next week, earnings season starts to ramp up. The first week of earnings is, it's like banks. I personally don't find it that interesting. I like the Amazons and the Netflixes and Teslas and that sort of thing. But earnings season does begin in earnest next week, and we get the CPI on Tuesday before the open and PPI on Wednesday before the open. And like I said, I don't know about the Supreme Court. Maybe it's a Friday thing. We'll see. But anyway, we are quite close to a lifetime high on those diamonds. And the spider also, lifetime high, very strong all day. We're up 52 points on the ES right now. And it is broken above this, let's call it a cup with handle pattern here. Not a bad look for the bulls as we end the week. This looks pretty strong and has every possibility to just keep muscling higher. Let's just add a ray, right, like so, to kind of flesh out that pattern a bit. So you can see we have been, ever since October, been banging around this pattern, and finally today we've reached escape velocity. We tried on Wednesday. It peaked above it, but closed weak. But today has definitely done the deed. So the bulls have reason to celebrate this weekend because that's a very clean breakout. Over in China, FXI, down a bit, 0.14%. Had a pretty nasty gap here from Tuesday to Wednesday, following Monday's very powerful rally. Kind of a mess right now. So, given the choice, clearly the spider looks a lot better than the likes of China right now. This has been grinding around, it seems, endlessly for months at this point. It can't seem to kind of figure out what to do with itself. An Asian ETF that is doing well and is at lifetime highs is Korea. EWY pushing very nicely higher today, 2.2%, and a lifetime high, just about across the board on these. So turning our attention to tech stocks. Now, yesterday tech was the odd man out. It was the weak one. They've switched roles. Now tech's the star today. It's making up for lost time. The thing that will basically snuff out the final bearish hope at this point would be to blast above this gap. It's getting close. The spiders may well be leading the way on that. They didn't have exactly the same setup, but rather similar. The cubes are pretty much at their highs of the day and are very, very close to that gap. The gap itself is, of course, between here, November 3 and 4, and that's been in place for all of November, all of December, and so about 12 weeks or so. No, about 10 weeks. But that would indicate that I suppose earnings season is going to be really good if we go flying above that triangle pattern. Hasn't quite done it yet, but it's getting very, very close on the cubes. Semiconductors, which are a vital element of the tech scene is at lifetime highs and doesn't have anything to conquer. I actually thumbed through all 25, the 25 top components of this SMH, and it's a mixed bag. Ironically, like NVIDIA is one of the murkier ones. It's been grinding away for about half a year now, whereas there are some stocks that just seem to never go down and have gone up literally thousands of % in recent years and have been just pushing this thing higher steadfastly since 2008 autumn. So SMH, very clean breakout here. We've got a cup with handle here also, and we jumped above it this week and have spent the entire week above this breakout level. So the spider's looking to close strong, as are the cubes, as are semiconductors. NVIDIA itself is it's up, but it's not too much to celebrate here. It's up 0.47%. It's pretty close to where it was in July of last year, and well off the highs, which were established in October. So this prospectively could still break down. We might be in the midst of a distribution top here, but it's really a bit of a mess compared to its compatriots. Micron, for example, MU, it's one of those superstars. This one has not even looked back since early April. We're at a lifetime high presently on this, probably a lifetime high close, up almost 6% on what is obviously a very richly valued stock already. A much younger stock, which I'm actually short this semiconductor, is ARM Holdings, ARM. Compared to its compatriots, it's had a pretty poor showing this week. Look at this. Red, red, a little bit of green, red, red. Trending nicely down all week long. So if you can imagine, semiconductors actually weaken, I would suspect this weakens much faster, because if it can't manage a rally in this extraordinarily supportive environment, I think it would be all the more prone to weakness if semiconductors in general started selling off. So hanging on to that one. Another short, which is behaving itself, is Lululemon, down about 4.5%, about almost $10 today. This one has been trending downward for a year at this point. Pretty extraordinary stuff. Another one on the short side, which is having a nice slip today, is HIMS, HIMS. I mentioned this from time to time. This is down about 5%, coming off this pretty clean head and shoulders reversal pattern here. The base of this pattern here is shown as the neckline. We fell, we rallied, tagged that neckline, and resumed the weakness there. So that one's going pretty good. Okay, as we always do, let's turn our attention to precious metals, because they just keep on keeping on. Gold, GLD, up 0.72%, and starting to get some distance between present price levels and this zone of support, that line right there. We've spent all 5 days of this week above that level. Last week it looked pretty bad. We had fallen hard under there, but it has righted itself, and we could be at lifetime highs on Monday. There's not too much to do to get there. This was the prior peak, like so, back on Boxing Day, and we're getting awfully close to that. The gold miners, GDX, tend to be a little stronger if gold is strong, a little weaker if gold is weak. So true to form, they're up over 1%. Well, they were up over 1%. They just ticked down a little bit. We're up 1%. Green bars all 5 days of this week. Lifetime high on this one. And a pretty clean pattern here in terms of yet another cup with handle. These seem very common these days. So we cut above it here. Little, a few pennies here and there of violation, but on the whole have stayed above that line and are starting to get some comfortable distance with the recent rally. And of course, in doing so, dust has gotten ground into just that. Lifetime low on dust. This is the leveraged bearish fund against miners. And you can see it has just done nothing but fall for a long, long time, because precious metals started to sparkle late in 2024, and they really caught fire last year, and they just continuing on this year. And metals like copper and aluminum and such have also added to the metallic glory here with XME lifetime high, up much more than GDX, interestingly enough. So XME up 2.37%, coming off of this bullish looking pattern. And here again, all 5 days this week, green bars. Over in Silverland, the silver futures are up 6.15%. SLV itself is up 3.88%. Near lifetime highs. For the last 4 days, weak open, strong close. So here again, we've got a fourth green bar, and we're going to close rather near lifetime highs for silver. And it's not as heavily traded, but as I've mentioned, there is a ETF for silver miners, SIL, and that's up about 2.5%, also at or close to lifetime highs for that one. And just in passing, we'll just mention palladium PALL. It's also up, although only about half as much as silver. So we're up 2.83% on PALL. It's a mess. Look at this. This is like this big diamond pattern floating around. Much riskier than the likes of all these. I mean, as expensive as gold is the safest looking of all those charts. So done with precious metals. One thing we hardly ever look at this, but I just want to mention in passing, those of you who follow natural gas, this ETF BOIL is very indicative of how weak natural gas has been for ever since December 5th here. It had been doing strong. It spiked higher for some reason. And since then, natural gas has been plunging. And this is a leveraged instrument here. So BOIL in particular was slaughtered. Over just the past month, it's lost about, 2/3 of its value. And now leveraged instruments are kind of deceptive that way. They tend to have really outsized moves and degradation and so forth. But that is just, it was such a stark move and such a radical plunge that I just wanted to at least pop the chart up. Meta had an announcement today with respect to nuclear energy. Now they're building, I think they call it Colossus, or is that XAIs? I don't remember. I think it's Meta's. But they need energy to power all those chips. And so they've made deals with several nuclear power companies. Meta itself is up around 1%, just like the cubes. But the beneficiaries of this announcement, one is a private company, but a couple are public. One is OKLO. This is Sam Altman's nuclear outfit. I actually shorted it. I was not short this mercifully, but when the news came out, I did short this on strength. And it's actually looking to close near the lows of the day, although it's still up 7%, but it was up like twice that much percentage-wise earlier. And the other, this was not part of the announcement, but it benefited. This is in sympathy with Oklo is NNE, nanonuclear. Open strong, but look at this, it's actually down on the day. But the other party, the other public party that was announced was Vistra, VST. Same deal. It's up strong, 10.8% now, but it was up much stronger at the open. And I still think this is quite vulnerable to weaker prices, VST. Goodness, it's the bottom of the hour. Okay, well, that's a pretty good place to wrap it up. So have a good weekend. And that wraps up our first full week of the trading year. And I will see you here on Monday. Have a good one. Bye-bye.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we're back. It's time for the last call. We're winding down the trading day. We're winding down the trading week here on Tasty Live. I'm Chris Vecchio. He's Ilya Spivak. Ilya, not much has changed in the past hour since you and I last convened.
No. And I've gotten long crude oil, as we talked about, but I still can't get a decent setup on Russell. I want to be long, but this risk reward is just not happening for me with the way the vol is priced. I might have to wait until next week.
Well, the Russell is among the leaders today. Stocks are having a nice day after the non-farm payrolls report and non-SCOTUS decision, perhaps. Either way, vol isn't across the curve. The S&P up by 0.75% right now. 70.1475. That's up into a new all-time high, both on the ESH6 contract as well as SPX here. So if you're at home and you just buy and hold, your SPY is on pace to close at a new all-time high. NASDAQ, likewise, Ilya, 1.1%, potentially trying to break out, really on the back of the semiconductors, and we'll look at the sector performance shortly. But your Russell, your Dow Jones, those are both on the march higher here as well, though the Russell has pulled back a little bit more in the second half of the day. Otherwise, the bond market, a little bit of a twist. Notes touch lower, bonds a touch stronger, neither really breaking out of any sort of meaningful trading range that we've seen in recent months. Gold back above $4,500 an ounce. We see silver flirting with $80 an ounce again. Copper, likewise, back up near 5.9. Overall, Ilya, the dollar is continuing to find some strength here versus the euro, versus the pound. Our friend dollar yen, we're going to look at the spot rate and not the futures. Dollar yen here encroaching on the highest levels that we've seen since 2025 and ultimately back near 160, which has drawn intervention concern. Other than that, though, aside from the top level macro, we can turn our attention to the individual movers and shakers in the equity markets today. And it's a typical cast of characters. Your NVIDIA, your Tesla, your Apple, your Amazon, the Mag 7 names are at the top of the leaderboard in terms of trading volumes here. Ultimately, though, Ilya, it's a day where we've seen good breadth, a lot of strong sector performance across the board. Among the 25 sectors that we like to track here on the shows, I see 20 of the 25 in the green. The 5 red are healthcare, oil and gas exploration, and then a handful of the banks, all modest losses around 0.5% or so. Your home builders, your rate sensitive items in the wake of President Trump's announcement that his reps would be buying $200 billion worth of mortgage-backed securities. That's helping the home construction, home builders, ETFs, and the coterie of companies that make them up 5% or so. Ilya, it's a day where stocks are moving into the highs. You were talking about the Russell here. What impresses you about the Russell as someone who, dare I say, famously is a little bit less inclined to be bullish than I am?
I'm very much less inclined, but you don't fight the price action. If what we're looking at is several months of digestion, then we've consolidated a good bit of the, dare I say, belligerent run-up in the course of most of 2025 after those aggressive April lows. I mean, at one point in 2025, we erased all of 2024. And then we came all the way back and took it back and then set higher highs. So, and it was almost a one-way bet. Since October, late October, we've kind of consolidated across everything. And that's thanks to the Fed being feisty then. After all this time of standstill, we've digested quite a bit. This is a very different kind of a setup here. And as you're making a higher high here, you have a breakout. You got to go with it when the price is there. I mean, if you're right at the wrong time, you're wrong, to quote the great Ira Harris. So when you're looking at this, then it just becomes a question of, can you structure the trade? Because obviously from here, it would be a push to record highs. You don't really have a very clear sense of what the bogey is. And so when I start doing the math here and just looking at pockets of liquidity, when you look at the place where the volumes are, there seems to be some kind of a homing beacon, let's call it back into a 618 fib extension kind of a thing. It looks like about a 50% extrapolation. It has a homing beacon on it, just in terms of where the volume pockets are once you start to look at the options. And so when you look at this, unfortunately, right now, you're not really getting better than one-to-one risk reward. And that's just not good enough. So if I'm going to be IV is low, so I'm in buying calls, but buying a call vertical kind of a mindset here. And if you look at sort of what this looks like, then you just have to wait. In my mind, at least I have to wait because I need the pricing to look better. I need for there not to be a situation here where we have not even 1.5 to 1. So the breakouts there, I just don't have a setup that I like to actually execute.
Some of the names in the Russell today that are leading the way higher, Bloom Energy, which is now the top component in the Russell 2000. That's up 10.9%. One of those new age defense contractors, Kratos, is up another 9.68% today. That's the third largest component of the Russell as of yesterday's close. IonQ, this is not doing great. It's the fourth largest holding, but you go down to number 6, like SATS. Okay, we're at EchoStar here. It's another strong performance, 2.29%. So people are reaching for the small caps today, Ilya. It's one of the reasons why when we look at something like RSP, the equal weighted S&P 500 coming out of today's session, it's getting ready to close up at a new all-time high. I think the most remarkable part of this is the collapse in vol today, though. I mean, the chart setups for the S&P, the NASDAQ looking a little bullish. It's been more or less the predominant thing that we've been discussing all week long, from first call on Sunday through last call here on Friday, at least in my view. But the volatility now, VIX is going to be closing at a fresh yearly low here today. The vol futures curve, if we go out to the F expiry, the January expiry, That's going to be down 2% today, not quite a closing low. But then G26, February, that is at a new closing low for the cycle. Don't we have CPI on Tuesday? Isn't there a Fed meeting at the end of January?
All those things
next week. There's a mismatch here, it seems like, between the narrative and what's actually going on in the market. We're not complacent, are we?
It's an interesting thing because, as we've been talking about at length, the markets want a rate cut extra on top of what the Fed has been telling them since June. It's not like the Fed has changed its mind recently. They've been saying we only have a willingness to deliver one cut in 2026, and that's been Stephen Mirren is on the board, Stephen Mirren is not on the board. And we've had it this way since the June update of the summary of economic projections. So the Fed had a chance to review that call in September, knowing what the markets want, had a chance to review that call in December, knowing what the markets want. So it's weird that they still, even with all the positive evidence we're seeing here, they still want that extra cut. Doesn't look like these NFP numbers really justify aggressive easing. They're not by any means catastrophic. They're certainly not going at the negative cadence that Fed Chair Powell hinted at last month. So when you look at all of this, you go, what's the market so antsy about? Where on the one hand, term premium in the 10-year U.S. Treasury is at the highest since 2014. That's a sign of uncertainty. The trade policy index shows a ton of uncertainty. Last year, that was a big headwind for global trade volumes. They fell by the most year on year since the 08-09 financial crisis. Markets still want insurance. And if we get a hot CPI number here, that's not going to sit well.
Yeah, it puts the Fed in a place where, which one do they care more about, the labor market or inflation? And thus far, even though the past 3 months have averaged 22,000 jobs lost per month, the market's telling us that there's just a 5% chance that the Fed acts later on here in January. January 28th is the next Fed meeting. Hey, Ilya, while we have a quick moment here, let's flip on over. There is a pretty big deal going on right now for Tasty, and I think it's worth pulling up here on the screen, Ryan, because it's a pretty big deal.
Yeah.
It is a pretty big, that's supposed to be the cue, folks. It's fun. There it is. It's the big deal.
It's the big deal. There we go.
So from now through March 31st, there's a 4% cash match on qualified deposits up to $10,000, minimum deposit of $1,000 to qualify. 30 days of commission-free trading for stocks, for futures. It doesn't apply to FX or crypto, though. Either way, though, I'd encourage people to look around and see what our competitors are offering. You're going to be hard-pressed to find a more competitive offer right now. So if you're a longtime listener, viewer, and you've been thinking about making the switch, now's probably a good time to do so. tastylive.com/big deal. Again, tastylive.com/big deal. Again, that runs through March 31st, and you're going to hear about it every day here on the network.
Live show, folks. We're doing it live.
We are, and we're not reading a script. I'm just kind of just looking at the image on the screen here. All right, so outside of stocks, which are continuing to press on the highs, trading volumes today fairly light, just getting through 1.1 million contracts traded here. You're not going to find anything remarkable in any individual equity name as well. I got to talk about gold and silver. Have to do it. Because this week,
by all means, music to my ears.
We're coming into a week where there was some concern about, is this market overheated? Would we be seeing a big roll out of gold, silver, copper, platinum, palladium, because the metals have done too well? And those fund managers, those commodity indexes, they need to rebalance and go back to their chartered weights. Can't have 25, 40% of your fund in precious metals at the start of the year if the policy statement's calling for like 20% exposure. So you're forced into selling. Maybe that's what occurred this week, Ilya, to hamper some of the gains, but we're going out with a bang. Silver finishing up 6% or so, encroaching $80 again. Gold back through $4,500 an ounce. Are we in a new world? I mean, the dollar's up the past few days. Gold and silver are up. Stocks are up. Are people just buying everything indiscriminately right now?
Well, I mean, they're clearly not buying everything indiscriminately, because for the dollar to be up, the euro has to be down, the pound has to be down, the yen has to be down. All of those things are occurring. I got off my long yen position today. It hasn't fully broken out, so I haven't gotten long the dollar against the yen yet, but it's happening pretty much across the board. And so, no, it's not like they're buying everything, but there is certainly something of a rejigger here. I mean, it does make sense that the dollar is up on the kind of day that we have here today, but yields are not really doing much but for the front end. That might be where you get a little bit of a dollar impetus, though the dollar has been quietly gathering itself for an advance. Again, if you thought that this gold rally had anything to do with some sort of de-dollarization, I've got a bridge to sell you, because clearly that's not what's going on. The dollar and gold have been well supported together, though obviously gold has outperformed. Crypto, on the other hand, is taking it on the chin again. And I'm back short. I've got an IBIT vertical here. It looks like we're back into our range, suggesting that we were talking before, you were seeing triangles everywhere. This looks like a continuation triangle with bearish characteristics, whereby we went into this thing going down, and we now have this consolidation pattern here. The path of least resistance in setups like this would be to break lower. So I've got a little vertical on IBIT here, looking for the next legs. So again, if you thought that this gold rally was some sort of anti-dollar thing, maybe I can interest you in some sort of other side bets on, let's say, dollar. Make a market. Because what we're looking at here is very clearly not that. Gold is doing things that Bitcoin is not doing. Gold is doing things separate of what seemingly the dollar or yields are doing. So it's not that story. I'm starting to wonder if the dollar cares more about rates. I mean, if we look at ZT here or the 2-year yield, you can certainly get the logic. I mean, yields are clearly up here in the wake of what's been going on, which, by the way, is very interesting in light of an NFP number that you'd think the markets would go, wait a second, this is helpful for Fed rate cuts. This number was nominally a little bit weaker at the headline. And it's a very comfortable narrative. Stocks are up. NFP was weaker. Yay. Wait, yields are up? Dollars up?
What if I were to say that the market's looking at unemployment rates down and wage growth is accelerating?
Which is what we were talking about, because one of the great things on display in the third quarter GDP report, in which we subsequently saw confirmed in other sort of more active data, most recently, of course, the ISM report, is that consumption came back in the third quarter.
Yes, it did.
And with wages like this, and with apparently signs that hiring is indeed picking up in the service sector, even as it remains woefully anemic in manufacturing. Weren't the tariffs supposed to rebuild manufacturing, and now it's shrinking at a faster rate than it was before? Anyway, I digress.
Manufacturing shed jobs in 2025.
It is getting eviscerated, and it is getting eviscerated around the whole world. But in the U.S., it is certainly no exception, and these wonderful tariffs are certainly doing their part to make things worse.
Well, we went from 2 million plus jobs growth in 2024 to just under 600,000 jobs growth in 2025. That's the lowest total jobs we've had in a year since COVID. And prior to COVID, you have to go back to 2009, which is like at the depths of the global financial crisis. So the labor market, you've heard a lot of people, remissing that, are we in a jobless recovery? Are we in a job growthless, or however you want to phrase it, a K-shaped economy right now, where corporate profit margins are going up, productivity is increasing, consumption is going up, but the labor market's kind of at a standstill?
Yeah.
As a result of some of the data we've seen, it's really like this is that K-shape. I think it's the perfect stat to encapsulate that K-shape.
Yeah, I mean, if you
labor share of GDP, labor share of GDP just fell to its lowest level ever in the United States.
Yep.
Median household wealth is at its highest level ever in the United States. And that's the story, right? You own financial assets. This is not an economy you're worried about.
So according to the latest ISM data, manufacturing employment has now contracted for 11 consecutive months. In January of 2025, there was a brief period where it was stable, not really growing. And before that, it contracted for another 15 months. We've had, let's see, count them, 3 months of growth, going all the way back, 4 months, narrowly, since the beginning of 2023. So the manufacturing sector is getting eviscerated.
It has been.
Whereas in the service sector, we've had in the past month, December numbers, the strongest employment growth since March of last year.
It's a mixed labor market. It's a mixed economy. For people out there that are getting into trading, and maybe you know someone that isn't, it's a good time to perhaps get them interested in the market right now. I'm certainly interested in the market right now. If this applied to me, I would do it. I would refer a friend. Oh, look at the production team there, right on time. That's why they're the best in the business.
See that, folks?
If a referred customer opens a new account and funds it with a $2,000 plus initial deposit using a friend's referral code, both the referrer and the referral will receive a $100 bonus. Easy. Low-hanging fruit. Low-hanging cherry, dare I say? Go to
I don't know how you don't get excited about these markets if you're out there on X, on whatever social platforms, sitting at the dinner table with grandma, and you're arguing about politics, you're arguing about the economy, you're arguing about the midterm elections. Those are all trading opinions in this environment, and you can get real-time feedback on those opinions. Just watch the price go.
That's tastytrade.com/referral for more information. Ilya, we're in the final 5 minutes or so here of the day. Stocks are a little bit off the highs, but they're still closing up quite strong. I really think the NASDAQ's the most fascinating chart right now because everyone associates the equity market rally with tech, and the NASDAQ has not been a leader in several months. The S&P hitting a fresh all-time high today in both SPX and ESH5. The Russell moving up into a new high today. The NASDAQ is still trading below its December highs here. But there is a sense of resiliency right now, and I'm looking at these charts. A few days ago, you could have argued that maybe a top was coming into play here, a failed breakout with this Morningstar candlestick pattern. Instead, today, we get an immediate rebound, and we start to move to the upside. Semis, which yesterday
means evening star, folks.
Yeah, well, we see here that the semis are up to a new high now. Evening star because it was topping.
That's right.
But you now see here the SMH semiconductors moving up into a new all-time closing high. The Mag 7 haven't all been there, but for my view, Ilya, today was a good day to get some exposure.
I mean, just look at Apple if you want to get a sense of they haven't all been there.
No, Apple hasn't been there. Meta hasn't been there, although I got some long exposure here today. If we want to go to the Mag 10 names, I added in a little bit of Broadcom today. The markets look like they have reasonable. It looks like they have some reasonable firm levels to work with and trade around if we're starting to see bullish breakouts. So as for me, a short put spread wrapped around 320 made a lot of sense. In Meta, that was a short put spread wrapped around about 635. That made a bit of sense. Thinking that if we are actually going to start moving to the upside, some of these unloved names that have a little bit of volatility into them, like a 31 IVR and Meta isn't nothing right now, comparatively speaking. now's the time to take that move. And if it fails over the next few days and these breakouts, ultimately don't break out, then the trades have to come off the table because then, well, assessment and feeling is wrong. I got to say, though, the volatility here this weekend, the lack of volume on the other side of the Venezuela news and what's happening in Iran right now, what is going to derail sentiment? People are either nihilistic and don't care about anything, or just, I mean, why are we in this innocent until proven market still when there's seemingly so much noise?
I mean, in my mind, this is sort of the name of the game for equities because equities are biased higher. And so if the market is not going to get an immediate tear your hair out situation, it will fiddle as the ship, I wouldn't say sinks, but certainly over the past several months appears to be anchored. Now, the Russell is making some headway here, but we're not making new highs on the S&P. We're not making new highs on the NASDAQ. We're still kind of in the range. So why aren't things falling apart? I mean, you could make the case that the evidence on the economy is good, but the markets don't like that news, and we saw it with the ISM, whereas the markets like bad news. We saw that with NFP. We got two very clear examples this week. ISM came out red hot for the service sector. Stocks dipped. NFP came out softer by a good 10K. Unemployment rate went down, but so did participation. So maybe that's a wash. And you don't get negativity. You get positivity. This is not a market that wants good news, it seems. It wants rate cuts. And maybe it's still hoping and holding out for something. We'll see with CPI next week. But as we've said a million times before, the stock market is dominated. The largest holders of U.S. equity are large and never sell. So the market, pension funds, endowments. So the market is biased in a way that, let's say, gold, which is a two-way market, isn't. Crude oil isn't. Currencies aren't. U.S. equities and equities in general are. And so I think it just needs to see some sort of a crisis whack it upside the head in order for things to really roll over.
Oh, yeah. You mentioned that there's CPI next week. Outside of CPI, I'm taking a look at the earnings calendar, and it's not exactly flush with events for, well, really any major company. Just scrolling through right now on the 12th, Sci-Fi Technologies, SIFY is your top. Oh, then there's the banks. Maybe I was wrong. We know the banks haven't.
We're going to have the banks, and I think Delta also.
Yeah, and I think that's the most important thing. So Monday is just sci-fi when you start the week. Tuesday, when you have your CPI report, you're also going to get your JP Morgan, your Bank of New York Mellon, Delta Airlines. Wednesday, you're going through and getting Bank of America, Wells Fargo, Citigroup. Thursday, TSM, Taiwan Semiconductor, Morgan Stanley, Goldman Sachs, BlackRock. BlackRock,
Friday,
not the institution that's buying all the homes. That's Blackstone, and even then, they're not even buying all the homes. And then Friday, PNC, State Street, and M&T Bancorp. So next week is all about the banks. The banks have had a really good start to this year in both XLF and KRE. Ilya, we shut down the day here. That is the final closing bell. The S&P 500 notches almost a new all-time high. We can't quite close there. 7,004 here. NASDAQ likewise finishes higher. Gold, silver on the upside. It was a pretty good week. Pretty good start to the trading here if you were long metals or equities. Bonds are still a mess. You and I will have to talk about those banks and what they may mean moving forward, as well as CPI, because you and I will be back on Sunday night for first call, 5:55 Eastern, 4:55 Central here on Tasty Live. So we're going to take a quick 49-hour, 55-minute break. And then we'll see everyone on the other side of the weekend. Ilya, hope you enjoy that Warriors game. I am going to go teach the local Girl Scout troops about money for my daughter's troop. They deserve a currency lesson after hours, right? Hey, that's what
Make
we
sure
do
you
here.
play Biggie's 10 Crack Commandments in the background. It's very educational.
I'm bringing some pounds and euros that I keep on my shelf here, so hopefully they enjoy it. All right. I hope everyone has a nice weekend. You've been watching Tasty Live.
Get tasty, free market. Come on